Good morning, everybody.
Thinking about going solar, but
news. We're going to go to literally
Warner
right
Brothers,
now.
The shares are halted. Warner Brothers Discovery shares are halted. So I don't know. It could.
I think we are here.
It's out.
I think we've been waiting for it.
Press release is out.
Press release is out.
And
let's explain to the public what's happening here.
Not the biggest secret in the world that Netflix.
Netflix is the winner.
Is the winner, and the deal's done apparently at this point, and the details will be forthcoming, and we'll see whether regulatory muster becomes a problem. I know that at least
Good morning, everybody.
Is halted at this point.
Good morning, everyone in the WhatsApp group.
Probably is at this point. All right, let's
Good
see.
morning, Kevin.
It
Good
will
morning,
be after,
Donna.
obviously, the separation of.
Good morning, Edison, Mr.
some
K,
of the
Harry.
You have two deals going on here. So you have
in the
that
YouTube
one.
chat.
Netflix is going to be buying the streaming business.
$27.75 a share. It says cash.
Time is 9:25 on the board.
And most importantly, on the regulatory side of this deal, if you're looking,
We have consumer confidence data coming out at 10 a.m.
$5.8 billion.
Okay. SPX is opening somewhere above here, above yesterday's 4 p.m. close.
Transaction.
Right. Equity value $72 billion. Total enterprise value $82.7.
It is important to mark the 4 p.m. close and the 9:30 open of yesterday
That's
at
with the debt,
684.50,
It is one of the most
685.21.
storied Warner Brothers.
Good morning,
one of the most
everybody.
storied
Let's do a quick
studios
legal disclaimer. A quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial advisor. I am not a financial advisor. I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only. Time is 9:24 and the market is opening
at $11 a share.
3 minutes.
Given where it had fallen to.
Given where it had
Right
fallen
back
to.
at previous day 9:30 open after dipping below the 4 p.m. close.
Here is if you look at the
by
Paramount transaction,
$2.50 overnight.
that would have effectively taken out a studio, right? In this case, you're not taking out a studio. That's a big part of the argument. The other argument that Netflix is effectively going to have to make,
opening
and
at
Time
this
Warner's going to have to make, or I should say
support.
Warner Brothers is going to have to make effectively, is to argue that it's not just looking at the marketplace in the context of streaming itself, but to look at it in the context of time spent online, eyeballs and the like. You're going to have to effectively include YouTube viewing and Amazon Prime and so many others, so that you're not just looking at the paid streaming business. What you looking at there?
I'm looking at the cash component is $23.25. $23.25, $4.50 in the shares of Netflix common stock. That comes up to 27.75. There's collars on the shares. There's this is going to be a complex.
It's going to be a complex deal. And by the way, this is going to be in the regulatory mix for a long time.
It could close in a year and a half. That's what I think they would hope that it's able to close.
Mm-hmm.
Does Zaslav run Warner Brothers, the studio,
I'm trying to look through this to find
Max?
out. What I also don't know is, and look, and this is where the next piece of this comes. Does Paramount try to go hostile? Is there some other element of this that could happen? I don't know. What do you think regulators do? You know, Jason Kylar, who runs, or ran, I should say, Hulu for a very long time, came out last night. I don't know if you saw the quote. He said, if I was tasked with doing this, I cannot think of a more effective way to reduce competition in Hollywood than selling WBD to Netflix. So there's going to be a lot of consternation in Hollywood. By the way, there would have been consternation whether it was sold to Paramount or to Netflix, but clearly there's going to be lots of disagreement about, who should be the owner, effectively, of this asset. But it does appear that Netflix is now going to be the owner.
What a crazy pre-market.
Going to attempt to be the owner, and that Warner Brothers Discovery's board
back up to where they dropped off from. What a crazy pre-market.
And to take that
They gave all the bears hope. They
Hey guys, it's
crapped
probably
on
worth taking a
all
look
the
at shares of
fucking cause
Netflix
hope.
just longer term
right
on
before
this
market
because
open,
it's a market
we
cap
are
of about
opening
$438
right
billion.
where we dropped off
It's the
from.
media company that has been the darling of the street. It's off its 52-week high, which was $134.12. 103.22 is where it closed yesterday. But you're still talking about, if you look over the last 5 years or even the history of the stock, that was an all-time high when it was sitting at those levels. It has done very well, particularly relative to some of the other media companies. And you wonder what wrapping this in.
It's at the morning likes this week coming. Thank you so much.
$2
30 of you guys that have already hit the thumbs up as you came in.
from the spin-off.
Good morning,
of the
Jerry.
linear
Good morning,
business. So
Jeff.
if you want to,
good morning, Antonio. Good morning, DSD. Harry, Chris, love basketball and captain.
To $30.
Oh, Jeff wants to win.
This is what
you are
David
actually
said.
Bro, I thought you were a bot. I'm sorry. Because I saw you came in one time out of 7 days and said something, but yeah.
Arguably a $30 a deal share.
If
you believe that the spinoff ultimately captures
the $2.
That $2.
Yeah, I just
now,
didn't like the
some
fact
of the
that
arbitrageurs are going to start to do a time value of money on the Netflix portion of this transaction.
How long
opening and filling the gap immediately.
How nasty can it get? Because it got nasty already. The letter. Where they actually, they didn't. I don't think they mentioned Zaslav by name, but they said that management.
Look, just in fairness, they sent a letter just literally 24 hours ago to the board. They said that Netflix's dominance in streaming and Comcast, which is the parent company of this network, which had been bidding for it as well as presence as a leading broadband and MVP player, present unique and serious antitrust concerns that guarantee a long and extensive review process and imperil closing either deal. Paramount is the easier path, and its outcome is assured, they were arguing. And then we've discussed this idea that the Trump administration was, closer to or willing to do this. Let's get Faber on the phone because he's calling in right now. Hey, David?
Yeah, hey, Andrew.
Tell us what you know.
Well, you guys obviously have the terms, I guess, at this point. And listen, I mean, the price itself, you have to just step back for a second and consider. Because 27.75,
SPX is blowing up. This is the new high.
And then the
this
rest
is
in stock that's going to be collared is quite
in
a
the bigger
number.
cycle
and, remember,
and in the smaller cycle.
The studio and streaming business. So in
IWM is at all-time highs.
The split. There will
be
a remaining co
SPY is running towards
called Global Networks, made up of all the linear cable networks of Warner Brothers Discovery. That will also have a value. Maybe it's $2.50. Maybe it's as much as $4.
They're really going
Put it
towards
all together, and you do end up with a value of at least, let's call it, over $30 a share. And don't forget, guys, for a stock that was trading at about 11 or $12
our bulls are in control at morning open.
It's an enormous premium that Netflix is willing to pay here. Much of it, as we said yesterday, as I reported, 85% of it in cash. And as you were just talking, though,
$1.50 range up candle
of course,
at
as well,
9:30
is the question of antitrust and whether, in fact, this is going to be something
$2
that can
candle
get past the
at
regulators
9:30.
and, of course, Donald Trump. As well, given you are putting together the #1 and #4 streaming
volume crazy bullish
in the world. And that will continue to be a key question. There is a $5.8 billion reverse break fee, meaning that if Netflix is unable to get to the finish line, $5.8 billion will
gap
go
up here
to
at
Warner Brothers
6:30.
Discovery.
Let's see if
many
we really
shareholders will argue that's not enough to compensate for what could be a very long
SPY
process.
and IWM.
That could
at
still
all-time highs
end in them not
as
owning
well.
the company. We just don't know. We'll have to wait and see. But a stunning outcome. Netflix clearly showing that it was very much determined to own this business. And again, guys,
no confirmation rejection might be possible with IWM.
Netflix pursuing this so aggressively, you wonder what of its shareholders will question whether, in fact, what it was seeing that made it want to go down this road, given its multiple to earnings, has been the envy of the media business for many years.
Time is 9:35.
Putting that multiple at risk.
9:30 floor.
A couple of things.
9:30
I was
roof.
talking to folks around this transaction yesterday.
Cycle trading at the roof.
We've heard, and there's been reporting that Ted Sarandis
Still
had been
bullish.
down to see the president in the White House.
No cycle confirmation.
That they felt
to go lower at the minimum.
Some assurance that they could actually move ahead with this deal. In part, by the way, my understanding is because CNN and the linear channels are not part of this, and that potentially that might allow.
That is insane bullish.
This administration might
on SPY and QQQ.
Because it's not
I think it's catching up to IWM like late as shit, but like what the fuck? Don't even like.
And whether you think that the real impetus for this is that actually so much of the library programming.
Look, yesterday, 9:30 was the HOD, 225 was the low of the day, and then they flipped it crazy midday. Wind direction was south, and then the 225 after they showed the real direction, and then everybody chased, and then everybody left. They boomed it up, and then flipped it.
I think that's all true.
225.
I mean, I think you're reporting
that is
on
insane.
Sarandis and the president.
That is a intraday wind direction forming, and then changing it, and then figuring out the majority. And then using the end of the 3/3 again to go booming up.
There had been a perception, of course, that Paramount had a much easier path.
This is the 3/3 bullish cycle somewhere. This thing could go higher. There's no confirmation.
And secondly, but not less important, that they had a very strong relationship, we believe, Larry Ellison, with the president, and therefore would have an easier go on the antitrust front. When it comes to what Netflix gets here, you're absolutely right. The
creating with the divergence at the roof, it is dangerous to think about, or it is dangerous for medium-term, long-term puts shorts from the roof, even though if they reject here because there's a divergence at the roof. That does not mean they can't reject for 40 minutes. That doesn't mean they can't reject for 2 hours. That doesn't mean they can't create cycles and extend. That's what happened yesterday, right? There was a divergence at the floor, and then they extended it, hovered for 3 hours, and then dropped it and broke the floor, and then faked out everybody into today too. So do realize that there's a divergence at the roof, meaning there's
real growth for the company.
Probability and chances there's a risk for it, medium and long-term puts. So in my eyes, if I was to play this from the top, I would be leaving very fast because that's just how my mental brain works. I have certain rules and things and probability-based things and environments that tells me that, you know, there's certain things going on other than candles just rejecting and blowing up. So is a cycle being created at the roof. Time is 9:35 with the divergence at the roof. We will now draw.
Why didn't Paramount buy it, Joe? Like when they
the roof in the wind direction.
David Ellison and Larry Ellison. Why didn't they just step up and try to buy this thing when it was $8?
And who's going to pick over the
I think it speaks to the changes.
Assets.
This holiday, give the ungiftable. Unbox a new rhythm.
Turn this shit off.
Yeah, that's.
Morning cycle being created. 9:35 rejecting to 9:35 on QQQ. 9:30 rejecting to 9:35 on SPY. With no confirmation, rejection, no confirmation, long anymore. Just market is right in the middle, deciding to cycle, to confirm, to trap, to fake out, to do something. Roof is testing on QQQ, breaking the roof actually into 940 here. And new roof at 940, no confirmation, rejection on QQQ. Wind direction is north. Still, algo range is being used. $9.39. I can't draw this algo range. I could draw this on SPY, but I'm just actually there's an algo range here at 9:35. Different algo ranges happening on QQQ and SPY, basically. With the divergence at the roof, the power of the indexes are different. That means IWM going lower, QQQ flying right now. This bitch is flying right now. NVIDIA. Tesla is up 0.65%, 7. Let's see. 940 HOD. MACD is bullish, but the cycle is being created at the roof, so there's a little bit of risk. It's basically chasing here. Unless the HOD breaks, and then that maybe gives safety for the bulls for maybe 1 or 2 minutes. But this is a morning hope at the roof now. Hope at the middle. Alright, rejection is trying with the divergence at the roof. Let's hit the like button as we come in, everybody. Thank you very, very much. If this candle flips, I'm gonna go in. Down. I'm going in on SPX 4.5K. I'm in 6875 SPX puts. I went in as soon as QQQ flipped red. Time is 9:40. We got data coming at 10 a.m. $9.40 is cycling, trying to show a bounce on SPY, more stronger than QQQ. $9.40 rejected, $9.40 bounce showing. One of them is fake. Either this bounce or either this rejection is fake or either this bounce is fake at $9.40, and I'm pretty sure this bounce is fake. With this divergence at the roof, they're doing this shit. QQQ trying to dump now. Showing super bearish on QQQ. Let's see if this breaks the fucking floor. Floor breaking. It's not even 10 a.m. and they're doing this shit. LOD broke on SPY and QQQ. Divergence is cleared. Wind direction is south. They want to go south. That could be a LOD. Floor bounce as well though. 942. This is 940 LOD. $940 HOD LOD. Fighting crazy. Bouncing off the floor, trying. Right after they broke the LOD, spiked it. LOD broke and bouncing for now. It's moving crazy fast. I'm waiting for 10 a.m. data. I might leave a couple of minutes before 2, but I'm just waiting here. I think they're faking out still. This is bulls and bears trap though. Wind direction is showing south. There is no confirmation long. They're just spiking up with IWM. 50-50. There's a lot of bears that probably went in on that LOD break as well. And there's a lot of people trying long here as well. No confirmation, nothing. Long or short. And they're about to grind one side like fucking nothing for a little bit. I don't even know if the bears or the bulls have the edge right here. They're just fighting like for with their lives. They're fighting for like crazy. morning cycle is super fast, super trappy, super powerful. They hover here until 9:50, 9:55, 9:59, and then stay at the floor. They could boom this shit right before 10. They could do this. They could do this now, or I thought they were gonna go lower and lower and lower into 9:50 at the minimum, but they're not. It's chopping crazy now. This entire move gonna be used for 10 a.m. or some shit, but it's getting chopped as fuck. The crazy thing is, I literally joined as soon as QQQ candle switched red. SPY was still green. I didn't leave on LOD, and they're fucking bouncing it that fast. Like, with the this is literally divergence play. Nobody knows if it's really dangerous for calls. No one knows if it's still dangerous for shorts because of the divergence at the roof, and they are. Trying to blow. It's weird as shit. My puts lost $100 in value as we're grinding up like this. It's weird. I joined fucking here. And they're waiting and waiting, so. And now. It's turning more bullish than not on the contracts itself as well. All these bears are stuck into 10. All these bulls are not really stuck into 10. 10 minutes. 940 bounce to 950. We are in the algo range. Holy crap. This is insane. There's an algo range at 940 rejection. There's an algo range at 940 bounce. It's about to get nasty. It's a fucking triple algo range on QQQ. It's about to get nasty for someone into data, I think. It's about to get nasty as fuck for somebody into data. 10 a.m. Oh my god. Look at that. Fucking 940 rejection and 940 bounce. Like, doesn't even go to 945. Shit is this? It's actually fucking crazy, man. Perfect fucking bear trap. Like, what the hell? What the shit is this? Oh my gosh. 1, 2, 3, 4, 5 minutes. The count says 940 to 940. Like, wow. This shit is before data too. I really thought we were gonna go a little bit lower and lower into 950 at the minimum, and then bear trap maybe into data, but like it's literally trapping everyone right now before data. This shit is so insane. What the fuck is even making SPY fly right now? Does anybody know what is making SPY fly right now? broke the HOD? Some fucking bullshit, I don't know. Tesla? Tesla's the only thing that's doing this weird sort of bounce. Like IWM's not even bouncing that much. IWM actually squeezing, trying for 1-2 minutes only. It's Tesla. 940 rejection. 940 bounce. It's fucking Tesla. Tesla and Meta and Apple and some other bullshit tricking everything out. HOD broke into 950. There's no confirmation lower anymore. There is a new HOD. There's a divergence at the roof actually. What had the HOD earlier? QQQ. What has the HOD now? SPY. Bullshit candle coming. Get ready. Data candle is here in 9 minutes and they're about to fuck somebody here. Big time. And sorry folks, but that's a bull trap. This shit is fucking insane. He's so good. Probably is Netflix as well, but it's also Tesla as well. It's doing the same fucking shit. Let's go look at Netflix. Someone's saying, could it be Netflix? It most likely is, but it's a lot of shit doing the same exact pattern. I wouldn't say this. Look at Tesla exactly. Okay, maybe it's everything. Maybe you are right. Maybe it is everything. Okay, now this is a fucking bear trap. This has to be. This has to be showing. Fuck is this popcorn on IWM? They're doing this shit before 10 a.m. data. Divergences trying to clear into the next minute. Divergence has cleared. And that is insane how they do this shit on QQQ too. Netflix frozen for me for some reason. Tesla rejecting. IWM panicking. This is 9:55 now. They're booming this shit. What has fucking direction? Everything's like insane mode. 9:55. Divergence is cleared. At the floor. At the roof. Fucking nuking crazy. That's a $4. Okay, that's a $3 rib. Holy shit. That is $1.50 on SPY. Holy, 10 a.m. data is here in 4 minutes now. I'm scared they're about to nuke this shit. Now I'm stuck into data. 6875 SPX. Nvidia. It's showing a bear trap from 940 to 955, but I'm saying this data candle really could throw shit off. I really thought it was gonna go lower and then bear trap people into data candle, but yeah, it is completely the opposite way. They bear trap people after the divergence spike clear and then fucking bounce it crazy. Like I was up maybe 1K here, maybe like $800. I don't even know. I did not leave because I was getting greedy as shit. Morning cycle is greed. And now I'm in a different cycle. I gotta deduct a different way, in a different smart way, in a different safe way. But they're doing this shit. Dude, this is insane. They're forming a bear flag and they're breaking it down on NVIDIA. They're forming a wedge and they're going from the top. Tesla's breaking down the wedge. They're dumping. This is a fucking 10 a.m. data dump from 9:55 rejection possible. Huge possible. Or they trap everybody and then they boom it up, right? They could do it by 9:55, go lower into 9:59, and then 9:59, 10 a.m. boom up somehow into 10:05. That is possible. But this is now 9:55 rejection in 2. 10 is here in 9 seconds. 9:57. Let's see, let's do a poll. Before the candles come, is this shit gonna green nuke or is this shit gonna red nuke? Don said they're gonna nuke it to Pluto. Where is Pluto? Down south or up north? Depend on which tribe you ask, where is Pluto? They could be living in the northern hemisphere, they could be living in the southern hemisphere. So let's do a poll. Everyone do the poll before 10 a.m. data. Do it in chat, man. YouTube chat. Manuel says no dump. This is higher. Okay. Adam says red nuke. In my opinion, for sure. Ray says sell the news event. What the fuck does that mean? Like pump and then go later? Like what does that mean? Pump and then go sell into the news? Like what does that mean? Green nuke. Scott says fly. Sim D says drop. Red Don says north. Alfonso says okay. So we have like 5 or 6 north. 3 or 4 south. More north. 7. This is 10 a.m. No reaction off of 10 so far. 9:55 bounced into 10 trying. Different cycle instead of 9:59. Just barely any confirmation rejection. This is still bull cycle. Just shape looking like it could play out, but let's see. This is 10 a.m. so decision about to be made right now. They are not making a decision by doing nothing here. Weird candle coming. Up, down, up, down, up, down. And then one big candle. And then probably fake that shit. And then something. North, bro. Aside says lower. Mike says north. Then down. Okay. West says north. That's a boom up north. Or let's see if it holds. Spike candle into 10. IWM nuking. Nvidia, Tesla dropping. All things going violent. Simon said, yes, bookmap shows order at 6898. Well, you don't want to fully believe on bookmap 24/7. But yeah, absolutely. It could be used as a magnet sometimes, how GEX is. Adam says, Jeff says up. Big says SPX 6,900 today. Okay, so what Simon D is saying as well. Somewhere up there is where all the call wall, the magnet is for upside. UU says, I think it will blow up since the Fed's printed more money and added more money to the banks. That was 2 days ago, though. Tesla. Everything crazy. Not really doing anything off of 10. There's no cycles happening here as well, too. We have the hell's wrong with my chart? Opening bell. We are bullishly chopping up, looking like though, without anything on. Some insane way. HOD showing on SPY. I'm down 1K on this shit. It is. My Tesla is cooking though too. I'm not gonna lie, into next week. They're bumping this shit higher and then hovering. Oh my god. Wow. Bulls are showing big time. Where they fucking going? $6.89, people are saying. With the call wall. $6.89. Holy shit. That is all-time highs. That is literally all-time highs. 6,900. This is 10:05 HOD. Data is going crazy bullish since data. Shit is definitely pumping into news. After news as well. At the minimum 5-minute pump. At the minimum 5-minute fucking pump. Man, into 10:05. No confirmation rejection here. I'm adding 3 SPX puts right here. No confirmation rejection here. Risk is kind of crazy. We are $3 away from 6. Actually, no, we're $13 away from 6,900. This shit could rip up $1.50 easily. MACD is crazy bullish right now too. The fuck is this rip up? IWM rip up. IWM actually on meth. Alright, gap filled. That is literally gap filled. It did not do it at market open. They're using IWM to blow this shit up right now. Let's see where this goes to. Time is 10:05 here. Core inflation watched by Fed hit 2.8%, delayed September data, lower than expected, it says. Lower than expected. Wow. God damn. Every candle. It's like melting up. $2.70 from the floor. Holy fuck. Man, SPX is literally there now. 6892. Insane push. Look at that insane fucking push. IWM gap filled and flew. Let's see where this bitch goes. Time is 10:10 here. Now, gone higher into 10:10 on IWM. It's 10 a.m. push into 10:10 at the minimum. This shit is so crazy, bro. What the fuck? I could just fucking data fucking push. This fucking data fucking push. Spiking crazy. New HOD. So this is a methed up. Alright. Still could pull back and go higher, yes, but let's see what happens with this. $9.40 LOD. IWM rejecting.
No matter what's on your plate.
Look at that fucking pump though. That is a pump. Into data, using data.
26. Let's see what we get. Opening bell here in the CNBC Real-Time Exchange. On the big board, it's Brad Jacobs, author of How to Make a Few More $1 Billion, celebrating his launch. You know him very well.
Yeah, that, by the way, that is a great book. It's a sequel to How to Make a Few $1 Billion. And this guy has a cult-like following for all that. He's done more than 500 acquisitions, and he shares a lot of secrets of the trade in this book about how he built all these companies and sort of did 1 to 2 acquisitions a year.
At the NASDAQ, it's McKinley Acquisition Corp doing the honors, as we're within 30 points of 6,900. Mike, you've been talking about
this is insane fighting on Tesla too. I've never seen it like that coiled.
5% from the 5% pullback. Of course, that doesn't get you back to the highs because of how the math works. You're coming off a smaller.
Well, yeah, that, by the way, that is a great book. It's a sequel to How to Make a Few $1 Billion. And this guy has a cult-like following for all that. He's done more than 500 acquisitions, and he shares a lot of secrets of the trade in this book about how he built all these companies and sort of did 1 to 2 acquisitions a year.
We got regulation to worry about and approvals, not just here in the States, but elsewhere. Let's bring in Eamon Javers. David, stick around. Eamon, as for the president, whether he wants to disrupt this deal, and we know about his ties to Ellison's father, talk a bit about that, too.
Yeah, Carl, we're getting some news here. Our first reaction now from the administration. I was just in contact moments ago with a senior administration official who tells me that the administration's view of this deal can be characterized as heavy skepticism. So no word from the president yet. We'll watch Truth Social, but that word from a senior administration official to me just moments ago saying they view this deal with heavy skepticism. I think that's what we could have expected from this deal. You know, the general view at the White House of Netflix is, you know, sort of it's an Obama entity because of that deal that they did with the Obama family. They wanted the Ellisons to be involved here. That's not contemplated under the current deal structure. So I think we can start to expect some potential opposition from the administration. How that shakes out, though, is not necessarily clear. Let me run through real quick, Carl, the antitrust process here, and you'll just see why the deck is a little bit stacked in favor of the administration here. The first thing that has to happen is what they call an HSR filing. That means that the entities that are engaged in this deal have to file a Hart-Scott-Rodino filing laying out the deal to the Department of Justice. That is expected to be the very first sort of piece of paper here. And then there's a process that has to run. There's a 30-day initial review to get to a decision about what they call extended review. It's almost guaranteed in this case that you would have an extended review by the Department of Justice. So to slow this deal down, what sort of experts in Washington are saying is all the Trump administration really has to do is sit on its hands as it evaluates that and conducts the extended review, gets documents, gets internal information, market share, all of that will be gathered over the course of maybe a year.
Bro, the last time you were here was October 17th,
you probably
were on the other channel.
Internally at the Department of Justice. Externally, you know, this is going to be a massive clash of clans. It's going to be a big political battle between all of the different sides here. You've got traditional old Hollywood that doesn't like this deal. You've got the Ellisons out there deciding what they want to do. You've got the Trump administration deciding how they want to play it. But you've also got actors. You've got state attorney generals who are going to look at this from a consumer perspective. So there's a lot of clans out there. And right now, everybody in Washington is trying to figure out who is on what side of that line. How do we build coalitions with the other people that we might not see eye to eye with ideologically who end up on our side of the line to fight this thing. So this is going to be a long and intense battle, but the first thing you're going to see is that HSR filing.
Eamon, when you were saying the heavy
it's fucking
skepticism,
cooking
I mean, I'm sure it's not lost on the administration that the co-founder of Netflix, Reed Hastings, has been very anti-Trump, has put a lot of money where his mouth is, most recently backed Governor Newsom in the redistricting to redraw the House maps and in the sort of Stop Trump movement. That has to play a role, even if it's not supposed to.
Yeah, and you just heard Treasury Secretary Bessent, you know, on stage with our Andrew Ross Sorkin at the Deal Book Conference, invoked the Netflix deal with the Obamas on stage to sort of mock the sort of politicization of some of these networks, right? So Netflix is not favorably viewed within this administration. And as you say, I'm now being told by a senior administration official, the first blush reaction that we are getting is heavy skepticism. So how does that materialize? I think in the Department of Justice antitrust process. But I think if President Trump, you know, wants to flex here, and he often does, there are a whole host of other elements of executive power that he could bring to bear in a way that we just typically wouldn't see in a normal administration. To put quote marks around the word normal there. This president, you know, is a maximalist in terms of his interpretation of executive power. And I think
the question,
very close to it at least.
The question, David, would be whether or not that scenario clouds this view in corporate boardrooms that we somehow have entered a new reign of M&A nirvana where deals are allowed. I mean, I guess in this case, though, unless some of your political past runs afoul of certain people in the White House.
Confirmation rejection.
Yeah, listen, Carl, when we've been, you know, as long as this auction's been going on, we've been having the conversation at the desk
no matter if my heart
how different this
here,
is, because it's really a one man and conceivably what he wants in particular. And that's no different here. I think the things that were raised.
Yeah, no matter what, I gotta say that the market's not going until it goes. So you know, it's literally not best to say anything about the market until the market does something. And the market, all it's doing is grinding up every minute. 3-minute. This is from yesterday, 16 hours ago, from Morgan Stanley's someone. He said, uncertainty will lead to medium-term
Hewlett Packard Enterprise missing revenue expectations, and Ulta topping earnings and revenue estimates. Meantime, Morgan Stanley recently raised its 12-month S&P target to 7,800. So as we mentioned before, Mike is feeling bullish. What is going to carry us to 7,800?
It's really a continuation of this year's story. I mean, we had a view coming into the year that they were going to probably do the growth negative policy stuff first, and it turned into sort of kitchen sinking it. And that all happened faster and more dramatically than even we predicted. So that when they flipped the switch in April, I mean, now we're looking at this just reversion of all of these revisions that got so negative. And now, I mean, to be honest, I mean, some of the stuff they've done has been even more constructive. I mean, the Big Beautiful Bill turns out to be much bigger than we thought, particularly from a CapEx incentive standpoint. There's a real benefit to the consumer in the first half of next year in terms of tax cuts and tax benefits from the SALT deductions increasing, as well as the tax on tips, et cetera.
Hope, to be
then
honest.
you have the story with the
but
Fed
it's possible.
now kind of turbocharging this story.
Right now
so you've already had the earnings revisions. The Fed's now is going to be tailwind at your back. And this is the broadening out story that I've kind of referred to several times on the show already. So this is where I think investors have to make a choice. There's a fork in the road now, as Yogi Berra would say, take it. Okay, we're going to take the fork towards the broadening out. And that would be areas like consumer discretionary, some of the financials that haven't performed. Some of the financials have done really well, but there's parts of the financial sector that haven't done well. Transports, you mentioned that. That's an area that's really suffered. Some of the commodity patch hasn't done particularly well. Consumer goods over services. So there are plenty of things in the market that have not worked yet, that don't have high multiples, where the earnings are going to surprise on the upside. You get multiple expansion and earnings growth.
So you see the benefits of the tax bill. Any of that offset by increased premiums for healthcare with the roll-off of these subsidies? Because that's a big number. But then you might say, hey, listen, that's a lower earning consumer, so maybe it's not that big of an impact on the broader economy.
That's right, and the immigration restriction, because that clearly was a funnel for consumer spending, but once again, lower end spending. So it's a good trade-off. The biggest beneficiary of the bill is the middle income cohort, and they have a high propensity to spend in areas that we're talking about.
Look at that big boom on SPX. Big boom. No dead cat bounce. This shit is a motherfucking bounce. And a fucking big one. Showing at least for now into today, bro. All-time highs we are literally at. This shit is a whole shaped V. It's not even the end here. It's the whole shaped V. It's absolutely crazy. Oh my god, it's absolutely insane how the market drops and pops like crazy. Right, I said in the pre-market we're opening somewhere here, but like we popped up so crazy. Even way higher. Way fucking higher. This is the 3/3 we're playing with, and we're pushing higher and higher and higher and higher and higher in the 3/3. Market is saying, nuts today. These candles are just giving hope that it goes to VWAP, but it literally just could be eat. Somehow grind up with these fucking, little take profit candles coming. It could be possible, but hope that it goes to VWAP and it's literally just stair-stepping up. Every fucking goddamn red stair-stepping up to a win. 10, 20. Rejection trying. No confirmation rejection. These people might be leaving in one or two red candles anyway, and then bear trap them and then let the cycle create. I have no idea. But going higher and higher and higher. At some point, 3/3 gonna kick in, but also yes, there is the call wall that people are saying at 6,900, but that doesn't mean it has to reach for right now. Well, we'll see. Could. Yeah, it could. God damn. Tesla is the most terrifying thing though, dude. This shit is cooking my puts into next Friday. This thing is doing work into. It's like it is going up. But I think calls did good these 3 days. Today though, tiny ass spike up and they're playing in the range and they're killing all the puts anyway. This is the insane chop at the top, deciding what to do. Nvidia is touching the horizontal support that we were playing with yesterday. IWM went higher into 1015. 1015 went lower into 1020. SPY and QQQ started rejecting at 1020. 1, 2, 3 red candles, and they're now letting the thing bounce to cycle create. Smart money doesn't do shit without cycle confirmation. They do not care. They don't even want to go higher without a pullback too. They don't care about none of that. They care about what they care about, and they wait and wait and wait and wait and wait and wait and wait. So, cycle being created. And the cycle looks so goddamn bullish already. Lightning fast. Right back to the top. Lightning fast. Right back to the fucking top. QQQ, SPY, MACD trying to be bearish, but we're testing the roof. We're cycling at the roof. Everything's cycling. This is, if it hovers at the roof for 20, 40 minutes or an hour, I mean, it's full control, and they're going to test the roof again and then just delete the puts, but it's the first shit cycle confirmation trying to confirm for something here. It's actually trying to do something, and that trying to do something looks not that great. I'll go ranging as well at the roof, looks like. It's so structured. This shit is so structured, it's scary as hell. That's what I feel right now. It's so structured, it feels scary as fuck. Like, what if they do somehow, and then it's so structured. It's terrifying. This goddamn algo range bouncing literally at 1020. Not even trying. But there's a lot of hope going on here as well too. Because they have news. Even if they create a cycle. Shit. So much statistical shit going on. Seven points away. 5-minute bullish. 2 hour going back bullish. last week. They just let people chop, and then nobody thought they were winning for a week, and then now, right at the fucking top. Man, that is 400 points, 500 points now. Oh my lord. That is turning into a 400, 500 point rally. From a 350, 400 point rally. It's the most.
Allianz Chief Economic Advisor, former PIMCO CEO Mohamed El-Erian. It's good to have you take part in our conversation. And I want to be clear, just because there's a story written that says there's some bond investors who are concerned about Kevin Hassett being the next Fed chair, let's not make it seem like bond investors have lined up down the block to say we don't want this guy to be in this role. I get that there are some, according to the sources cited in this article, but should the bond market be concerned at all?
So first of all, I don't know who these bond investors are, but they haven't expressed that view in the marketplace. I think
there's some sort of
Steve was absolutely right. You don't see it in the steepening of the curve. You don't see it in the break-evens. You don't see it in how the market has priced cuts after April next year. You simply don't see it. You need a magnifying glass to find it. Where there has been a move, it has been in yield, but I suspect that has more to do with Japan than with who's going to replace the Fed. So I think it's important that they may talk.
I mean, let's not lie. Even if it didn't go to 6,900, like that is so goddamn close. It's basically getting there. You know what I mean? It's there, and then probably later it could go there. But in my mind, even if it doesn't go there, that is technically going there. It's so damn close, like 5, 6 points on SPX. Like these whales don't give a damn. They'll probably leave with their billions. They don't give a fuck. They made their money anyway. You know what I mean? Why am I saying this? 1/3, 2/3, 3/3.
For markets is that every single one.
You know what I mean? Even if smart money hedge fund didn't play from 944 to all the way to the roof, and they got in at 10. They played this shit from year to year with like 100 million or something. Probably fucking left. I'm just saying that hypothetically speaking, based on cycle. I'm just saying, dude.
Dan Greenhouse,
that was
who
a
was
crazy
on earlier, and you may
can't
have
lie.
heard
That is very
comments that
close.
he had made, essentially said people are making way too much of this idea that Hassett will simply do President Trump's bidding,
basically
that
5
every
points off.
president has a political relationship of some sort with the chairman of the Federal Reserve. Some have come out of other administrations too. So all of you are making a way too big a deal about essentially what is one vote.
So let's see.
And I think that's correct. It is a political appointment, and I'm glad he went through the prior chairs, all of whom had had some job in the administration. The second issue is that he's got to bring the committee along with him.
Guys, let's hit the thumbs up video on the video, and if you are a new watcher, please hit the subscribe button.
They're going to need time to impose authority. What they desperately need to do is give a forward-looking, unifying vision of where this economy is going, which is what this Fed lacks. Otherwise, these divisions that are quite deep are going to last for a long time.
What do you think happens next week?
10:30.
I think they cut. I mean, the market expectation is 91%. I think they should cut. So hopefully they will do what the market expects them to do, and they should do what the market expects them to do.
SPX put to call ratio.
You think they'll continue to cut, or you think it'll be more of a hawkish cut?
I'm one of them.
I think it'll be more of a hawkish cut. I think they're going to frame it or package it in the context of this data is so confusing, it's not even complete, we have to wait and see. And that comes from a Fed that's excessively data dependent. If they were to look forward, and they see what's going on the supply side, I think they would signal a less hawkish cut. But I think this Fed, which is very backward-looking, will signal a hawkish cut.
Introducing Lululemon Daydrift. A polished look meets a pull-on waistband.
Bear trap tried. Candles are coming in, spiking fast. Like, it's just. Holy fuck. Can't even go lower than this shit. That is so fucking sad. IWM bouncing up crazy. Whether this shit is real, I have no idea, but this honestly feels like a theta burn, and this is a hope kill, and this is last chance to maybe VWAP. Oh yeah, VWAP fucked. All these bears trapped. That 10 AM spike level maybe, maybe, but like, yeah, what the shit. Showing higher off of 1030 too. Go higher or use that or what? 1035 is here in 2 minutes. This is UU says news moving the market today. So you think bullishly moving, right? Clearly for now. The idea. Holy fucking burn. I mean, it really is a hope to even think about a 20-point drop, but like, holy fuck, like burn, 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 burn. Yeah, burn, burn, burn. IWM at all-time high territories. This shit is fucking nuts. Man, this shit is fucked. Oh my god. It's insane new all-time. What a fucking artificially manufactured fucking trap too, bro. What the fuck is this shit? Damn. Wind direction showing full on north right now. IWM fucking leading. It's fucking leading. Tesla is still hovering and chopping and killing all bears and hovering and popping and whatever. Insane. IWM. 1 minute gap. New HOD on SPY. There's no confirmation rejection. They just broke the roof and made a new roof. And made it look super bullish on that push. And it is. It ain't bearish at least. It's fucking deleting everything right now. Showing. Fucking absolutely. Fucking grinding, man. IWM is not helping. IWM is actually trying to fly. And it is flying. Damn, that's crazy.
$15 billion.
I'm holding my shit too on SPX. I can't let it go at this fucking rate.
The overall market is
so
flat today. Some
high.
momentum names staging a strong comeback.
I don't give a fuck. I'm not letting it go at this rate. I got to pull back at least a VWAP.
So are investors once again willing to take on riskier parts of the markets? Joining me now is Paulson Perspectives author Jim Paulson and Ariel Investments Vice Chairman Charlie Babrinskoy. Guys, welcome. Jim, you're concerned about economic growth here. What's the impact potentially in the markets?
Yeah, I think that the economy is fairly weak, aggregately across the array of different data. Real GDP year on year is 2%, John, and you've got employment at 0.8%. Retail sales only up 1.3.
They don't fucking dump
industrial production's up 0.9. Those are really unacceptably weak levels. And I think that what bothers me is I think it's continuing to get weaker.
We're 5 points away from 6,900 again.
The good side of all of this is I think that we're not just going to have one 25 basis point cut by the Fed, but I think the economy is going to slow sufficiently that the full focus of policy officials is going to be trying to avoid recession and restart or maintain this recovery. And I think they're going to bring a lot more policy juice. And I think it's going to continue maybe through the mid-year. And this will be the first time we've had a major full-on policy support in this entire bull market. And I think we're going to like the results.
This is fucking bullshit.
Oh, okay. Charlie, do you agree? And what's going to be the impact of you expect governments around the world to issue debt in the coming year?
And longer than that, John, I think we're going to have deficits around the world as countries,
very
much including the U.S., struggle with deficits, struggle with aging populations, demands for more government services. And I think we're going to see deficits, and I think those are going to lead to inflation. Ultimately, governments print money to finance the bonds that they have to issue, and we're going to be seeing that. And so I also call the economy
my
not quite
7.5 got fucking drained, dude. I don't know.
1-2% kind of growth is a little less than perfect, but it's not anemic. And so I think we're going to see the Fed worry about inflation, and that's going to mean that they don't cut too much.
This is fucking crazy. Literally just news taking over, but that is just insane, bro. No fucking fundamentals, just news pump. FOMC, they're talking about getting braced for it. Shit. Squeeze on Tesla, fucking burn on SPX. Just drop $4, fuck. Go fucking fly, man.
This is
this shit. Got the video. Tesla flying. That is fucking burning. Tesla bears 0 DT, especially. You gotta imagine that shit is completely.
Interesting. Kevin Hanks, live at the CBOE for our pre-bell playbook, is with us. Of course, we're waiting on the PCE at 10 a.m. Let's first just start big picture. How are you feeling this Friday morning?
Bull trap. I think that we're going to go lower here.
Good morning, Nicole. Yeah, we seem to be cruising into the end of the week with big events on the horizon. The Fed meeting that will be obviously the announcement. Do they cut? Will there be dissents? Then Jerome Powell's press conference. Then we get the summary of economic projections that we get 4 times a year. It could be a volatile week next week for the markets as we digest a lot of information for the Fed, not only on interest rates right now, but how they see going forward. If they cut in December, which the odds, the probabilities are extremely high that they're going to do that, when's the next cut? Right? When is Jerome Powell going to be hawkish, despite the labor market data that seems to be slowing? Inflation seems to be relatively under control. So how does Jerome Powell navigate going forward? That'll be key. So I think next week with that and the earnings that we have coming out next week, it's going to be a big one for the markets, Nicole.
You guys ever seen the
band? Yeah, it'll be really interesting. When do they actually release the name? When does President Trump release the name of who he wants to lead the Fed? The timing could be, you know, maybe they're waiting on purpose to see what happens in this meeting. They said maybe by Christmas, but maybe it'll be in January around the next meeting, maybe to pressure. Who knows? I don't know how it works, but that's another factor I'm waiting on as well.
The longer it takes to go lower,
the likelihood of a Fed cut next week is pretty high. So it looks like a winning week for stocks. We're up the third week in 4, right?
More bears.
Exactly right. I mean, the overall news flow has been good. The earnings flow has been pretty solid. Now you've got some resolution of the Netflix Warner Brothers deal, although that could stretch out for as much as 18 months. So people should be pretty patient about that. It's not going to be not going to be over anytime soon. But next week we'll get more data. We'll get some big earnings. Earnings are starting to slow as we get into December, as we get to the end of the quarter. But they'll still be big names. I see
possible, in my opinion. No dump yet. Can't say that. That's straight up hoping.
I see.
Somebody was like, Deep South coming at 10.
Adobe, Oracle, Synopsys that just had that deal with NVIDIA. That'll be a big one. And then Costco and Lululemon, as well as Broadcom on Thursday. Those will be big releases. But, you know, we're hoping, Nicole, that we start to get more data. I think they're going to put out the delayed JOLTS number next week, but we need data. You know, this market is screaming for economic data so we can make decisions. So we all want the economic data to catch up.
To think about right
yeah, and I mean, you have the Commerce Department. They're releasing all the September data. As you said, we're getting the PCE. Also, we're not getting the jobs report until December 16th. That's after the Fed meeting. So we're waiting on all of that. I mean, it's interesting what's going on with bonds. You know, every time I look up, we're up another tick. Sort of quietly and slowly, it's been moving higher. What's going on here when we were expecting a Fed rate cut? I guess it's already priced in.
IWM 1 minute gap
fill. Well, I think you're seeing the bond market reflect.
Up on this push up
number one, it had sold off, right? Yields had been lower. They broke 4% for a short time. So they're drifting a little higher into the Fed meeting. And frankly, some of the economic data, that we can count on has been a little stronger. Jobless claims, right? That was a much stronger number than expected. Some of the other economic data have been showing improvement in the overall economy, as well as earnings have been a solid earnings season. And, you know, most people are getting extremely bullish for the start of next year and into the first quarter. So with everything going on, yeah, the yield's starting to tick up. Now we're at 4.12%, at 4.11% as we move towards the open here. Yeah, you're right. It's starting to catch people's attention that yields have started to drift a little higher. We thought it would go to 4 and maybe stay there, but I think it has a lot to do, Nicole, with how Jerome Powell sets up after this rate cut on Wednesday of next week. If he comes out hawkish, that might be why that yields have moved higher, because they suspect, like he did last time he lowered rates, with a hawkish cut. And you know, if he says that, you know, nothing is on the table for next week, you know, the next Fed meeting, it could be a lot of things. But if people are anticipating a hawkish cut, that could be why yields are creeping higher.
So we'll get a look. Inflation sort of near term, expectations for long term, also sentiment, right? We're going to get Michigan sentiment today. So we have a lot ready to go. And of course, this big.
I can't hear. Is that loud? Yeah, look at this clown. Hasset coming on, talking about what the Fed should do. What a clown, bro. This guy is really touting his, I'm going to be the next federal chair.
For the next chairman of the Federal Reserve in the Oval Office this week. Wow.
It's a great group. And I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential.
Flipping south, all right? Flipping south. VWAP is probable. Let's see. This is the 1/3, 2/3, 3/3 kicking in from the new HOD.
Seen as the front runner now
this
to
is the
replace
Bears
Jay
in power.
Powell.
Bears in control, flipping the real direction from 10:30, fake out into 10:30. The new HOD, and they're going south.
And the White House heavily criticized
Jay
Powell in recent months for not cutting interest
where
rates
they
fast
go.
enough to combat inflation and allow growth to resume in the economy. Joining me now, the man of the hour, White House National Economic Director Kevin Hassett. Kevin, it's great to see you this morning.
10:45.
Being here.
Time is 10:50 is here in 2 minutes.
To see the snow behind the White House.
Classic.
I mean, oh my God.
Let's hit the fucking thumbs up on the video today. Crazy. Yo, classic.
No, Kevin, look, congratulations. You've had an incredible career. We are expecting to hear the announcement from the commander-in-chief soon in terms of whether or not you'll take the Fed job. But
look at the MACD volume. Crazy bearish now. Crazy bearish now. Volume bigger than it was going higher. I'll tell you that much. Volume bigger than it was going higher. Now, VWAP testing.
Next week at the December meeting. So what
Damn.
are you expecting for the meeting next week? And what do you believe the Fed should be focused on right now?
Please fake bounce this shit.
Well, yeah,
all right, now,
for having me back, Maria.
cycle trading.
The thing is that the data are missing a little bit.
IWM led that.
Government shutdown.
It's whatever the fuck IWM does now at this point. It's just
policymakers in the White House and policymakers at the Fed want to see to make sure that they've got a real strong handle on
10:45.
We've seen some anecdotal reports like through
wake
the
up,
ADP releases.
3:30 getting cooked in one candle.
At the same time, industrial production's at an all-time high. We've got GDP growth in the 4s.
Time is 10:50. I fucking flipped it at the last minute.
You know, our expectation is that the government
10:45 candle
had a bigger negative effect on the economy than we expected, but we're going to have a bigger rebound.
This thing a bear trap now. I don't know. It's just cycle, burn.
The Fed to cautiously reduce rates again.
I was really hoping on VWAP flip here.
Yeah, it's a great point to make because of this shutdown. But I think in the middle of all of this politicking around the shutdown, there's a new concern emerging about jobs. And it's really not about policy
that is a bear dream ripoff.
Or about an economy that is slowing, because we know we're going to see a big impact from the big, beautiful bill next year.
Bear dream ripoff.
But Kevin, it's really about AI. And the fact that artificial intelligence is going to create efficiencies that will mean a loss of jobs. And look, I get that we're going to see new jobs.
Holy fuck.
I know that
that's a classic, too. What a fucking bear dream rip off.
New training and new jobs. But what is the White House's message on AI efficiencies? What is the plan to come up with the proper training for people to thrive?
All right,
in this
ultimate
new world?
liquidity grab, or ultimate.
Right. Well, the best part about what we're seeing in the evidence.
Liquidity grab to go lower as well.
My friend Eric Brynjolfsson at Stanford,
oh my God,
has been studying these things like pretty much. There's a new paper every month. That there's a lot of good news in the AI space. And I would say that the best news is the way to think about what AI and its agents can do is that they can act as if they're like the best coach you ever had for whatever job you have. And
high
so
WM bouncing to the middle. Tesla popping.
How do I do what it takes to make the firm successful? It's like you've got a coach right there with you every step of the way. And so we're seeing that, first of all, the coach is good at, you don't have to, learn a new software code, a new programming language to get this to happen. You've got a coach right there helping you be productive. Now, the second thing that we're seeing is that because of the really big increase in productivity,
bears are feeling it. Bulls are hoping.
Productivity increase next year, given how much acceleration there is in AI. Then what happens is that workers are able.
Everybody's fucking scared. Everybody's fucking hoping. Everybody's
hire a whole bunch of new people. And so we're
terrified right now what the MACD volume going to do, the cycle going to create.
But our expectation is that this is something that's going to work out quickly. The AI economy is moving much faster.
Man, I really wanted a fucking little below VWAP too, but holy crap. That is, look where it's bouncing. It's bouncing at the doji candle. I was going to draw a box on this bitch earlier, but what the shit.
Real wage growth is really high again this year after being down $3,000 during the Biden administration. And so all this productivity is putting more money in people's pockets.
Yeah, the productivity is a great point. That is one of the major drivers here of things. And of course, we're
that doji candle acting as a support for right now. The HOD from earlier.
Early part of next year.
Did at 10 a.m.
So what are your expectations in terms of growth in the first and second quarter as we see things like expensing for business?
Adam said bulls are chewing their nails off, dude. The bulls and bears are both chewing their nails off. Now it's showing bearish, right? But I swear to God, 2 minutes ago, the bears are chewing their nails off. Like, I'm telling you, bro. It's just candle. Bruh.
And so that if
it's just there's some higher setup here, and it's just insane. It's the biggest liquidity grab to go higher or biggest liquidity grab to go lower. And everybody is fucking hoping. Everybody is fucking biting their nails off, and everybody is scared as shit right now.
And against that backdrop, what we're seeing.
Look at Tyler praying for a dip. Look, I'm telling you, everybody praying for a fucking something. Garrett said LMAO, bro. I'm telling you, dude. Everybody motherfucking praying, dude. Praying higher, praying lower. Like, this shit is literally
second half of the year that's going to feed the demand that you need from all this higher productivity from AI.
This shit is straight
and so
up
I think that we're looking at one of the golden years in American economic history, provided that we don't get some kind of random black swan disruption.
So first and second
drop and
quarter,
pop it,
what?
drop and
3%?
pop it,
What
drop
are
and
you
it's like
expecting in terms
nothing.
of growth
Three
then?
would
Shit
be
is
disappointed
crazy,
with 3.
man.
I would be disappointed with 3.
Wally said I'm on my knees, like so am I.
And of course, that's what.
So I have 6 fucking SPX puts, dude. They're at 4.2K, and they are fucking at literally 7K earlier. I'm on my knees right now. You don't understand? Everyone's on their fucking knees right now. Everyone's praying. Everyone's hoping. Everyone's fucking sad. Everyone's fucking happy. Everyone's fucking, dude. Everyone's feeling it. This motherfucking candle got me feeling. I'm telling you, dude. It's insane. This shit might be literally a bear hole trap candle too. But what is this fucking candle coming in? Dumping on
was no, we don't have to do that because this is a productivity boom that's a supply shock that puts downward pressure on prices. And so he kept
everybody and then bull trap
low in the 90s, and that's when we had
bear trap, bull trap, bear trap, bull trap, bear trap, bull trap, everything all at different times. Like market always crazy, bro. Like how the look at this motherfucking candle, dude. Look at this motherfucking candle coming in dumb as shit. Like flip the fucking goddamn view app, 2-3 candles. I'm outie, I'm gownie. You know what I'm saying? That's all I fucking want, but 10 fucking points down, 15 points down, 20 points down on SPX is all I fucking want. And now that we're here, I'm hoping. That's the crazy part. Now that I'm here, I'm hoping, and I'm old money bear, technically speaking, in terms of the market words. And there's new money bears that are coming in crazy right now, and they're fucking hoping crazy. And all the bulls are fucking hoping crazy it comes back. And I'm telling you, every motherfucker is hoping out here. You just gotta be careful in the 3/3, 1/3, 2/3, 3/3 bearish, flipping the VWAP, 3/3 bearish. Bull trap.
Oh
my God.
So the people who actually own the S&P 500 say they're really happy because they've got more wealth, they can feel comfortable buying things. But the reason the S&P 500 is up is that the customers of all those companies are buying a lot of their things, and the companies are very profitable. We just had
what the fuck are you talking about? It's hard as shit to see. You pull up the
5-minute,
you can see 5-minute is what it's showing. 5-minute MACD is turning red, and if it flips the VWAP and goes lower, 15-minute MACD and the volume will start turning down. The 15-minute MACD and volume is still green. I don't even know how. Look at this crazy ass pullback, and we're literally still green on the 15. It's kind of.
I think the sky's the limit.
Now, of course,
crazy
you mentioned the president talking about the $18 trillion in investment that is coming into America.
Look at this crazy bump up off one literal MACD.
Into the U.S., but we're also
10-minute not even pull it back either. It's just a 5.
Decision coming up.
5-minute barely just started.
There was all this hysteria about the president's tariffs. Now, people are afraid they're going to go away because it's so significant. The money raised already close to $300 billion. We're now in the window of when this decision can come any day. The Supreme Court
is happening here? Sergio said the ultimate hope is happening here, man. For the fucking bears that are stuck, and the ultimate fucking hope is happening here for all the bulls that are stuck. We're literally in the middle of it all. 10:30. 9:40.
No, we haven't.
We're in the middle.
I think we'll all hear it at the same time, but we're highly confident in.
We thought we were hoping here. Now we're fucking hoping even bigger.
We're right on the law.
That's
the
reality.
Has the right to declare an emergency. Like think
both
about
sides.
Hundreds of
They're
thousands
all
of
fucking
people
thinking
that have
everything's
died
gonna
because
happen.
of fentanyl, for example,
Market is cycling here.
To declare an emergency, and
at
he also has full authority to regulate
touch at
trade
10.50.
if he sees there's an emergency. And how else are you going to regulate trade but through a tariff or a quota?
686.94. 10.50 and 10.55 is the same low. This shit is 10.55 low. Things are not clear. There's not a confirmation long here. There's not a confirmation short here. This is the market is just figuring it out.
We're going to win either way.
We're about to find out in a couple of minutes, most likely.
I spoke to President Trump
momentum
about
is super
it, and
bearish.
he made the
They go
point
super
that, look,
bearish
we're
and
going to
go lower.
pay
If
back
they're not,
money if
they
this
chop
doesn't
here
go
and they
our
figure
way.
it out.
Here's the president with me
If
just a
they're,
few, just 2
bullish,
months
they
ago.
bounce right now. That's all it is. Keep it simple. We'll see. Looks like the bears are coming off of candles alone. They need to break that low significantly with the 5 or 15 minute. Then you can say the bears are here. But until then, nothing has happened. Until then, we're chilling and watching the candles for what it is.
I'll have to figure something
create a
out.
cycle.
I don't want to even think about it. We're doing so well to think about it. If that happened, we'd have to pay back money. So
fucking shit.
If anything would happen with that, that would mean
volume
they're
is
allowed
good
to
on the
use
5
tariffs
minute.
and we're not.
Bears are here.
If
Bears
they
are here.
took
Bears are here.
away,
Bears are
this
here.
is
Bears are here.
national
Bears are here. Bears are here.
security.
Bears are here. 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 Flip the fucking goddamn VWAP with a big ass candle. 5.15. Let's go, please. 10 points down on SPX. All I need. 15 points down on SPX. All I fucking need here. Going to test LOD tests. LOD test. LOD hoping.
That's kind of make your
LOD test. LOD hoping right now.
The president is exactly
this
right
is
about
3/3
during your clip right
bear
there,
cycle
that if the Supreme
from the
Court
roof
says, hey, you
new
got to
roof
take the $300 billion and
the extended bullish cycle that they
it's
trapped.
A massive
Holy fuck.
And then moving
time is
forward,
10:55.
we have lots of plans for 301s and 232s so that we can reproduce what we've done with other authorities. But he is correct that you're looking at a really, really massive disruption that the Supreme Court needs to take seriously as we look forward.
I'm in on everything still.
Yeah. Now, yesterday,
now I feel like they're about to fucking dump.
This
shit is a dump.
Pushing for
Off
new
of
Federal
new LOD.
Reserve regulations,
Sorry, new HOD.
requiring regional bank presidents live in their districts for 3 years.
Cycle extended crazy now. Bears are in superpower here. This is a mega dump.
Potentially veto regional Fed presidents if implemented. This rule gives
shit's a mega
Washington
dump.
more sway, certainly in fiscal policy.
Mega dump.
Is the president planning
Friday.
to veto Reserve Bank presidents who have not
Time
lived
is
in
11.
their district for at least 3 years, Kevin?
This is Selden News event. This is Biden News, Selden News, whatever the fuck.
Said is
11.
exactly consistent with the
they pumped it up
Act
into
that,
news,
created
pumped
the
it up
Federal
after
Reserve.
news, and
But the
dumped
reason
it up
we have all
after
these
news.
regional
This is
feds
now
is
11
that we
a.m.
want to make sure that we have a federalist system
LOD
where
testing,
the different regions
LOD
of the
hoping.
country that have different concerns, like it could be a place where you care a lot about agriculture or where you care a lot about energy, that those places have a voice at the table. And the unfortunate thing about the current design of the Federal Reserve
LOD
is
testing,
that the only folks who
LOD hoping,
always get a
using
vote
the purple
on
box,
interest rates are the
market is
people who live in
deciding what to
Washington
do
and the
right
people
here,
who live in
live.
New York. And it's something that Secretary Bessent and I have been talking about. And I think it wouldn't require anybody to go in and fire anybody who's there now. But going forward, being respectful of the original design of the Fed, which helps.
We did not go to 6,900. We were showing it, and then pulled back. I was expecting this shit here. But extended the cycle,
So,
made new HOD.
would it derail the expected February
Bears are still
approval
strong.
of the 12 regional reserve bank presidents to 5-year terms?
That's something I've not discussed with everybody yet.
Kevin, let me move on to the president's affordability push. He's going on a trip, and he's going to be traveling the country beginning next week to really tout some of these economic wins.
Momentum is
what
crazy.
What do you want to say to those people who talk about affordability being a real challenge? And the fact that they understand President Trump trying to rein in prices, but there are some prices that are still higher than what they want.
Burn some zero DT.
Right. Well,
Bears here.
Well, we understand why people are still frustrated.
I'm
we
still
understand
staying
that, like, if a typical person buying a home saw their monthly mortgage payment go up by more than $1,000, grocery prices, a typical family's grocery bag went from
wanting
about
an LOD
$400
break
to $525 a month. And so
I want to reload the fucking LOD breaks so I can get the fuck out of Gapville.
We're getting wage growth to grow again. People's spending power is up about $1,200 so far this year after dropping $3,000 under Joe Biden. And so we're making progress, but it's going to take a little bit more time to get the hole that Biden dug to be completely filled. But we're going to do it.
Time is 11.
We're going to do it.
1 hour and 30
that
minutes
you and I have
since
been
the market
talking about
opened.
This morning highlight why people should be so optimistic that we'll be successful.
Absolutely. And, I wonder if you're going to see this road, the Housing Act, part of the NDAA, I mean, housing is one of the areas that people are concerned about because of where mortgage rates are. So will we see that enactment, and that would be positive for manufacturing and housing,
Market cycling, zero DT bears, burning,
really
chasers, burning in the 3/3 trying.
But the president has basically instructed all of his advisors to work overtime on a second round of things to make housing
Who wants
more
this guy to
affordable.
be our
In fact,
next
we've got
Federal
meetings
Reserve
today
chair? Yes or no?
about that. But yeah,
Type in
we
chat,
think
please.
that Congress has got a lot of really good ideas. Senator Scott has been pushing, and that we, absolutely think that it'd be great if that got passed. But we're not done making housing more affordable.
So what should we expect from the president traveling the country this next week and beyond, talking about some of his economic wins, Kevin?
Well, I mean, there have been so many wins to talk about that I think it's just going to be a great time. He's the best communicator I've ever seen. There's going to be a great time for him to go out there and just talk about, like, we could say one thing that we've got 18 trillion in new factories being built, but now we've actually got the groundbreakings that we can report on. And so I think that people are going to be really impressed with the progress that we're making, and it's going to be very, very impressive data as well. And so I think that because the president is on fast forward and he's solving, it seems, all the world's problems, stopping wars and everything else, that
this Kevin guy is like trying to smile on purpose. He could be our next Federal Reserve, but like I don't like his smile, dude.
While also rolling back some of the Biden-era fuel efficiency regulations, making cars more affordable. This was the topic this week to try to increase production. Right?
See how Jerome Powell is always grouchy,
a nationwide
grumpy?
affordability push.
That shit real as fuck. Who the fuck wants to be happy as shit as a Federal Reserve, bro? Jerome Powell doesn't want fucking power, bro. That motherfucker is the power god. You know what I mean? Jerome Powell, daddy.
Saving and investing from a very young age.
Team Jerome.
Will this be on American families?
I think that both of the things you mentioned are.
I don't give a fuck what anyone says. I'm Team Jerome, bro. He did me good this year, last year.
Because what he did with the Trump account,
I'm fucking Team Jerome.
Every kid, when they're born in America, basically gets
I love it.
They get a piece of the action. They get money put into a broad-based index fund, so that they get to feel like they're part of the capitalist system. They're part of the economy that's making us all so rich.
Let's
and
see
not only
how
that,
the market decides to create a cycle here, whether it chops here, whether it rejects here, whether it bounces in this purple box. Let's see.
Who
Time
comes
is
through, and what President Trump had us do, by the way, Burry,
48 seconds, so they're creating an algo range in the purple box. Market is deciding what to do, whether to chop or to drop.
For all children in America, but we put the $1,000 in every year for the newborns. And Michael Dell came out with $6.2 billion.
Any cycle
and he said, you know what?
This is
for everybody 10 and under, I'm going to give them
not even a cycle. It's 11 to 11. This is basically a fake
25 million people. And since Michael Dell did that, we've got people, wealthy people from all over the country ringing our phones off the hook saying, hey, we want to do that too.
I'm Team Jerome.
So it's a new model. It's a new platform for making society more just, but doing so voluntarily with the well-earned profit.
I'm Team Jerome. Yeah, it really has been wild. Last month, last week, this week, yesterday, today. You can't lie. I think every single day, the majority getting fucking left behind or left, like, somehow shape fucking getting trapped out. So it's really crazy. Imagine doing fucking stock trading like through this shit too somehow, like, bro. Like, I'm barely fucking making it, doing my fucking option shit with the way I do it, with the fucking wind direction and trend direction shit, but I can't even imagine people that don't even pay attention to shit and then they just fucking invest in stocks. I mean, I guess stocks are more safer than options, to be honest, like, long term. Saving money and being risky, like, safe-wise, but you still have to have an understanding of cycles and everything. I just don't understand how, the most of the retail or most of anyone has any clue of anything, because they don't. Bank of America CEO talking today.
doing, actually? How's the U.S. consumer holding up?
The U.S. consumer is doing fine. And so for the month of November 25 versus November 24, the amount of money, our 70 million consumers, is pushing about $4.5 trillion plus in the economy.
The waterfall already happened.
About, for that month, about 4.
Were you talking about a motherfucking V2? Yeah, sure.
And so it was good around the Black Friday in the U.S. and
Cyber
Monday and all the things they talked about. The spending was solid and good, and it's consistent with a growing economy. Our team has economy growing next year at 2.4%. So Candace and her team, who are the best in the business, you know, that's their thing. But everything we see on the consumer side sets that up.
I want LOD. I will not lie. I want below 6.
Yeah, and there is. And so this is why if you have to sort of sort the aggregate economic impacts of the consumer, our 70 million consumer spending, versus the different deciles of income and things like that. But if you sort it into thirds, and our institute that writes on this, the bottom third is growing. It's just growing at a slow rate to the middle third of the
honestly,
top third.
you have to have a deep
about the K economy and things like that. The good news is with the unemployment rate at 4.4% or so, the new claims for unemployment is still at a very low rate nominally compared to where they compare to 19, but the actual real labor force is bigger. Those are all good things. So the people are working, they're getting paid, etc. But they are worried about prices and affordability, and I think that will dominate the conversation until
100%.
Would a Fed cut help?
But
a Fed cut helps.
We're just talking about, the numerical.
Our team believes the Fed will cut next week. They came to it slowly because the inflation is still higher than the target rates that the Fed would have.
Chopping right now. We're chopping.
It's sticky, although right when they started raising rates, people told me it takes 5 years to actually squeeze out inflation, and people just aren't patient. And so it takes a while. So it's been coming down, and it's sort of sticky. Is that it's not making the incremental progress a little different. But I think the belief is because the labor market's softer, they'll lower rates. That's how our team got there. But we get into the hand-to-hand combat next month and next week. And
now that we're here, we're
really
chopping.
Longer term,
either going to
chop
or we're going to
down to
balance
about 3%. Fed funds rate, the 10-year rate sits in 4.25, 4.5, and that's a more normal rate structure for the United States. And I think that's not a bad thing. If you have a little higher inflation, a little faster growth, and a normal rate structure, then I think the incentives created by very low rates and stuff are out of the system.
Look what happened to Bitcoin,
can impact on economic incentives.
Bitcoin from 120K, people were saying, oh, I'm about to dip every single day.
Or does it take a while
literally
to settle? The market was also a little bit of a tizzle because of
Look what happened.
the possible
Shit went down 30%.
Yeah, I mean, I walked the trading floor this morning.
Why?
You got to sort out people who worry about 5 basis points on the 10-year versus people who worry about the next 50 years in the United States and a strategic view of the world.
Leverage
If you look at
that they have
companies,
no idea what they're
activity
doing. They do
after
things
the
they have no idea
administration came in
on, with
because
no idea
there are a
what
couple
they're
things.
doing,
One
and they
was
get
if you
fucked
get
by
the
it all
system
because
gets
there's
them
someone
done,
out there
especially United States
that's
on
been
it.
doing this shit for years.
And that's important. So in
There's
our
someone
industry,
out there
which
that's
we
been
are not allowed
trading
to make
oil
any
for fucking
acquisitions or
years. There's
positives,
someone out there that's been
been on
trading
books for
options for
30
years.
But
There's
in our
someone
industry,
out
as
there
an
that's been
investment
trading
banking
Tesla
firm,
for
our
years.
advice
There's
is
someone
you
out
can
there
get
that's been
deals done.
trading
You're seeing the time frame
NVIDIA
that
for
the deal
years.
dropped by
There's
half.
someone out there
And
that's been
important
trading
because the
fucking
idea of
VIX
the
for
deal being
years.
open
There's
for a
someone
year
out
and a
there that's
half
been
or
trading crypto
that's tough
for
on the
years.
companies. And
There's
so
someone out
that's
there that's
good
been
news.
trading
And the
something for
second thing
years,
is
and I
settling
know
out
this
the
shit
major
because I've been
policies that
through it.
you guys talked
I
about
was
every
the
day
person
on
that was
trade
in
and
all those
immigration
things, and we were
tax.
all
Those are
one of them
settlements,
at one
people can
point.
see
And
that.
we
There's still work
we
to do.
were
But I
that
think
person
that means that
that
companies can
were
look and
interested,
discount cash
but like
flows and make
didn't
decisions.
dedicate
And
our
then
entire
a rate
being,
structure that's
our
higher as
lifestyle,
long as it's
our
consistent,
who
they can
we
plan
are.
into it.
Our dedication to figuring out what it is they need to figure out in that subject that they are great at. That
well, he's got to be nominated first, so let's let the
that
president do his work and make his decision. But look, I think all the candidates are highly qualified. Our job is to work with them. I think the Fed as an institution has to be independent. There's no question that. I think the U.S. Fed is the example for the world of how to run a centralized Federal Reserve with independence. There are parts of it that there's a lot of commentary about the supervisory side and the reach and the activities. That's a separate question. But the Fed independence on monetary policy is key. Kevin and all his colleagues
things are great, so it's good. Oh, things are bad, so it's bad. Like there is a point of things being great. There is a point of things being bad. The point is for us to experience it, for us to remember it, for us to use it for greatness, to elevate ourselves, to elevate our lives, elevate, our loved ones and those around us. That's it.
Think, again, they're ready to do deals?
That's literally it.
Generally, there's things that you look at.
That's what I mean by you have to have a deep understanding of who you are, a deep understanding of knowing what you do, how it is, because people will come at you, people will try to dissuade you, people will show you, people will bullshit you, people will do all this and this and this. None of the bullshit matters other than the motherfucking shit that you know that is important in your life.
That is might locate supply chains, how it affect the cost of goods sold. And
that's it.
If you watch through
if you do not, you're gonna get fucking you're gonna get unfocused. And there's a lot of things in life
10 to 15% increase
so
is generally
unfocusing.
Across the board result. That's
a
helped
lot
business understand it better.
Most things in life are actually trying to distract you.
Plans. And that's why you're seeing the relief come out from Liberation Day, where people were very confused to now people have generally said the issues of China national security stuff are unique. The issues of solving the Russia-Ukraine war are unique. But I don't think business sit there and say if that doesn't solve or does solve. If they're very specific businesses, yes, but generally they're really about the ability to address markets and drive. And I think one of the things administration's worked on that gets lost in the percentages and count is the non-tariff barriers, and those are real barriers, both in the EU, frankly, through regulation and stuff, and in China and other places. And working on that is important for multinational companies, not only in the United States but around the world, because to get access to markets without having to change product is a big deal.
Let's see.
They're calling it
Q Day.
The moment when.
What's your take on the UK? So we had a budget.
Bear
it didn't
control.
100% go well for all companies, but I think there was a sigh of relief that at least we know what there is. JP Morgan.
LOD testing. LOD hoping somewhere down below. This is the bottom of the.
We have 6,000 teammates.
VWAP range.
1,000 teammates in Belfast.
Times when the market goes from the bottom of the VWAP range to the top of the VWAP range, all the way to the roof of the bottom. So bounce here is possible. Candles are trying.
It's just part of who we are.
LOD hope testing at 11:10.
London in particular is a great place for multinational, international operations. So Bernie Menza that runs international is here, and I walked the trading floor today.
Real dangerous for bears.
Asian traders and the Middle Eastern
Spike
traders.
Down below 6,873.
Was up and
we're
working,
holding now.
and so
I'm still in. I'm hoping. I'm one of the. I'm actually straight up hoping for LOD.
That
but I'm literally at
7.2. Companies are here because they're
getting grinded up, chopped up,
companies that are indigenous and working with the citizens of the UK, and make sure you get the regulation
this could be it,
right.
3/3
because if
cycle.
You're a good place with the rule of law and the great city that
this
London
could
and
chop
the great country
for an
that
hour,
UK is.
2 hours, 40 minutes, and it would burn everything.
Not that many places where
and
people
then they could cycle and decide what to do.
Young kids go to work. We're just about young kids. Remember, we bring
or they're so goddamn bearish they break LOD.
They've got to want to work in the cities, and so New York and here and other places have a leg up if they just handle it right.
So what do you tell the Prime Minister?
IWM dumping from yesterday's high.
Regulations fair. And protect, but also don't.
252.
Materiality is the hardest thing for governments to understand.
Inside this big ass range.
We have 6,000 teammates here. It's an incredibly important operation. 20% of our revenues are international businesses growing nicely. But it's 20% of our revenue and things like that. We have hundreds of billions of dollars of capital.
If IWM drops below this.
You make it hard to operate, that's when people start to make decisions.
There's a probability of SPY,
uncomfortable
SPX going to go gap
for the workers.
This is fucking insane to talk about, but if it happens, it might just happen so fast. 6852 might be a play later on in 2-3 hours. This gap
and you'll get companies coming here.
Is now what everybody in the world is thinking on.
It's just where the next 500,000 people.
Or maybe people aren't thinking
talking
on.
about your investor day. I mean, this was the first in 15 years. You set up some really ambitious targets. Are you happy with the way it went and the way it was received?
Yeah, it was great. It was a chance to show the hugely competitive advantage we have as a franchise, the moats we have on it, what all the technology spending done. We talked about what we do.
Who remembers how fucking bullish it was at the top,
asking a lot about. We showed that it's actually not theoretical. Bank of America, the Erica will interface with 2 million customers today at Bank of America, which is
right now.
So we gave that view, and we showed in each of the business how the competitive position they have. They're top businesses, number 1, number 2, number 3. They're growing organically, have been, and then the returns come back because the NII and the pricing on the fixed assets. So we talked about our net interest income growing at 5 to 7%. The industry's growing at 2 to 3%. That's really coming from the balance sheet continue to reprice while we generate good organic growth, and it was good. And so we told the returns have reached 16% return on tangible common equity, moving up to 18, and last quarter we had 15, and we grew EPS like 25-30%. It was a good quarter, and it's the team does a great job for us.
Sorry, I should speak talk soccer or football. I may get my nationality pulled away if I call it soccer, but are you now a football guy? I mean, you're sponsoring FIFA. The World Cup is coming to America.
Well, I have to say, as an American, I am a football person. It's just not the same football. Look, the draws tonight, we're very excited. We are a sponsor. We are the major financial sponsor for FIFA. Working with Johnny and the team for the last 4 years now on this. Our team has got a set of programs. Just today we announced that if you apply and get a credit card, you get a chance to go into lottery to buy tickets and things like that. And our clients are excited. The cities are hosting are excited. We're working in the cities. We're working with other colleagues, other companies to put fields in these cities, at FIFA and Visa and others. These are all important things because what we're trying to do is bring soccer into places and have it when the World Cup goes away, which will be a wonderful event, to have the FIFA World Cup continue through these fields.
Brian, the most difficult question, who do you support if not USA?
Well, we have to support USA.
No, but your second team, do you have a second team?
I've got too many colleagues around the world that come after me for that.
You're going to get the calls, the hate calls.
The Bulls are fucked at the top today. That's what I see. Oh my God.
We want to welcome in our first special guest. We've got Jay Woods, the Chief Global Strategist at Freedom Capital Markets here at the Big Board. All right, Jay, it is good to see you this morning.
Good morning. Happy
Friday. Happy Friday to you. TGIF, we made it through this week.
I love today. No longer LOD testing, LOD hoping. LOD is motherfucking most probably coming.
This is the first full week of December. What's your take?
We were a little nervous coming into that last week of November. We had that holiday short week, and we rallied. And the question was, can we sustain that rally? Was this just a rally because there was no one around?
Bearish!
The holiday short week?
Holy
but
fuck.
We showed no.
Holy fuck. I think it's going to go here.
Garden variety correction, and now we're waiting for one big announcement. This is all kind of like we wait for Santa. Well, here at the stock exchange, we wait for
maybe the bottom of the horizontal slope support at 6.842
whether or not,
that is what that guy is saying, and you're at
the question
6.842 possibly.
Maybe,
but that's a
was
straight up fucking
among the ranks in the room. So we're
crazy to fucking talk about that shit when we're testing all-time highs. So that's straight up.
We're getting some solid earnings, as you just said. Ulta Beauty turning it around. The consumer, the discount retailers.
Guys, I am all out.
Things are going well with the economy, but there is some angst as we wait for that last Fed meeting, and we start to get data coming into us, which we were locked out because of the shutdown.
I know, and even with the data, it's like we're still playing catch up with that because we get PCE today, but that's September. So the question is, how much will that matter? Tell me a little bit more about the angst. Is it, because it feels like it's a grind this week, and one of the things that KG Kevin Green pointed out was that the highs are lower highs that we're seeing.
Yeah, we want to get that new high. The last high we made in the S&P 500 was October 29th at 69.20 intraday.
I'm calling it. I don't care about LOD.
We have not gotten back to, but we're close. Usually when you have a strong bull market, nice run like we have in the S&P 500, up over 16% year to date. I think it's
I'm out of my 6, 8, 7, 5.
We usually finish the year strong.
I don't want to sit there hoping on LOD.
The Fed meeting and possibly a Supreme Court decision on tariffs that could just come at any time.
Oh my God.
That's where the angst comes from. But overall, the trends, the earnings growth continues to be there, and I think we will get that rally at the end of the year to finish. If we don't finish at all-time highs, we will probably test them one more time, and then go into 2026.
With some wind at the back.
To earnings season.
Okay, so I'm going to get to your views on 2026 and what
true
you're anticipating
LOD
I want to do a 2025
year in review, if you will.
Okay.
Holy fuck, it's so bearish. I was gonna say there may be a small time bounce or a medium term bounce here happening, but it's so goddamn bearish right now. They want to go lower. Looks like
you have had strong earnings overall.
This is the 3/3. So.
And then of course there's been a crypto
whiplash.
And Eagle Super Bowl. You forgot to mention that. If KG's watching, just remind him.
He will look at this later.
I know he will.
So from your vantage point, what was the biggest, I guess, surprise of this year, and what's your takeaway overall?
It's all about AI, and it started out right out of the gates with DeepSeek. Remember DeepSeek back in January?
I don't play the 3/3. I could go in.
And then we went to
I was thinking about doing 2K1 DT right here.
There were two major concerns. Is this the end of AI? China's got a competitor, and then after a few weeks, the DeepSeek kind of went away.
I really don't play the 3/3.
Still out there, but it's just not a big story, nor is it the competitor that we thought it was.
Man, what a dump.
And then the tariff tantrum, that Liberation Day.
I'm doing it right now. 2K.
All the angst going into that. I'm using the word angst way too frequently.
It's
I apologize.
all right.
But yeah, when we sold off into that, the surprise of the tariffs, we had to, reposition ourselves, and that's what these earnings, why we're seeing such good numbers, is because the guides back after April were a little more uncertain, and there was always tariffs mentioned on a majority of the calls the first half of the year. After the third quarter, they're like, we're not going to mention tariffs anymore because that causes uncertainty. And we're focusing on that growth story and showing that a consumer is resilient now. The other theme is the K-shaped economy, where the high-end consumer is doing
DT looks juicy, but if it gets reverted on, I don't want to deal with it.
And then the discount retailers, the Five Belows of the world, the Dollar Generals, the Dollar Trees, all doing well because the low-end consumer is going there consistently for their everyday needs, and then the high-end retailer is
what a fucking trap.
Is going to these discount brokers to find deals as well, or that middle of the road.
Look at Tesla. Does it go to 444? It's a crazy ass shit. Is the question now?
Some tension. If we do have more uncertainty with the tariffs, I think. Now to pivot to 2026.
Yeah, I did want to ask you. So yes, how does that set us up?
I left my 0 DTs on SPX.
I think it's going to be a little rockier.
I'm on SPY.
Than 2025, and I know a lot of the prognosticators. I have not come up with my number. For I will come back and I will let you know.
I still have my Tesla.
We were, we made the call. 6,900 last year. We're almost there. Let's hope we get there.
450,
but
445.
I see so much bullishness as far as the people that sit in my seat, that it gives me a little pause, like, wait, everyone thinks the market's going to skyrocket? Second year presidential cycle could be a little rough, tariff uncertainty a little rough, and then the AI story, what it's going to pivot to is winners and losers.
This is so
crazy. NVIDIA now, all of a sudden, look at Alphabet. Look at what Google has done.
Right.
All right. Gemini is starting to make waves, and that stock's been rewarded well. NVIDIA's done extremely well, up 35% year to date. Second best Mag 7. The rest of the Mag 7 has been the lag. It's the lag 7.
I did a list of them, and at the top of the leaderboard, you got the two, heavyweights, Alphabet, Google, and then NVIDIA, but Alphabet, Google is
look at that all-time high test.
It is, and I think that's what we're going to see. We're going to see some stocks in the cyberspace do better than others. Look at Rubrik today, up 18% after earnings. CrowdStrike still the poster child for what I like in the cyberspace, but there are going to be winners and losers, and then you'll have Apple that just slowly goes up,
used as a
even
hope
though
maybe
they
right
didn't
now.
do the AI spend. It just has that recurring revenue, and then those phone cycles. There shouldn't be a big phone cycle refresh next year, but the App Store just keeps crushing it. So it's going to be fascinating to watch how we pick the winners and losers. My job now is to go research.
I was going to ask, who do you have your early picks yet for next year?
I still want to go back to the financials. I mean, because we focus on tech. Financials have had a phenomenal year. Goldman, Morgan, JP Morgan, Citigroup, all up 30, 40%. The trends have really just started, and I think there's more of a tailwind behind the financials back than any other sector. And we saw it right here at the New York Stock Exchange when the SEC Commissioner Atkins rang the bell and make IPOs great again. First of all, IPOs are always great. Let's stop. We don't have to make them
great. But they're coming back this year.
We want to see more, and there's going to be less scrutiny for companies, less paperwork for them to go
crying
public.
right now.
So
They're like, what the fuck?
We get more
IWM Bulls laughing right now. They're like,
haha. Slow stream of IPOs. We had some good ones this year, but nothing to the euphoric sense of what you see towards the end of a roaring bull market. And if we can see that pick up, M&A activity pick up, I like Citi a lot. I think Goldman will continue to do well. JP Morgan, Morgan Stanley. The financials are where you want to be. Will it be the leading sector going into next year? I don't know.
What are you talking about, bro? It's a lot easier to say things when things happen.
And that's
it's a
what
lot
you want to be in. And then you take a shot on some of these crazier names. And then I'm also watching energy.
You say there were signs that it was going to head lower earlier? What do you mean? It was hard as shit, bro. Let's not front. Like,
which is
we
over
were saying that shit was a joke earlier, but we were literally saying hope versus hope versus hope. You know what I'm saying?
120 technically a very big level.
Until it happens, it's that hard, bro.
So, we'll see what happens. They've been able to navigate those waters of low oil prices, on $60
Oh, you say don't be leading? That's
fair.
You said cat could be both dead and alive. Whatever you decide you're leading, don't throw the farm on it. Be surgical.
Keep an eye on energy. That's
take
one
profit,
sector
keep
that,
shit moving. I'll go respond to that. I
Keep
fuck
an
with
eye on
that. I fuck what you're saying.
All right. That is Jay Woods, Chief Global Strategist at Freedom Capital.
Sounds like it looks like you just found the live stream today. Hopefully you do come back, because a lot of people are one and done. So a lot of people that are active in the chat. Hopefully you guys come back. If you guys are new, hit the subscribe button and also hit the thumbs up on the live stream. We are literally here every day. People are here.
I'm Nicole Pedaliti.
Chat every single day. So I don't think we're gonna do an all-time high rally. I think there's people trapped at this all-time high test, and it's gonna take a massive amounts of money and massive amounts of effort for them to relieve them. And I think it's gonna take massive amounts of money and massive amounts of effort to also hit the gap below as well. So this lady's saying Tesla's going to keep
Tammy Marshall is here to help us decode how price reacts whenever
Fibonacci Princess points to Tesla upside. Somebody please take a picture of this, a screenshot, and then we'll come back to this, right? The Fibonacci Princess points to Tesla upside.
Elliott Waves traders, Tammy Marshall is here to help us decode how price reacts when it approaches mathematically significant zones. Tammy
Fibonacci
here joining us here on the floor of the New York Stock Exchange. You're called the Fibonacci Princess because that's the technical patterns that you watch around certain stocks, obviously. For viewers who aren't fluent in Fibonacci, myself included, can you briefly explain how Fibonacci helps you determine certain support and resistance levels?
Absolutely. So Fibonacci is the golden ratio. You find it all over in nature. You find it in knowledge shells, hurricanes, sunflowers.
Actually, wait, Fibonacci is so different. I thought she was talking about Elliott Wave theory.
Which are 618
Elliott Wave theory is a tool that is used.
And we are human nature. The stock market trades in those natural patterns. So I use a lot of different Fibonacci numbers to find support and resistance, and that's how I define risk on the stock market.
Okay, so let's talk about Victoria's Secret first, because it's out with its quarterly results.
Fibonacci's are actually
still reported a loss, but it was much better than expected. Sales are on the rise. When I was in the malls this weekend during Black Friday, I saw, it looked like it was hopping, and maybe it's back to the 2000s in terms of interest with the young folks, Gen Z, and whatnot. So when you're looking at the technical levels, what are you looking at? It's sitting at 41, but it's shooting much higher in the pre-market this morning.
Yes, I did notice that it's shooting higher in the pre-market. So I do have a level of support around 33 to 41 that includes the 50 SMA. So it's a huge cluster of support that I have with my Fibonacci levels. So I say as long as we stay above that level, I look for it to be a great buy because I have overall targets of 58 and 70.
Okay, what gives you confidence in that?
We were at 6.
All of the moving averages are on the side of the bulls.
Okay.
So that is what gives me confidence that Victoria's Secret will continue to move up.
Okay, and so what would tell you if it's rejecting that level?
If it busts that level.
Okay.
If it busts that level, because a lot of the previous swings, so what I do is I look at previous swings in the market in order to come up with those Fibonacci levels. And if we start busting some of those zones, then it's making moves that we haven't seen before, and that is something that gives me caution. So the level support is 33 to 41. You can put your stop just underneath there to define your risk.
All bears are not really stuck.
Today, right now, shooting more than 12% higher in the pre-market.
What I see is bulls are stuck
I know that's another one that you're paying attention to.
Let me make this straight. The bulls are stuck at the all-time high test. Remember what that video said? This guy talking about, oh, we're going to have a test of the all-time high soon, right? That's what happened today in the morning. I'm telling you, it's crazy, but that's what's going on. I'm trying to find the video, right? Listen to what he's saying.
Man,
this Jay Woods guy.
Special guest. We've got Jay Woods, the chief global strategist.
Listen to what he's saying. Jay Woods on SPX retesting record highs, right? Listen to what he's saying. This is literally what happened today. Please listen.
Special guest. We've got Jay Woods, the chief global strategist at Freedom Capital Markets
see you,
here
Thank you
at
for
the
saying
big
that,
board.
man.
All
Thanks
right,
for
Jay,
today,
it
bro.
is good
See
to
you
see
around,
this
man.
morning.
Appreciate it.
Happy Friday to you. TGIF. We made it through this week.
Thank you so much for being here, brother.
I guess
Thank you.
we've got a couple bells still in front of us.
We do.
All right,
listen to what this guy is saying, guys. This guy,
strokes about how you see the market. This is the first full week of December.
Still bearish.
We were a little nervous coming into that last week of November. We had that holiday shortened week, and we rallied. And then the question was, can we sustain that rally? Was this just, a rally because there was no one around because of the holiday shortened week? But we showed no. That sell-off was your garden variety correction, and now we're
a lot of
waiting
power
for
us
one
to
big
go back
announcement.
To
this is
all-time
all
highs is
kind of like we wait for Santa. Well, here at the stock exchange, we wait for Jerome Powell and the Fed on December 10th to drop whether or not we're going to get that rate cut. The question is, what is the tone? How was the dissension among the ranks in the room? So we're waiting for that 2 o'clock announcement on Wednesday. But in the meantime, we're getting some solid earnings, as you just said. Ulta Beauty turning it around. The consumers, the discount retailers.
That's literally in the morning. This video is delayed by hours.
With the economy, but there is some angst as we wait
Futures
for that last
gain ahead of Friday
Fed meeting,
opens.
and
literally before
we
today
start to
opens.
get data coming into us.
What he said is literally before today opens.
I know, and even with the data, it's like we're still
Everybody
playing
saw the
catch
roof
up
together.
with that because
Everyone's
we get
thinking
PCE
all-time
today,
high.
but that's September. So the question is, how much will that matter? Tell me a little bit more about the angst. Is it, because it feels like it's a grind this week, and one of the things that KG Kevin Green pointed out was that
new all-time highs, new HOD type of thinking, because you need to have an understanding of the environment we are in.
We need
to have an understanding of the things that are going on, and you need to have an understanding of the shit they're trying to feed us. And the shit they are feeding us, which is good and bad.
69.20 intraday. We have not gotten back to, but we're
you know
close.
what I mean? You got to be your own man or woman, and you got to understand that information
nice
for what
like
it is.
Have the
What I'm trying to say
up over 16%
here. LOD is going to break in QQQ and SPY, most likely. LOD breaking.
We usually finish the year strong, and with the Fed meeting and possibly a Supreme Court decision on tariffs that could just come at any time.
Bears are crazy.
That's where the angst comes from. But overall, the trends,
I told you,
the
Bears are crazy as fuck right now.
And I think we will get that.
Bears are crazy as fuck right now. There's literally 2 people watching what I'm saying in the WhatsApp group.
If we don't finish at all-time highs, we will probably test them one more time.
I'm telling you,
and then go into 2026
with some wind at the back.
To earnings season.
Okay, so I'm going to get to your views on 2026 and what you're anticipating the setup to be. I want to do a 2025 year in review, if you will.
Okay.
So this year has been marked by some AI hype, some powering up of AI, some pulling back of AI. Then of course you have had strong earnings overall, and then of course there's been the crypto whiplash.
Yeah, Eagle Super Bowl. You forgot to mention that. KG's watching.
Okay, he will look at this later. So from your vantage point, what was the biggest, I guess, surprise of this year, and what's your takeaway overall?
It's all about AI, and it started out right out of the gates with DeepSeek. Remember DeepSeek back in January that caused all this panic in the market, and then we went to tariffs. So there were two major concerns. Is this the end of AI? China's got a competitor, and then after a few weeks, the DeepSeek kind of went away. Yeah, they're still out there, but it's just not a big story, nor is it the competitor that we thought it was. And then the tariff tantrum, that Liberation Day, all the angst going into that.
All-time high test trap.
Too frequently,
it's
I
all
apologize.
right.
But yeah, when we sold off into that, the surprise of the tariffs, we had
all-time high index trap.
Reposition ourselves, and that's what these earnings, why we're seeing such good numbers, is because the guides back after April were a little more
live stream
uncertain.
is Tesla versus Michael Burry Part 2. All-time high index trap.
The first half of the year.
Today is Friday, folks.
We're not going to mention tariffs anymore because that causes uncertainty.
Captain said, "Is Trump live today at 11:30?" Yes, he is live. FIFA drawing board or something.
Our Sargento cheddar is
I don't know if this is live. This is from Fox News New York, so I think this is live. President Trump participates in the FIFA World Cup drawing at the Kennedy Center. And they're watching him right now.
Up with FIFA, and we're looking to have, we have already set records with ticket sales. I don't think there's ever been anything like it in any sport, and so I want to congratulate
Trump at
you.
FIFA right now.
I don't even have to wait, but major records have been set. How are you?
Good.
Nice to see you.
Today is not football, American football. It's soccer. It's a big event.
That's right. That's right.
Big day.
It's just a big day, and it's a great sport.
Trump FIFA live,
it really
folks.
is coming to America, and nobody ever thought a thing like this could happen. And I'm very happy to say that we've already set the all-time record on ticket sales long before the first ball is kicked, right?
100%. You've had some concerns about crime in American cities, some of the cities that'll be hosting. Have they remedied that for you, or are you still considering maybe asking FIFA to move some of those cities?
No, I don't want to do that, but I will tell you, if they do have a problem, by the time we get there, we'll take care of that problem. We can solve that problem. I've proven that in D.C. and everywhere else we went, so we'll take care of that very easily. So if they have a problem, hopefully they'll let us know that, and we will solve any problem. Okay? Thank you. Congratulations.
Thank you. Appreciate it.
President, Brazilian television. America will be hosting the World Cup and the Olympics in 2 years. How important it is?
Yeah, so
Trump x FIFA, guys. Look at the live stream right now. The title is Tesla v. Burry, Part 2. Trump v. FIFA live. I love today. Look at this, folks. Beautiful day, huh? I was down 50% at all-time highs too, bro. Oh my god.
If there are issues, still get it handled.
My SPX that I fucking went in.
We've seen
and I assume he's one of you
Insane day. What an amazing day.
It's getting better and better, actually. They're getting better and better.
Thank you very much.
Thank you so much. Thank you. You hear the excitement from the president. You talked about,
what a beautiful day today. It cannot be better. I don't care.
To be pumped into the American economy. The president has said they've already sold 6 to 7 million tickets for the games, and we've also heard them come up with something called this FIFA Pass to bring people to America. With Marco Rubio essentially saying that if you're on the FIFA Pass, if you buy tickets to the games, if you want to come to the United States, you'll get an expedited meeting at an embassy. It's not a guarantee that you're going to get a visa, but you'll move to the front of the line. So
still bearish.
Sees this as a financial boom. He wants people to come to the country. DHS says they're ready. We've heard Transportation Secretary John Duffy say the FAA will be ready for all the international travel that's going to come in. This starts next year. In 2026, it's going to follow America's 250th birthday.
IWM bearish.
With his administration, just
IWM bearish as fuck. LOD breaking. Dumping coming. Dumping coming. Dumping. They're about to dump IWM breaking the LOD. Wind direction is south on IWM in a minute, it looks like. LOD testing again. IWM did not break the floor yet. 250.8. 250.8. Alright, that is the new LOD. The same price, but the most frequent one is the new LOD or the HOD. So what happened is they ripped it up into 1040 today, and then they ripped it down from 1040. Wind direction is south on IWM now. These people want to go lower. They said, fuck that. Today's Friday. I'm outie. Double top. Insane double top. People don't even looking at IWM. They got fucking trapped like crazy today. IWM all-time highs, double top. Index test, QQQ index all-time high test as well. Time is 11:30. I think the most important thing to watch right now is IWM. If the Russell 2000 continues to go, it's GG's for bulls. Bulls are hoping it's going to come back. It's going to go lower and lower and lower into tomorrow at the minimum. Alright, bears are stronger. 60-40 bearish. IWM leading. The video going. $180 today, the video possible. Today's Friday. If they want to lotto this bitch, they may be doing fucking 184 to 180 or some crazy ass shit. They bounced it at 181 earlier, so it's absolutely possible. LOD breaking on IWM, they're going lower. Going lower. Bears are full control. I'm at 2.6k right now off of 2k. 1 DT puts, they're crazy. I went in earlier somewhere here at 11:20. 1 DT 2k. I got bounced on. Now I'm at 2.6k. VIX is going higher. I want Tesla to drop. I don't know what the fuck is doing today. Holding all-time highs. Index is still so holding. LOD on QQQ broke into 11:30. This is amazing to see. President at the FIFA event, as well as the market together. He looks beautiful. That's my president. Imagine, dude. This is like living in the 1920s, just looking at our great president, just in our times. Like, honestly. Oh my God. This is amazing. God bless this country. This is amazing. I'm fucking scared on Tesla, but it's okay. God bless this country. He'll be amazing. He'll be fine. Damn, they're saying it's bullish on Tesla, though. Fuck. Spike. Surely there's no way this shit holds, right? Man. Michael Burry versus Tesla. I need Burry to come in the last 15 minutes of the market or something. Tesla fucking dropping like $5 to 449, and I'll be screaming, Dr. Burry, Dr. Burry. Gap has not filled yet. We're getting there. Guys, can we get some American flags in chat, please? Some eagles, please, for our great American patriotic president. And please hit the thumbs up button as well.
Open enrollment is here.
Let me get rid of this Fibonacci level. For real, let's get some American patriots in chat, man. Gotta have some, right? I'm an American patriot. Doing my civic duties. Being a participant of the market. Thank you, Charika. American flags and eagles, appreciate you. Ka. Great country that we live in. This is literally a free market economy, you know what I mean? Never before in the history of our world has it been this live streamed, presidential live stream every single day type of deal, right? That is something. So we are living in the times of something new, something great. Yes, look at all those flags. Yes. Taco, American taco. Yes. Taco Bell, American taco. IWM today, no joke, ripping from 252 to 250s. Let's see if the thing really goes to 249 somewhere though. That would be something if it really rips down. Gap. There's so many bears here, that's the crazy part. So many bears. They are. Yo, is this real? I hope this event is like real. I'm not watching like a recorded live stream or something. I don't think so. It's the New York Fox channel, so JFK Center has to be them. IWM bouncing. 1140 LOD. There's so many bears here. It's possible that there's a possible bounce for a short period of time or something here. Or it's so bearish that they just trap bulls, gap fill, and then bounce. There's barely any cycle confirmation. There was from 1140 to 1145, and now that 1145 is here, it could reject. That's how it could be so bearish, but we'll see. Every single time the MACD coming back up, could go back down, but I mean, to think like that is very, very biased. You gotta just see what the budget is.
Mr. President, the U.S. press.
Thank you, everybody, very much. It's a great honor. This has been an honor for a lot of reasons. Number one, they've sold more tickets than any event has
Hit the thumbs up button, folks. 07.
This is great. And number two, we've done a lot of work at the Kennedy Center. It was falling apart, and now it's pretty much back, and we'll get it back within the next 4 or 5 months through construction. But you see the way it looks, and John is just telling me, who's done an incredible job, by the way. He's just telling how good a job we've done. You can look at the walls, the marble was broken, everything was a mess, and we've really taken the Kennedy. So a lot of people thought it was going to be ripped down.
There's our crazy. Oh my God.
We did just the opposite. So we've done a really great renovation job on it.
There's our
and over the next 3 or 4 months, it'll be complete, and we're honored to have it here. And it's been very special. We've set a record on ticket sales, as you probably heard already, even way before
FIFA president
the event itself. And we're working with Canada, and we're working with Mexico, and it's been a really spectacular. So far, it's been spectacular.
Daniel, says no volume. At least though, we're testing LOD, and volume could come after they cycle. So
once in a lifetime opportunity to
But yeah, we are testing LOD at least. We're not flying.
Well, 1 billion eyeballs will be watching, Mr. President. Yeah, I think even today I understand. I hear that, you know, I know we're a little late to get in there. But
chilling.
Okay. They wait. So all my friends, I guess they have to wait. But no, the numbers are incredible. Bro. I hear today's numbers are very big. I hope CNN is covering.
Today 1 billion eyeballs.
Today's numbers are very, very big.
Mr. President, what would you say to people who say that prize might conflict with your pledge to strike Venezuela?
Well, I think the Peace Prize, I mean, I settled 8 wars. I don't know that I'm getting it. I haven't been officially noticed. I've been hearing about a Peace Prize, and I'm here to represent our country in a different sense. But I can tell you I did settle 8 wars, and we have a 9th coming.
Man, we said here, right?
Nobody's ever
Someone was like,
before.
"This is the liquidity grab to go higher." And I was like, "This could be the ultimate liquidity grab to go lower."
We save millions and millions of
Everybody
lives, and
hoping,
that's
right? We said
really what I want to
here.
do. And I also want to run a great country. And the United States right now is the hottest country anywhere in the world. And 1 year ago it was dead. We had a dead country, and now we have the hottest country anywhere in the world.
Was a literal cycle confirmation with the higher time frame candles too, saying that.
And we're getting along very well.
IWM. What IWM doing?
I don't know. I think we have a meeting set up for sometime after the event.
Earlier with all these bears.
So we'll discuss that. We get
1
along
hour.
well. Thank you, everybody, very much. Were you part of any other Honduran officials?
10:42, 11:40 on IWM.
The travel pool, we're going to go right behind this black curtain.
Man, that was it. Presidential live stream.
Thank you. All right. Yes, Kate's getting the back end. They're going to hold us for a second.
That's how it felt for me. You know, the reason why I developed the system that I developed for myself is because I felt like I was the liquidity being used to be bounced up on, and I felt like I was the exit liquidity, and I felt like I was the liquidity being used to go other way, whether I was going bullish or bearish. And literally I would just go in without having a knowledge of the cycle, and I would just look at the candles and I would be like, oh, I wouldn't give a shit if this is at the top, I wouldn't give a shit if this is at the bottom, and I would literally just be like, you know, just going in on candles. Like really, I really would not be caring about if this is the top, if we were running up or something. I wouldn't care if this is the bottom and we're running down. I literally just did things on candles, and at some point I was like, bro, I'm getting fucked up on in every single chop, every single cycle here and there. And I literally sat there and realized, and I just did the mathematical calculations, the logical analysis of the chart, and I was like, so this is, you know, this is time, this is cycle, this is this is that, this is this is that, and then you just have to do that. But honestly, that's the only way I fucking learned this shit, man. It's absolutely fucking crazy, absolutely hard, but it's possible, is what I'm trying to get at, because there are, what I'm trying to say is like, it's just, I don't know, I don't know why I keep saying the word deductors too, but that shit has stuck with me for a long time. I don't think it'll ever leave, but deductors. People say it's a scalper's world, but I think it's a fucking deductor's world. This shit is absolute in the shit it does, and the absolute in the way. Alright, bulls are coming here from 11:40 into 11:50. The way things happen, man. We got Goldman Sachs YouTube now. What the shit? Got Goldman Sachs dropping videos.
I'm Chris Hussey, and today is Thursday, December 4th, and with me is Brian Dunn, who's head of America's Foreign Exchange Options Trading within the Global Banking and Markets Group. Brian, thanks so much for joining us again.
Thanks very much.
Last time you were here, it was in the wake of Liberation Day. The dollar had already devalued a lot. It was heading lower. Okay. Fast forward to today, we're a little bit more sanguine, aren't we? Talk to us. What's going on with the dollar now? Is there more lower to go, or are we done with all that?
Yeah, so I do think that there's further scope for the dollar to sell off in the first half of next year. just sort of taking stock of where we are, I think it's interesting that the conversation we had in late April of this year was very much focused on developed market currencies, so the dollar versus things like the euro or the Japanese yen. And fast forward these 6-7 months later, and the DXY, which is a trade-weighted index of the dollar, so accounts for most of those currencies, is basically unchanged it's within 50 basis points of when we last spoke. It's gone lower, it's gone higher, but at the end of the day, it's basically been unchanged. What has moved instead has actually been the dollar against higher yielding currencies. So the best example of that would be Brazil this year. Brazil has appreciated about 17% year to date in spot returns, but because of the high nominal and real interest rate carry that it has in total returns, it's appreciated almost 30. And most of that has come after we spoke, so after Liberation Day. We think that there is scope.
I think we need to check
really
the SPX chart,
for further dollar depreciation.
What a pop today.
I think there's a couple of different things depending on the profile of the country that we're talking about that could drive it.
Let's walk through that because one of the other trades that came in here was that
entire
debasement trade
we've been
that
chopping
seemed
up,
to play a little bit more to that idea that you were going to have. The developed market currencies, some developed market currencies are going to emerge as a real option for the dollar.
Absolutely.
Is that part of what drives this lower? What is it?
I think it is. I think that has largely, stalled in the last couple of months on account of the fact that interest rates in the U.S. have stopped going lower. And so the debasement trade for me was really always a concern about fiscal sustainability, really across the globe. You started seeing things like crypto, things like gold start to appreciate particularly rapidly around Liberation Day, actually. And that was mostly a U.S. fiscal sustainability concern.
So
where you really got a kicker when people started talking about the debasement trade was when we started to have worries about UK fiscal, French fiscal, as well as more recently, we had a surprise, at least to markets, it was a surprise result in Japanese elections where Takeichi has become the PM.
This is the best thing to do.
And is very likely to
looking at the market, looking at what everything's doing,
fiscal policy,
having an understanding of what's going on. Looking at SPX alone, it looks like the bitch about to fly, and looking at IWM alone, it looks like it's about to reject. They're doing everything, and they're fucking cycling and chopping.
Assets like traditional.
I have an understanding of that as well.
But as crypto becomes more accepted asset class within the financial community, that also saw quite a large rally.
Rotating at all times.
Going back to the dollar again, then, what do you think could be the big drivers of moving that lower if it's not the debasement trade?
It's really data out of the U.S. I mean, we went through April and May. I think we sort of had a trough in the dollar, at least in developed markets around June of this year. And then what we've had is a relatively quiet summer, a set of data, particularly out of the U.S. that has been what I would categorize as less bad than expected. And for the better part of the last 2 months, we actually haven't had any U.S. data. So this idea of the dollar being somewhat in purgatory, it has actually been true really for the last couple of months. The difference now on the go forward is that we're very unlikely to have that. We have two things that are very significant.
It's
one
so
being
crazy.
the resumption of U.S. data, and labor market has been particularly in focus. And then second is we're going to get an announcement of who the Trump administration is nominating to be the Fed chair, and I think that has the potential to have very significant knock-on effects
bears,
for, let's say, the next year of Fed policy and therefore the dollar.
All right, let's pivot to the Fed, because even before
hope on up there again, hope on VUF flip again, but also
to the Fed on what they want to do with rates, and that happens.
See if they're going to gap fill. They're cycling right now.
What's priced in? What would surprise you?
So I would say
the cycle literally just pumps.
The market
and then
has
figure out, pumps and then
figure
out,
again.
pumps and then
I think
figure
it'll
out
be interesting to see what
that's why it's so hard. The market
descent,
feels so hard because the market
is
literally just like pumping
made.
and then figuring out what to do, pumping and then dumping and then pumping and then dumping and pumping and dumping, and like nobody knows where it's going to fucking stop, where it's going to stop.
It's no secret that the market was quite surprised.
Everyone's getting stuck and trapped at the max. People are maybe in the middle somehow making it alive and just getting trapped at the max.
Of the risks around the labor market versus what has been sticky inflation. And that was different from the communication that we've had from him really since Jackson Hole.
Bear trapping.
We still haven't gotten much data since the last Fed. And so I would say the expectation is that they will cut. We think that the Williams speech from either last week or 2 weeks ago was enough to signal that the committee is going to decide to cut. But I think the communication from Powell in terms of how he views the balance of inflation risk versus unemployment is going to be very significant for front-end policy. We still have less than a 50% chance of another cut in January. And that will, I expect that to move pretty significantly based on the press conference.
Makes sense. And will a Fed cut be good or bad for the dollar?
Typically speaking, realized,
we'll draw the wind direction
actually
now.
Doing the cut, so what we call realized cuts, does tend to be negative for the dollar. With that said, it's basically priced. I mean, the market has high confidence
today.
That will
what a rally
I think what will be more impactful is the communication around January and the path and the dots for 26.
All right, what's the trade?
It is literally
the big difference now versus, let's say, 6 months ago is that it's not just this dollar trade. Like, not all dollars are created equal at this point.
There's no other cycles other than that.
The highest confidence that we have is that China will continue to appreciate their currency over the course of the next couple.
No other cycles other than that. Just up, down, up, and then figure out. They're still having the president World Cup draw or something. Holy fucking dump, man. Insane dump, right? Look at that shit. I'm telling you, what the fuck did I say, right? Who the fuck remembers me saying 3 minutes ago? The market's literally been pumping and dumping, and nobody knows when the fuck this shit's gonna not fucking pump. That... Man. That is crazy. Look at this entire day. Just pump and dump, pump and dump, pump, dump, pump, dump. Nobody knows where it's gonna fucking stop. But wow, this is purely on IWM. This is purely on IWM because SPX and QQQ looking like it's gonna fucking fly to moon, rip up to HOD, flip VWAP, and then IWM coming in with the purple box and saying, "Get the fucking shit out of here, we're chopping." Going back lower. Oh my lord. That is absolute. Absolute IWM. IWM in control. IWM is in control here. IWM is in control because SPY and QQQ is the ones following right now. They're the ones following, not leading. Okay, realize that before it's way too fucking late is what I'm trying to say. IWM is fucking leading the market today. QQQ and SPY popped up to all-time high tests because of IWM laggardly, not the other way around. SPY and QQQ is following IWM, basically. Not IWM is following SPY or QQQ. Insane rejection happening on SPY here. Off of 12, time is 12:05 in 5 seconds or 50 seconds. Bears are crazy. They want to go dump off and go gap fill. NVIDIA trapping daily on the green candle because the green candle is the horizontal sloping support of the wedge that they broke down in the beginning of, actually not the beginning of, the entire month of November. And then in the beginning of December, they went below sub 180, sub 180, back above, and then now we're up, and then now they're bull trapping everybody above 180. Just like how they bear trapped everybody at 180, and 180, 182 somewhere is just like the level they want to fuck around and play around with and just trap everybody in. Tesla had a number like that back in the day. The number was 437. We're way above 437 right now, but we're figuring out what the market gonna do here. If it dumps, this is the number to watch. 430, 435, 438 basically on Tesla. Look at IWM right now. Looking exactly the same. Desi Vanilla said that's bullshit, but Nvidia is shitty stock. Depends on who you ask. You know what I'm saying? If you're someone like, I'm not gonna name names, but hypothetically speaking, like Kathy Woods or Dr. Burry, that is able to go up and down, right? It's not bad, but if you're somebody that doesn't know what they're doing, and you know, somebody that's just coming to NVIDIA, and somebody that's just trying to put in NVIDIA money and then see it go up, or like NVIDIA down or NVIDIA up and see what happens, they get fucked on the daily because they have absolutely no idea what's going on, you know? Because even having levels marked like this, even knowing things like this, you know how hard as fuck it is to be like, oh, they're gonna pop down this to, oh, dude, absolutely hard, right? It's really when it's happening, you could be like, oh, that's what they're doing. Oh, look at this shit, 182, 180, 180, 180, like this isn't. But people have no idea. They just look at price. They just look at more. They just look at the going down more. And then at some point, it just gets like an alligator, bro. It's just what it is. But I don't know. There's no drawing. They're saying they're going to draw, but no drawing here going on. That's what I realized. Like, honestly, that's what I realized about a lot of the shit. I have no idea what the fuck I'm doing, and I'm trying to think of I'm doing it, and then I realize if I'm going to do something, I really got to figure out what I'm doing. And that was what changed everything. Dedicating to figuring out what went wrong. When things go wrong, it's either
confidence
one of
numbers.
three
Joanne
things.
Q joins us from the University of Michigan,
where
she is the director of the surveys of consumers there.
Psychological,
looks
emotional
good,
based
Joanne.
mistake.
Do I have that wrong? You know, just on the headline, the number beat expectations.
You're on the wrong side of probability.
Reading, and inflation
Those
expectations
are two things you could fix. Three things. The third thing is just something you got to understand and just move on from somehow, right?
Seeing some
but that's also
improvement
psychology
from
as well.
November.
But
I think the inflation expectations
when
numbers
things
are
go
definitely
wrong, it's
moving
either three things.
in a favorable direction, both in the short run and the long run. So that's definitely welcome news. We also saw a little bit of an increase in overall sentiment, but it's not large, and we're still at very low levels historically speaking. So consumers are not feeling confident about the economy, but they're certainly feeling no worse, and they are starting to
I could deduct
feel a little
and
bit
be
of
like,
relief
oh, this is gonna go blah blah blah. I could be wrong, but technically I'm trading in the pivot point, so like I'm having a process-based mistake, right?
Don't get me wrong about
Let's
that.
say if I get
However,
reverted on and
they're
I
not
don't leave,
feeling
and then
as
I just stay and get
pessimistic about
reverted
it
on,
as they were
reverted
in
on. That's a
previous
what? That's a human psychology-based mistake too. That I'm going into 3/3, I'm getting trapped, and I'm not leaving on cycle confirmation. Let's say it's like
how much does
there's
follow through into actual consumption decisions?
One of the things that I think is important to look at are differences between now and the 2022, the height of the inflationary episode right after the pandemic. Now, historically speaking, when people feel confident about the economy, they tend to spend more. When they feel less confident, they tend to spend less. But in 2022, they felt very unconfident, but at the same time, they were willing to spend. The one key factor back then was that labor markets were incredibly strong.
direction of the wind only changes if the pivot points break.
So even though they didn't feel great about high prices, they had the strong incomes to support strong spending.
It's either option one,
right now
break
we're in a
the
completely
roof.
different
Option
situation
two, stay
where
in between the two pivot points, or option three, break the floor.
We have more
At
than
all
2/3
points
of
of the
consumers
market, the
telling us
market's
that
going to make people
unemployment
hope
rates are going to
on
rise
blah, blah,
in the
blah,
year
blah, blah,
ahead.
blah, 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 blah,
So
not paying
the
attention to
strong
cycles,
incomes
but
that
that
would
is a
normally support
midpoint hope.
spending
We're
aren't really
going for
there
the
now.
floor.
Now, higher
LOD
income people
testing,
might
yet
still be
again,
willing
this
to
is
spend,
bearish.
but middle and lower income folks,
is
they're
more
likely to be
bearish
looking
here.
for value.
When you say middle income, I would think you're talking about the 50%, but I'm guessing it's more like the 80%, right? I mean, how does this break up in terms of quintiles?
There isn't really a threshold here. It's sort of both an intersection of income as well as wealth.
All right, with contracts on zero DTs reset with the MAC, the RSI reloaded,
stable incomes.
LOD
they also
test,
have
LOD hope,
large
again.
portfolio values with high stock market
This
performance this year, supporting
LOD
spending.
test, LOD hope,
Folks
LOD
with
break,
smaller
most
portfolios
probable
or no
incoming.
portfolios at all, or feel like their jobs
With
are
the MAC, the
potentially
RSI
threatened
reloaded
over the next year.
on
They're the
IWM
ones
alone.
who are going to be less
I said
willing
people are going to get
go
bullish
out on a
looking
limb
at
to spend.
SPX.
They may
People are
still
going to get
be willing
bullish
to
looking
spend
at
while they do have their
QQQ.
jobs, but they're
The
likely
real
going to be looking for
deductors,
value
the
and
real
being choosy with where they
analysis,
spend
the
their
real
dollars.
When you
smart
do look at the
people are going to be looking at
distribution of
IWM
income, though,
because they
Joanne,
understand
I would imagine that the mean is way
IWM has
higher
been
than
leading
the
all
median.
week. They understand IWM has been
how
leading
far up
today.
is it?
They understand
I mean, that is always
what's
the
going
case
on
because
here.
the distribution of
What's
both
going
income and
on
wealth are
is things
highly
are not
skewed, and
bullish
that's
on
not specific to
IWM.
this
Things
moment.
are
That's been
actually
that way
bearish
pretty
on
much
IWM.
since we started collecting data nationally about income.
IWM wants to go
So
lower.
it is true
Market is
that
holding
median income is much lower than the mean, and the folks at the top just
Tesla
have a
is
lot
holding.
more economic size to
Nvidia
spend,
is
and that's part of
holding.
the reason why with aggregate spending,
Meta, Apple, probably all
it's really the
holding.
high income, high wealth
SPY
folks
and
that generate the
IWM
lion's
going.
share of that.
Small caps
All right,
are
Joanne,
going.
great speaking to you. Thanks very much for your time. And it was a valiant effort over the weekend in the big house. A lot of snow there. It's a tough team to take on. At the beginning, I was a little worried at the beginning that Michigan was going to have it, but being from Columbus, Ohio, I'm not unhappy about the outcome. Joanne Shu there.
On the video, folks. Thank you so much. Thank you very, very much.
Meanwhile,
I want to see.
We're back on Morning Trade Live. Let's take a closer look at 30%, an all-time high. Shares plummeted more than 50% over the next 4 months to its tariff-induced April low. Since then, we've seen a move to the upside of more than 110% and a 30% gain since mid-September. So I think it's fair to say that shareholders have been on quite a roller coaster ride. Let's go inside out on Tesla. Joining us now is Matthew Tuttle, CEO and CIO at Tuttle Capital Management. Happy Friday to you, Matthew. Let's start with Michael Burry's points that he made earlier this week, because that caught a lot of attention.
We have
talking
80
about
people that have not hit the like button.
Is
thumbs up,
ridiculously
please.
overvalued today
I
and has been for a long time. Also talking about
thumbs up
dilution
before you
of
head
shares.
out,
What do you think of those
the
comments?
algo range can pick it up.
Yeah, you know, he's got some halfway decent points, but remember, you know, he's a guy who's called 50 of the past 2 bear markets. You know, I think if you're
Bears are here,
looking at
pushing
Tesla
lower.
purely as
LOD
an EV
is about
company,
to break.
then
LOD
he's
is
right.
testing. Divergence is
But
there
if you're looking
on
at
SPY.
Tesla as kind of at the forefront of
Trying to
physical
create divergence
AI,
on SPY
then really the
QQQ.
sky is the limit.
There is a divergence
you know,
on
it's
SPY and
one of those
IWM, but that
stocks,
doesn't really
you're either
matter.
going to love it or you're going to hate it, which is why we have 2x ETFs on both sides of it. But, you know, personally, I'm not worried about the stock-based compensation
Thank you so
here,
much.
because I'm looking at this
10
as
of you guys
really
that have just hit the
something
like
that
button.
has
We
the
have surpassed
potential to
100.
dominate
Thank you so
physical
much,
AI.
guys.
I don't
Let's
look
just
at
push
it
it
as
up to
an EV
140.
company.
Right, there's 70 people here.
Yeah, I mean,
I can
obviously,
just push it,
Musk
mass
has to
push
meet
that
some
right
fairly
now.
ambitious targets there, you know, particularly around the robotics, but also on the deliveries of these cars. I mean, how do you see things as far as the valuation is concerned? Is this a car company or a tech company?
To me, it's a tech
RSI
company.
reloaded
You know,
on
I
SPX.
look at this. You know, the biggest mistake I made in
IWM
my
bounce
investing
trying
career was in the 90s,
12.10.
looking at Amazon as a book selling company. So I look at Tesla as having the potential to really be at the forefront of a lot of AI. Oh, and by the way, they sell electronic vehicles. And Elon Musk is not a guy that I would be looking to bet against in any way, shape, or form.
And they're always coming off with the wildest videos right before Tesla does something, every single time.
For instance, which is typically an electronics company that's now got into the car business, and now you have XPeng, which is sort of trying to take on Tesla as well with regards to the whole humanoid robot type area as well. I'm just wondering, with respect to what we've seen as far as this bumpy ride for shareholders throughout 2025,
our poll of the day, guys. If you think LOD is coming, say LOD. If you think VWAP is coming, say VWAP.
A lot of stuff going on with that guy this year. I think next year, I think he got the message. I think, the board, probably someone tapped him on the shoulder.
In the WhatsApp group now.
And I think he got a lot more than he bargained for getting into politics. So, I expect a guy who's going to be laser focused on his company. And, I think, obviously it depends on the market, but I would expect a lot less choppy year if you were a Tesla shareholder next year.
Coffee Table says LOD. Lewis says LOD. We have 4 people voting VWAP. 4 people voting LOD. Now 5
I
for
liked
each.
it better a couple of weeks ago.
4 people voting LOD in the YouTube chat. Ara says LOD.
It's gone up a lot. I'd much prefer to buy the dip.
More likely LOD and gap fill.
I still like it here.
IWM.
As long as we get that Santa Claus rally. I'm watching the Fed
Very
next
weird
week.
Candle coming.
I think that's going to be really interesting.
Able to go.
But
like the
if
RSI
Powell plays ball with the market, then yeah, I like Tesla here.
So many people saying LOD though, insane. 9 people voted LOD, 5 people voted VWAP.
Had been hoping for. Matthew, always a pleasure. Thanks so much for joining us on this Friday.
Wow, everyone's saying LOD in the YouTube chat. David LOD, Latish.
Let's trade it now with George Trap. Senior Markets correspondent.
What does that
Very
mean?
good morning to you, George.
Iran says LOD, Moving says LOD, Oscar says LOD, D-Flower says VWAP. So 1, 2, 3, 4, 5, 6, 7, 8, 9 people LOD versus 1, 2,
it's actually quite volatile. With that said, if you look at the trend
VWAP
relative
trap.
to where we were last year,
10 people says LOD in the YouTube chat. 9 people says LOD in the WhatsApp group, and 4 people says VWAP in the
these levels also
WhatsApp
correspond
group. So it's
to areas
very
on the chart
heavily
going back to October,
skewed
early October, and
LOD,
actually
15
early November
versus
as
5
well.
almost.
So with that
16
said,
versus 5.
the stock has got some momentum going for it right now in the short term. There could be essentially a
75%
stall out at the
versus
480
25%
level in
of
the
the
short term, but
population. That's
nonetheless, maybe looking at the
crazy.
intermediate term going out. To
There may be a bear trap here
there's
then.
still
I don't know.
still
That's how I
positive and bullish
think
tones
candles are slow
for
as shit.
Tesla. So what I'm going to do in this case, in the
That is so
context
crazy,
of all that,
man.
is structure a long
There
call
may be a
diagonal
trap
spread.
here at the LOD
It's a
at the
bullish trade,
most bottom.
with that 480
many
in
bears
mind
here.
or taking into consideration as well. So I'm going to sell
I'm thinking
essentially
65,
the
70%
December
of the people
2-week
that said
expiration
LOD or all those bears are
480
at the
call
minimum
option. I'm
involved
going to
in
use the
some way.
proceeds,
So
which is
maybe
approximately $8 to
that's why
finance
maybe
in the money $455 call option, but that expiration is in January with 42 days. So I'm selling the 14-day expiration out of the money, buying an in the money 42-day. Altogether, this
Crazy.
is costing about $23
I just want a little
share,
spike down.
or $2,300 a contract, which is quite expensive considering, again, the stock itself from a price level.
Everyone in the
is
world
also
waiting for
expensive.
gap,
So
and
the
they're
whole
waiting
objective of
for
the
gap.
trade is
I'm up
bullish.
$250.
You have to
I
hit
might just leave on one DT right
That's your
now.
break even. If you do have that January position being held. The only thing about this position is that you're capped for the next 2 weeks to 480.
Fuck.
So you won't participate beyond that. Again, if you see that
candle.
level hit with the December
I
expiration.
don't even want gap
but if
fill.
the stock stalls out at 480, that's the whole premise
I
behind
just
this
want
trade.
LOD breaks
You're
to
going to keep that
spike this
$8,
bitch.
and then essentially the January position becomes unbounded and has unlimited profitability.
Okay, a good example trade for us for Tesla this morning. As Matt Tuttle just said,
Look,
I mean,
Tesla
shares
I just need
are
a
expected to be
brief
a little
1 minute
less bumpy
dip below
heading into
685.
2026,
Like,
but
bro,
let's
this
see.
is
I
not
mean,
the only
anything can
fight.
happen. But, certainly, hopefully, a smoother ride for shareholders.
He's
which
saying
have
the
been on a bit
fucking
of a roller
same
coaster
shit
as
I'm
mentioned
saying
throughout
in
the
my
course of,
head.
This year, no doubt,
Oh,
with some of the
hell
tariff-induced
nah, bro.
momentum too. Thanks so much for the example trade for us this morning, George.
This guy's saying the fucking same thing I'm saying in my head, bro. That is not good. That's actually comedy.
The broader markets, and we have a Fed meeting next week, and there's a lot going on in rates as well. So let's bring in Rick Reeder. We have a ton of economic data coming out at the top of the hour, Rick, and normally we would have also jobs day today. That's going to be pushed forward a couple of weeks, or back a couple of weeks, I should say. And this leads me to my main question. Why would the Fed meet next week if they're not going to get the big jobs number out until after their meeting? Why not delay your Fed meeting? You know, break up your precious schedule, get a little closer to Christmas. I get it. Everyone wants to be home for the holidays, but isn't the U.S. economy important enough for them to do that?
It's a great question, Matt. I mean, listen, I would say one thing. I think there's not a lot of ambiguity about the velocity of hiring in the United States today. I mean, you see, obviously, we got the ADP data, the claims data we got yesterday, but that's pretty ambiguous because of the timing around the holiday. But boy, you see it in terms of where companies are going. I mean, literally every day, and you see it, by the way, on the backside of M&A.
What the fuck is this?
I mean, to me, it's pretty clear that we don't have any hiring velocity today, and that the Fed. I think that it's a pretty clear. You got to get that funds rate closer to 3%, if not at 3%. And so I think you've got enough data to do that, and you don't have enough data that suggests that inflation, certainly over the intermediate term, is accelerating. So I don't have any issue with the meeting. I mean, I think they can move closer to 3% sooner. So and I think you got enough data to allow you to do that.
All right, so you think it's a lock, and it doesn't really matter. They might as well cut now if they're going to cut.
By the way,
I
don't think it's a lock. I actually think, you know, when you look at, we're going to probably have some dissents. You probably have a disagreement. I think it should be a lock. Listen, I think the fact that we haven't heard anything otherwise, that they're probably going to go. But I definitely don't think it's 100% that they're going to go.
All right. That's interesting. So you think we're going to see more dissents? Does that continue, Rick?
We got an all-time eye test right before
FOMC is done, and the president puts in whomever his pick is for Fed next year, that we're going to see less dissent, or is this a new feature of the Federal Reserve?
So I don't, you know, personally, I don't think it's a crisis that you have some disagreement. You have some independent voters, you have some independent people on that Fed.
People that were saying all-time high test, people that say all-time high test,
so
they were right.
Sure that
we just got it today in the morning.
Structural problem. Listen, I think that to me the data is very clear that inflation is a bit elevated today, but productivity and innovation will deal with that, and that is so clear to me. And then the flip side of that, productivity and innovation are creating an incredible lack of hiring for ordinary jobs, lower skilled jobs, et cetera. And so, you know, how people interpret the data in the near term, I don't think it's a structural issue that you have those dissents. I just think going forward that, you know, we're going through what I think is the most extraordinary industrial revolution we've seen maybe in a generation. And I think the offtake of that is pretty clear in terms of what it means for jobs and inflation.
Let's talk about the next Fed chair. I mean,
do they not want to go lower?
Reports suggest that Kevin Hassett
or what?
has won this contest, and I wonder, as someone who runs one of the most important rates businesses in the world, what do you think about Kevin Hassett as a pair of hands to run this Federal Reserve?
You know, I would say that I'm not going to comment on any individual. You know, the thing I will say is, I think this Fed will, you know, continues to be one that will analyze the data. I think the data is clear today in terms of where it's going. You know, I think the thing that we've got to do as market participants is think about not just what are they going to do with the front end of the yield curve, but what do you do out further on the yield curve? You know, there's a bunch, you know, including with the name you mentioned, how people think about how does the 10-year react, how does the back end react to that. You know, I think one of the great expressions of the market today is I actually don't think that rates are going to be that volatile out the curve going forward. And so, you know, one of the great expressions of the market today is selling volatility in the rates market, which has been pretty good trade. And I think will continue to be. Mortgages, agency mortgages also being an evolution of that.
Mortgage rates and consumer borrowing costs are still high by recent standards. It's part of the reason, I guess, you want to get the terminal rate at 3%. But companies are telling us every day that tariffs and policy uncertainty are more important than the Fed funds rate to their business. And we talked to economists like Diane Swank who say that especially consumers at the lower end are not going to be helped by a rate cut. Anybody in the subprime borrowing area, which is massive, by the way, is like the bottom 2 quintiles of the country. Are we in a world where rate cuts just don't pack the same punch as they once did?
That is a long and complex question. So I will say the answer is yes. The short term, the overnight funding rate is not nearly as effective a tool at moving monetary price, at moving the economy as it used to be for so many reasons we've chronicled before. Service-oriented economy, people borrow out the yield curve. CapEx is not driven by the interest rate today; it's driven by
what the fuck came out of my mouth? I was going to say there's no momentum for bulls here since.
However, long-end interest rates do matter, and how you fund out in the 5 to 10-year part of the curve particularly do matter quite a bit.
I'm like, why isn't it going?
Stability out the curve is so profoundly important.
No volume.
To say, though, the comment about getting the rate down doesn't help low-income people is not true. The truth is there is a transmission mechanism that even if you move the front end of the curve down, as long as the curve doesn't steepen that much, and there are ways to manage that. What you do is you create velocity of housing,
there's so many
mortgages. You get the
goddamn
mortgage
bears
rate down, you create velocity of housing. It allows people to unlock value of their house. It allows labor mobility because people can move. There's so many, and by the way, whether it's credit card financing, whether it's auto loan financing, to say that it doesn't help to get that rate down, I think is, for particularly the place that it does help, housing, low income, small business, and that's what needs the help today.
Mortgage rates have come down. I mean, the 10-year is at 4.1%. This administration has been steadily moving it lower. Where do you think we see the 10-year, say, at the end of 2026, since the market believes that the Fed will cut rates to 3% or even a little bit more?
One or the other.
So, man, I think the key is, so the answer is I think it's going 3.5 to 4. And I think the key will be maintaining stability in and around 3.5 to 4, because if you get to 3.5 to 4, you get the mortgage rate into the mid to high 5s. If you get the mortgage rate down to the mid to high 5s, you see it today. Why is existing home sales picking up? Why are you seeing, we see it in prepayment speeds in the mortgage market. You see high coupon mortgages that are widening relative to low coupon as a result of the fact you are starting to see some velocity around housing, existing home sales particularly. So if you get the 10-year, which I think can happen in 3.5 to 4, you get the mortgage rate in the mid to high 5s. And by the way, I don't think it has to go much lower than that. That's where you get what I think is a much more effective operating ecosystem in the economy.
How do you control, or how does the Fed, as you said, focus on rates out the curve? We have a viewer writing in who wants to know what's the mechanism to do that.
We're Phoenix Energy, a family-owned oil company focused on unleashing American oil from North Dakota.
Many. So, if you are the Federal Reserve today, you have, when people say they have one tool, the Fed funds rate, I find that incredibly superficial. The handbook at the Fed has much more complexity to it. You can use the balance sheet. You can use their parts. If you use your voice, a lot of what Mario Draghi has done in the past, where you think about things like, gosh, if the amplitude of the curve is at a certain level, if the yield is at a certain level, you think about the size of the balance sheet relative to the duration. And you think about how you can be effective about using the long end of the curve. There's actually not that much, to get too technical, duration, DV01 out the yield curve, that you can be pretty effective at managing that relative to the front end. To your question, your point earlier, front end, the overnight funds rate is interesting, but it doesn't, moving at 25 basis points every 6 weeks, doesn't do a hill of beans for really, until you move it to where it needs to get to. Unless you're moving it quickly, it doesn't really do that much. But managing further out the curve, where corporate finance takes place, mortgage finance takes place, structured finance takes place, that has real efficacy to it.
I got to ask about BINC. You've outperformed the market universally, 1.6%. 1.6 times the return, 1.8 times the return of the ag. So I'm just looking at the ETF that you run here. How have you got BINC set up for the Fed cuts, the path that you expect? And I wonder how the massive investment in AI, the huge borrowing that these hyperscalers are doing to build out this global network, how does that touch BINC?
So yeah, it's a great question. Thanks for asking. So I'd say a couple of things. My job literally is, I'll say there's something I was looking at it the other day. Do you know in fixed income there's 1.4 million unique securities? So you think about all the tranching of the debt, publics, privates, et cetera. My whole job and what I'm trying to do with, oftentimes what I find with lack of wisdom is all I'm trying to do is figure out like what is the best value across the markets globally. Where do you take interest rate risk? Where do you take yield risk? Where do you take convexity risk? So all we're doing and trying to do for people, because fixed income is pretty complex, is use our teams around the world. So today, do you reduce a little bit of your investment grade credit? Because to your point, there's going to be a lot of AI financing that will come. We've seen it in the last few weeks. Do we need to own as much investment grade credit at tight spreads? Not really. It's not that exciting. Agency mortgages are more interesting. European high yield, European investment grade, we're not seeing as much of that AI, and the growth is moderate, and you get a cross-currency benefit. That's exciting. Having some interest rate exposure in places like Asia or parts of the emerging markets. So, I don't know, the idea being just try and move around dynamically to where the best relative value is around the world. Today, credit is just okay. We still own, we still like high yield. We've reduced some U.S. Just because it spreads have come in a bunch. But we're just trying to create, if we can create 6.25 yield for people.
You guys should really remember this, though, how we are playing in this range, 1140 to 12, right? You see how the wind direction is saying the wind is either north or neutral from this point, 1140, until the market decides to break the floor or not, right? And we are not deciding to for literally 20, 40, 30 minutes. So this is all a part of the market. I've all seen these things happen for a long time. I've all seen these happenings to bear trap. I've seen these things happen to bull trap. Where we are exactly in this moment, things are different every time. So please remember what's going on. Please remember the visual chart of what you're seeing. Draw it on your chart yourself and just experience it, man. This is why I send charts in the WhatsApp group after the day's over too, because literally you need to remember why and what. That is why all this shit exists, to remember.
On for this entire year,
Okay,
right? We thought that
environment where
equities,
people
we thought
do
that
not
equities were
remember,
going to be able
in an environment where people want
power
to forget,
through
when an
a lot of
environment where people just
geopolitical
want
risk.
things
We
to
added
be
to
easy and
equities
la
back
la la,
in
they don't give a
April
shit and they don't
of
remember
this
shit.
year.
You need
So,
to
we've
make it
had
hard, and you need
the
to
benefit
remember,
of the
and
wind
you
at
need
our
to
back.
enjoy the process
I do
of
think
that.
that the Fed's likely to cut. I think that you've got the labor market. Looks like it could probably use some relief. I think consumers could use some relief as well.
I'm expecting a spike candle in the next 15 or 15,
enough in the pipeline
5,
from
10,
the data that
15
we
minutes.
have that says that the Fed could cut. It may be a hawkish cut,
I mean,
where they
if
say
not, then I'm going to get
we're
trapped.
going to cut,
But I mean,
and
I'm
this
going
may
to
be
leave
it
if
for a
not.
while, or it may be
That's what I'm trying to do.
more of a dovish cut,
I'm
where
in
they
one
say
DTE,
we're going to cut and we're going to be
$300
data
on
dependent.
2K.
I think that's what the market's going to indeed going to
2.3,
react to.
but
But
it's
remember,
just
in 2026, you're only looking for maybe
fucking waiting
3
here for
cuts. So if you
$300 to get
another
trapped
one
for
or
another
two,
4,
the
or
market
maybe
taking
revert
out
is retarded.
one isn't
Waiting with all
necessarily
these
going to
0
cause a lot of
DT bears
damage.
too.
Paul, the phrase data
I'm
dependent was a
speaking as a
drinking
1
game
DT
for
bear right now in the
2025.
3/3.
What should the phrase be for next year?
It's going to be who the next Fed chairman is. That's going to be the big flashpoint.
So how do you handicap that? Because I guess there's some parlor games out there about who it's going to be. Mr. Hassett,
I don't
Mr.
play
Besson,
big
I don't know.
with 0 DT in the
You guys care
3/3.
about it
That's like playing
that
with
much?
my
Well,
life.
of course we care about
Okay.
it, right?
I
The
try
Federal
to do
Reserve is
0 DT in
the
the
central
1/3,
bank of the
2/3,
world.
and
It's
I
a big
try
one
to
for
step
us.
out of the
We
way,
don't
or I
necessarily
do
position
1
our
DT in the
portfolios on
3/3
who the
or
next Fed
4.
chairman is going to be.
I don't even
we
like
know that
doing
the Fed
fucking 0
chairman,
DT,
whenever
1
they
DT.
come in,
Like sometimes
they're always tested by the market.
I want to do
We've
a
seen
weekly
this
setup
time
too.
and
It's
time
just
again
like
over the past
to see
8
a
Fed
setup
chairmen
and
that
to
have
set
been in
up
place
emerge
since the
completely for a weekly or
1940s.
monthly or
It's
week
either
out trade
because
is
they say
actually
something
rare.
that the market gets
Takes
misinterprets.
something and it
There,
builds. Like the
no one
market
knows
takes
exactly what their
times to
policy
build.
is.
Like
It's,
that
they're going to be able
IWM
to
running
corral the committee.
7.3%
So we
one
know that
week.
there'll be
It
volatility
only
around
happens
it, but I
because
think
it
the
went down
earnings
for 3
support for
weeks in a row. Like
2026
it's
is
just
likely to be
setup
strong
is there,
enough
and if I
that
don't
it
get
will
in the
probably
1/3,
present a buying
2/3, I don't
opportunity.
want to
Burry
risk it.
and
I don't
this
want to
is
rush
Roy
myself
across
to
this
fucking be
nation.
hurt
Good
in the
morning, the way you
3/3.
listen to
I
us.
want
Good
to take
morning,
it slow. I
92.9
want to chill
FM
the fuck out.
in
I want to leave.
Boston.
I want to come back
Good
later
morning, and Hartford,
and get a new
Connecticut as
mindset
well
of
at
going
Trinity
higher or
College.
lower, and I want to target the
You know,
1/3,
I look at
2/3.
this, folks, and I want to give you a vignette because what
Time
Ms.
of
Reinhardt
turning
just
into
said
the
is really
3/3 may
important.
be
But I do not want to play in the 3/3 ever. People forget about the 3/3. 3/3, the prices go higher, the prices go lower. It emotionally gets us feeling. It emotionally gets us going like, oh yes, or oh yes. Well, it's just we have to understand that shit is a part of the game, and that shit you need to love and also fucking stay the shit away from, because it is literally retail shit. So knowing that, knowing all probabilities and knowing things are so much better than not knowing anything, of being clueless, of being unaware, of just thinking about candles, having no care about cycles, having no care about time confirmation, having no care about emotions, having no care about 1/3, 2/3, 3/3, whether you're the early adapter or the early innovator, or whether you're the laggard, right?
Will have an effect.
That is something that is absolutely
a lot of weakness in the U.S. dollar this year.
It's going on
international
all around.
Equity markets.
Look around.
It means that places
look
like
around, not even this
the
community.
Euro
Look around in every fucking community.
Lot of strength. That tends to be
people don't even care, because that's just how some YouTubers want that type of shit. And they just want like
their currency.
more and more and more. I'm pretty sure the guy pots 200 views at least. But I'm just saying like more and more like that. But I'm dude, this is very dangerous.
And I think you can't underestimate that. It's more than a parlor game. You have to watch it closely. But I think it's one of several things that we're watching over the course of 26.
You mentioned earnings, Barbara. We've had really good earnings in the third quarter, good earnings in the second quarter.
Yeah.
Is the earnings outlook enough to support this market? Because it's not cheap, this market.
No, this market, unfortunately, is not cheap. But even if you don't get any multiple expansion over the course of 2026, you're likely to have, and this is if estimates get marked down, you're going to have 10% earnings growth, right? Bull markets don't die when you have earnings growth this strong. Earnings peak out generally about 2 years before a bear market starts, and bear markets get slaughtered by the Fed. I have the Fed still cutting interest rates. So while I realize that valuations are at nosebleeds, I don't think you get much in terms of multiple expansion, maybe even get a little bit of contraction next year.
All right, I'm out.
But I would say that the earnings are going to support the overall equity market.
You and Gina Martin Adams are on the same page. Gina Martin Adams looks at HB Wealth Management. And the heart of the matter is those earnings and even the revenue oomph up top comes from an ability to sustain margins. I don't hear anybody talking about margin erosion.
Yeah.
I mean, is it even within the thinking?
Yeah. Look, some of the lead indicators that you watch on margins, they did come under some pressure earlier this year.
I joined 1DT 2K somewhere here.
So
I sat through the cycle. But the wind direction was south. MACD was going south. It just reloaded. IWM was south. Broke the floor, broke the floor.
And that will make year-over-year comps, at least for the first half of this year.
They're most likely going to go gap fill, but now it's getting more risky as more bears come, and as new money bears join, because now they're the laggard, the 3/3. Those people are now finding out, people that were new, people that already knew,
what screens well for you guys these days? Because it's easy for us to fall back on the AI trade because it's such a big trade.
I know.
And it's worked so well for many investors.
This is the 3/3 bear cycle. Big
picture.
The bulls are getting trapped at the tippity top today.
Look, certainly, I think the emerging markets have had. They've been on their back for the better part of the past
bigger cycle inside, smaller cycles inside the medium cycles, inside the bigger cycles.
Diversification isn't necessarily a bad thing at this point. You can diversify.
Let's see where this goes.
In EM, I think you've got a lot of good strength.
But this I called out, right? I literally called out SPY and
manufacturing. Push into China. There's green shoots in China at this point, so that isn't a bad place to be. And I think also you can diversify even down into some lower cap size in the U.S. and you'll probably still be able to do well in 26.
Never regained it.
For an elf, the holidays are stressful.
I've seen this shit happen countless of times. When did I draw this purple box on IWM? The realest people on my live stream remember. IWM box was drawn somewhere here at 11:10 in the morning. 11:10 in the morning on IWM. That is so goddamn early. Way before they broke down this purple box. But the purple box is just a range locked box. Like same thing happened going up, right? What happened in the morning? There was a range locked, not this, but there was something on somewhere that broke up. I don't know what we were watching. Yeah, it was something somewhere that broke up. And then we came back into this box and we retested the bottom and then we just dropped. Where's the bottom of that 12 o'clock? Somewhere at the bottom of that purple.
I'm going for the gap fill below. SPX is gap filling at 6,856. Gap fill is here in the next 2 minutes. Next minute. Let's see. 6,856. Most likely is going to fill, and then it might bounce. This level, 6,852. What level is that? That's the level we were playing with yesterday before market closed. The market was chop, 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 drop. Back up, fly. 1/3, 2/3, and the 225 to close. And then they used today 3/3 up. Oh, not HOD. Up, 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 3/3, and then dump that to 1/3, 2/3. This 3/3 bullish cycle that they created overnight and today, and then what? 3/3 bearish cycles. Oh, 0 DT cook. Okay, 1/3, 2/3, 3/3. 3/3 bulls, 1/3, 2/3, 3/3. Bigger cycle, 1/3, 2/3, 3/3. Gap filling? I don't know. But today is astronomical. I don't know what the fuck Tesla is doing, but I really need Tesla to go down below 450. And this bitch is scaring the shit out of me. This shit's gonna grind the fuck out of my contracts into next week if this opens up really, really high like this. This is something. I want to see what happens on Tesla into close. Did not gap fill on SPX. They did not gap fill. They're bouncing with the gap. They don't even need to gap fill. There's literally so many bears. And that gap does not need to fill for 20 minutes, but they could create a cycle, right? Make bulls hope again, and then do it later. That's fucking crazy to say too, but I don't know. Cycle is creating. Let's see. They did not fill by cents. What the f can I do when it doesn't fill by cents? There's a divergence on SPY and QQQ too. QQQ is holding. Technology is holding. IWM just went and came back or something. I don't even know, man. This shit crazy now. Chaser's getting hurt. Something unexpected going on. Something people thinking in different ways, so that the minority finds out or something. In this entire cycle now. Sorry, time is 12. I don't know why it's ready. 2/3, 2. Yeah. That is really bearish. Don't know why, but still. I mean, I do know why because of the gap below, but it's pretty bearish. Let's go look at the presidential. Nothing going on with the presidential. CNBC. Every single time they test the floor.
AI setting its sights on a blockbuster $500 billion valuation. $500 billion. That makes it the most valuable private company.
Want to invest in OpenAI or SpaceX?
OpenAI setting its sights on a blockbuster $500 billion valuation. $500 billion. That makes it the most valuable private company in the world, now surpassing SpaceX.
Private companies like OpenAI and SpaceX have Private companies like OpenAI.
OpenAI setting its sights on a blockbuster $500 billion valuation. $500 billion. That makes it the most valuable private company in the world, now surpassing SpaceX.
Private companies like OpenAI and SpaceX have captured enormous investor enthusiasm in recent years, pushing their valuations sharply higher, Yet, despite all the headlines, there's been one limiting factor when it comes to investing in these companies. Because they're privately held, they've remained largely inaccessible to ordinary investors.
I think one of the biggest problems we have today is we're building this artificial intelligence. Most of the companies on the bleeding edge are private, and I think the best way we can make sure that it benefits all of humanity is to give people exposure to it.
Now, a new approach is emerging that could change that. Tokenization. It offers retail investors a way to gain exposure to shares of private companies that were once out of reach.
The tokenization of investing becoming bigger. Republic announcing that it has launched a SpaceX token which mirrors the performance of private shares of the company.
Robinhood just launched what may be its most ambitious crypto push yet, offering tokenized shares of OpenAI and SpaceX to users across Europe.
I think it's perhaps one of the biggest innovations in capital markets, certainly in recent history.
Despite its appeal, there are concerns that tokenizing private companies could be a way to bypass long-standing regulations meant to protect investors.
With a token, it is an instrument not issued by the company. It's a side bet on the future prospects of the company.
So why have high-growth companies like OpenAI and SpaceX remain off-limits to ordinary investors? How does tokenization make it possible for them to gain exposure to these companies? And what are the key benefits and risks of this emerging technology?
What the f is tokenization?
A token is just a way to represent ownership of something. Now, we've been tokenized.
Oh God, we're not doing this shit. I'm sorry. We are not doing this shit.
Chinese chipmakers putting some renewed pressure on NVIDIA. Chinese chipmakers putting some renewed pressure on NVIDIA. An IPO from what some call China's answer to NVIDIA skyrocketing after its debut. And another Beijing-based AI chipmaker reportedly planning to triple its production. Our Deirdre Bosa has more on all of that in today's Tech Check. Happy Friday, Dee.
Happy Friday. Hey guys, so Beijing, it's rushing to create domestic lock-in before NVIDIA can re-enter this market. More threads, that's the first in a quartet of Chinese AI chip startups known as the Four Dragons to go public. And it surged more than 400% on its debut. Bloomberg, meanwhile, reports that Cambricon, this is part of China's first wave of accelerator companies, reporting that it is planning to triple its output of AI chips next year. Now, together, these companies represent a coordinated state-backed push to build parallel infrastructure that isn't necessarily better than NVIDIA or what the U.S. has, but good enough, and this is key, Chinese-controlled. Now, the More Threads founder reportedly put it this way to Chinese state media. He said, computing power is state power. The idea that whoever controls the silicon base controls the AI era. Now that idea, it's also gaining ground here in the US as well, though lighter and more indirectly. Washington, for example, took a 10% stake in Intel and hinted at more deals. There's also a journal story this morning that the Trump administration is in talks with Masayoshi Son and SoftBank to build federally owned AI infrastructure parks. Now, the latest accelerations in China's chip ambitions, and it feels like they're moving faster than ever, this could push the U.S. to move faster too, or risk a future where NVIDIA and American tech at large starts to really lose market share to a domestically protected Chinese ecosystem, and maybe beyond companies or countries that China is allies with. But guys, even after More Threads' massive IPO pop, it is still worth less than 1% of NVIDIA, and it is nowhere close on performance. Cambricon, meanwhile, despite that product roadmap, it is so far from competing with NVIDIA. The China's chip industry is being propped up by artificial demand. That is key here to know, for investors to know, but it's also important to know that we've seen this before with DeepSeek and Chinese AI open source models. They can close the gap faster than expected, and when they do, markets can recalibrate very quickly.
Let's see if the bulls come back here. Time is 12:45. What is this? NVIDIA Huang, that's not comfortable with success. What? Oh yeah, we're not.
One tiny ass spike candle on SPY. That is so sad. I guess that's what we're doing these days. Yeah. Michael Burry versus Tesla. And Burry isn't really showing yet. Yeah, there it is. Get this. Man, they're talking about the yen carry trade.
How we look at the bigger picture. Jed Ellerbrook is with us, portfolio manager at Argent Capital Management. Thank you so much for being with us. So I was saying the market's searching for direction, but we were having a winning week. We're up 3 or 4 weeks. We're up 7 of 8 trading days, not including today. We'll see what happens. Your thoughts?
I think it's a skittish market as it relates to the AI trade. But we're seeing strong economic growth. We're seeing interest rates fall further. So there's a lot of enthusiasm in markets overall, and I think it's a good thing. I think it's good to see a broadening out in participation.
So we know when you talk about broadening out of participation, obviously everybody was focused on the mag set, but what else is grabbing your attention?
1 minute.
Broadcom's earnings next week, I think, are going to be a big market-moving event. Broadcom is benefiting because the big hyperscalers don't want to be dependent on NVIDIA exclusively for chips. So they're trying to create their own custom chips with Broadcom's help in most cases, a little bit Marvell too. And so I think demand for Broadcom from their customers is going to be exceptionally strong. We know the TPU that Google and Broadcom partnered on is incredibly successful. We know that Amazon's chip is doing really well too. Meta's working on a chip as well as Microsoft, and now OpenAI and Anthropic are too. So there's a lot of investment. Broadcom is gobbling up most of the market share and creating great products for the customers.
Well, I mean, so far so good. So you're waiting to see what happens with Broadcom. What are your thoughts on NVIDIA these days, especially with the battle with Google?
Yeah. I think that in this market with demand this strong on kind of a secular basis, not cyclical, I think a rising tide is going to lift most boats. And I think there's plenty of room for Google to succeed with the TPU, for Amazon to succeed with Trainium, for NVIDIA to succeed wildly with their chips, and also for AMD to participate. So I don't think it's what's good for TPU is bad for everyone else. I think it's more they're all succeeding, they're all growing significantly, and they all have a great growth outlook looking over the next couple of years as well.
You said, look, you're not really worried about an AI bubble right now. I mean, there's a lot of skepticism. You don't necessarily think that's the right idea.
NVIDIA trades at 25 times earnings. If that's a bubble, it's one of the cheaper bubbles that we've seen.
Yes.
So I think that there's a lot of skepticism in markets. I think that there are constraints to this data center build out, whether it be chips over the last 2 years, power today. So no, I don't think it's a bubble. I think the demand exceeds supply, and I think that the hyperscalers are building data center capacity reasonably, prudently, and carefully.
What about Gemini 3 versus ChatGPT? I mean, we heard what Mark Benioff said. Everybody heard it, right? I mean, he's never going back to ChatGPT.
Yeah. I think that this is another area where the rising tide is going to lift a lot of boats. I think Anthropic is doing very well with Claude, especially with businesses. I think OpenAI is doing great with ChatGPT and consumer applications.
And
the Google model Gemini 3 is off to a great start as well. I think they're all going to be successful.
Where are they going?
This news over the last week of ChatGPT declaring a code red made me think about 2.5 years ago when Google declared their code red in response to ChatGPT. That would have been a great time to buy Google stock. Obviously, OpenAI stock is not publicly traded, but I think that they're all going to be pretty successful. I think the market's plenty large and growing fast enough for all of them to achieve really good results.
So Amazon, for example, is up just 4% this year. We were talking about some of those retailers like Dollar General and Macy's, and some are up 50%. Amazon, when we think about the Mag 7, everybody thinks that they're the best stocks of the year, but they're not necessarily. But is there opportunity in Amazon, and why?
Yes, we think there's great opportunity in Amazon. It's our favorite stock today and our largest active position in our fund, which is ticker ABIG. Yeah, Amazon's doing very well. It's down today, I think mostly on the Costco monthly results. Costco's results were a little bit slower growth than expected, but still growing at a mid-single-digit rate. Amazon is growing at a double-digit rate. So yeah, I think what we've seen this year is lower quality businesses perform better than a lot of the kind of high-quality stalwarts. And I don't expect that to continue through 2026. So I'm hopeful and expecting Amazon's going to have a great year, going to grow strongly both in retail and cloud, and that the stock will respond.
Yeah, I mean, we've heard so much. I mean, Amazon had its moment this week, too. Wasn't that the one with the frontier agents? Right? Was that them?
Yeah, Amazon
I mean, I don't have it handy, but wasn't that the exciting part? And they have their own AI chips, and those frontier agents are going to be learning as they go. I mean, it seemed like revolutionary.
Yeah, so Amazon had their big reInvent annual conference in Las Vegas this week. They debuted new chips, new models, a new offering for businesses with their cloud hosting, and just generally talked up all the AI investment they're making and how quickly consumers are adopting it. I think that all those cloud computing businesses are going to do really well. It's actually more about getting data centers opened on time than it is about the customer demand.
Tell me about some of the names you're watching. I see Intuit and ServiceNow. I mean, tell me about some of the names. Are these names that you like and you're going to buy on dips, or what? Or you recommend them now?
Yeah. I think these are good stocks to buy right now. So, for example, Intuit and ServiceNow are software businesses. Software's been the worst performing part of technology this year. Investors are concerned that all the growth that we're seeing on the hardware and infrastructure and data center side isn't going to translate through to consumer and business use cases, which are delivered via software mostly. I don't think that's right. If we're building all this infrastructure.
Yo, what? Look when I left. 12:34. Holy shit. 12:34 left. They did not gap fill. Right, that was literally my plan, right? I said I was deducting. I was like, yo, my plan is to leave before gap fill, and then they gap hoped. And then bounce in to burn off all things. That's funny as hell. That's crazy. But at some point or another, this was a possibility. Probability, just like it's a possibility. Probability to go down.
Essential services.
All right, great to see you. Chad Ellerbrook, thank you so much. Portfolio manager, Argent Capital.
Bro, people hate on me. People join and leave because, they don't listen or whatever the hell, but I mean, it is not anyone's fault, so everything will be okay, but, as long as, everything's good, but I mean, yeah, right now, I will say, I do type what I think and what I, do for myself in the WhatsApp group, and every time I do, there's like maybe 2 or 5 people that really truly ever think or want to even see what that is. So that's not my fault ever. All I'm saying is the deductions and probabilities are always there for themselves to figure it out, and everything will be okay. But at the end of the day, there comes a point where things are just self-reliable, belief, self-responsibility in life is what I'm trying to say. How to play Jensen Huang's AI cake. What does that mean? Interesting. But yeah, nothing's based on candles. Candles suck, dick. Candles are literally trash. If you live for candles, ain't nothing ever gonna work.
The big picture. So let's welcome in Michelle Gibley, Director of International Equity Research and Strategy, Schwab Center for Financial Research. Thanks so much for your time this morning, Michelle. It's so nice to see you. Happy Friday. Look, we started this week off with a more hawkish tone coming from the governor of the BOJ, and that put very much the carry trade back in the spotlight. We've seen the higher yield stateside being pressured by those JGBs. I'm seeing that the expectations now are building of a rate hike very much in Japan. What does this mean now for global equities?
Yeah, you know, despite the concerns about government meddling in monetary policy, we're seeing the Bank of Japan looking at more likely hike rates this month. And, you know, if you think back, Takaichi, you know, she was not supportive of hiking rates and then added a big fiscal stimulus. And we saw the yen reverse nearly all of its strength in November, nearly all the strength that they had earlier this year. And so if the Bank of Japan delayed hikes and allowed the yen to weaken, that could actually increase inflation and then intensify the need to hike rates eventually. So the logical choice for both the Bank of Japan and Takaichi is to allow rates to rise to keep inflation in check. In terms of Japanese stocks, they have some good things going for them. They're benefiting from corporate reforms to improve governance and capital management, and they are attractively valued. But, you know, there's been this negative correlation between the yen and Japanese stocks. So investors may want to consider currency hedge vehicles when investing in Japanese stocks. And then if you think about more broadly, I think there's some concern about a yen carry trade or unwind of a yen carry trade. But we're really in a very different position now than we were in August of 2024. Back then, speculative traders were positioned very extremely short. And what happened is we saw that short covering happen and really it resulted in some forced trading. And now we are in a different position. Speculative traders are more long yen, they're net long yen. So we're unlikely to repeat that volatility. So it's possible that the Bank of Japan hikes and JGB yields rise, and it could hurt risky assets globally, but it's likely to occur really over a more gradual pace.
We're going to move this poll. This is most likely
we had somebody on the program earlier this week talking about how there's still about $1 trillion
the last poll of the day is, are we going to flip VWAP and go fly somewhere into this purple box?
Yen, and then obviously invest in risky
or
assets
are we going to reject again into the end of the day and go test LOD? I'm not talking about break LOD and go gap fill and all. I'm just talking about
in the AI
the direction.
I know you say it's different this time, but is there still a risk here?
Man, candles are already coming.
I think what's interesting is that the threat of the Bank of Japan hiking
let's just do the poll. The last poll of the day.
Is actually hurting Japanese stocks overnight, but it's not really having an impact on trading here in the U.S. today. You know, I think that there is some risk, but I really don't think that it'll be, you know, the same kind of situation we were last year.
Okay, what about Treasury yields? Because interestingly, Societe Generale was out with a note earlier this week as well, talking about how this hawkish move from the BOJ is actually a bigger threat to U.S. equity market than the Federal Reserve or U.S. domestic policy because of the possible contagion in U.S. Treasury yields. And some of the guys over at Fixed Income at Charles Schwab have been talking about how, you know, obviously you have to look back to the GFC to see the 2-year JGB at these levels. And obviously the 10-year JGB, it's highest since 2007 overnight as well. I'm just wondering if you continue to see whether that will keep a floor under U.S. yields as well.
Yeah, I think that our fixed income team believes that
everybody vote before the candles come. Let's
yields
see. 5 people
US,
voted VWAP flip
up.
Okay,
What
2
we're
people voted
seeing
LOD
is this
go tester to go nearby.
compression of the differentiation
Common nerd
between
of sense
interest
says
rate
VWAP flip
differentials.
up.
And so the more likely that the Fed
says
cuts
it can hit
rates and the Bank of Japan
687,
hikes,
then go down.
that
So go
could
VWAP
narrow
flip and then go down. All right, fair.
the yield spread.
Well, I'm talking about
and that
long
would
term.
hurt
I'm talking about
the dollar, and that would
3,
benefit
4 p.m.
international
close.
stocks.
Okay.
I'm talking about long-term, real direction, not little moves here and there.
We just want to talk about
real direction.
So before we let you
Flip
go,
VWAP.
as far as international valuations versus what we're seeing here stateside, it's been interesting overnight seeing this more threats company over in China, which is sort of dubbed China's Nvidia, rallying almost 430% on its debut over in Shanghai. I was looking at the star market there, which is their sort of NASDAQ, trading at about 120 times earnings, whereas the Shanghai composite is trading at about 12 times, which is certainly interesting. But where are you seeing as far as international valuations that look attractive right now?
says, I think new highs long term.
Yeah, I think you could say that, maybe
Today's
not that
Friday,
individual company, I don't follow them, but, Chinese stocks, emerging market stocks are still attractively valued. And there is a lot of optimism about AI in China, and as we're seeing adoption increase and innovation happen. And we have this trade truce between the U.S. and China. And that could maybe boost valuation for Chinese stocks.
Yeah, that is surprising. I thought more people were going to say LOD
to
or
be
something
targeted
instead
by the
of
U.S.
VWAP, but more people were saying VWAP
and then,
now.
if we look over
Maybe
in
because
Europe,
2 minutes ago the candle was green. I think when we started the poll at 1, the candle was green.
The discount to the U.S. is about
now that the candle turned red, it's like
across every
scary as
single
shit. I don't
sector.
know.
And yet earnings growth is set to accelerate
102,
dramatically
like
next year. Earnings in the Eurozone going from flat this year to nearly matching the earnings growth in the U.S. And so investors are likely underweight international, and there are really good values to be had overseas.
We'll be looking at 2026. Europe, obviously, something to keep an eye on as well. We have seen a bit of an outperformance this year as well, certainly at the start of the year, looking pretty strong there too.
This is one of my favorite little gifts to give. I love how it looks so elegant and tasteful.
Great segue, Hunter. Hey, everybody. Listen, I'm really excited for this because we get to show everybody all around the world what the Bay is about. I travel everywhere. And what people say about the Bay, they don't understand what we got going on. So this is our chance to show people from Brazil, from Nigeria, from Rwanda, everywhere, all around the world, people are coming here to celebrate
Michael Burry versus Tesla. Damn, Tesla winning, bro. This shit is.
Showcase our food, showcase our people, our music. This is going to be a great time.
Love that. Exactly. And that's a great thing about this is I think it's also be able to showcase the Bay Area of how diverse we are and get to welcome 48 different nations into this country and being able to play for that and play a tournament and also get to learn from them, learn their customs, their cultures. And I don't know, for me, 1994 was a huge catalyst in how I love for the game. And I got to watch Brazil practice at Santa Clara University. And
what kind of day is today? All-time highs or all-time high?
Memories I heard from Los Gatos. It was a carnival out there.
All-time high retest day or all-time high trap day?
The love of it. But all right, how about we take some turns?
All-time high retest again day? Bullishly hover up? Or fill the gap? That is flying up. Wow. Oh, they are literally doing this shit though. Fucking wipe out the 0DT though. Holy fuck. 6'8", 58 too. 6'8", 78.
I'm starting off on a hard one right away.
Oh my lord, that's insane. Oh, extremes.
Great one. She's here today. It's not Michelle Akers. That's another.
They do extremes when they do.
She's on broadcast now. Julie Foudy, there we are.
What do you guys think today's all-time high retest or all-time high trap day? Like, what is this? All-time high index?
Yeah, the reigning champion rocking. I like the sweatsuit though.
All-time high index test day.
Good view of the sweatsuit. The Argentina sweatsuit. Bayern. Love it. You guys want this one for you? I gotta get one. All right, this is for the Bay Area. All right.
That's gonna be the title. All-time high index test day.
The NWSL. Ooh. All right, right here in the front. Talk to me. Ooh. Oh, close, but no.
Look how crazy the market reverted at 1240 though. Wow. Look at this shit. 1040 to 1140, 1140 to 1240. One more hour, and then 1142.
U.S. women's national team co-founded the Bay FC.
1240 to 105. Sorry.
Did you have an? That's one.
Pushing up wild.
There's four. That's right, Danielle. Danielle Rafters.
Man, look at that all-time high bounce, test, reject, whatever the fuck you want to call this shit. We are at the all-time high test on SPX today. 6,900 we hit, and we are at 6,975. We went to 6,900. We're at the middle of the whole entire drop. That's how crazy this shit is. Cooking the entire bears just after the entire move.
We got a bucket hat here because you already got a.
Cooked all the bulls, cooked all the bears.
Oh, she got a bucket hat, and then.
If they didn't leave in time. But this shit is an entire crazy move. To not leave with that 0 DT and deploying at 3/3 is absolute piglets. It's like piggies, you know.
Can anyone name the winner of the 1994 World Cup, the last time it was hosted in the United States? I love hands up. I got kids. I'm going all hands up. Oh, he's there. I should
go higher. I don't know what the fuck they're doing here. This shit is stupid as hell. I don't know why we were watching that. Sorry. Let's go watch something more economy related. Hopefully you guys don't mind. Oh, here they're coming out wildin'.
I still do, but I can't sit for a year and watch this become a political football and tie up capital. So it's just a portfolio management decision. I think there are going to be other opportunities that have more near-term upside while this Netflix thing works its way through the meat grinder in Washington.
Damn, it spiked up.
But I can't sit for a year and watch this become a political football and tie up capital.
At 12 p.m. it dropped all the way down. Now I wonder what it's at right now. Let's go look.
Decision. I think there are going to be other opportunities that have more near-term upside while this Netflix thing works its way through the meat grinder in Washington. I want everyone to understand, I think Netflix right now represents a tremendous value, but I don't think the stock will be able to get out of its own way. The thing to keep in mind here is we don't know if an over-the-top bid comes. We don't know what Republicans are going to want to talk about as it pertains to this. We don't know what the Democrats will want to talk about.
Insane IWM right now, Russell.
There's a big antitrust contingent in both parties for different reasons. Then, of course, there's the White House. This would be the second largest merger or acquisition in the post-pandemic period worldwide, other than Norfolk Southern and Union Pacific, the railroad tie-up, at $85 billion. You cannot tell me the Eye of Sauron is not going to see this thing happening and say, what does this mean for us? And keep in mind, this is media, so it probably means
confirmation rejection here. So
they have to put the Apprentice back on the air.
It's the 3/3 bullish. Bulls are in control basically in the smaller cycle. We're at the middle.
This could take over a year. So look,
look at how crazy and how confusing it gets after the real direction or one play has been moved up or down.
So all I'm saying is, I think Netflix
crazy
is
chopping in the middle
value.
now. 0 DT game and like insane.
I love the deal for them. Not only for them, but I love that they're keeping this out of the hands of somebody else. Equally important in the streaming wars. But I can't sit here, so I kept a very small position on, and we'll see what happens. We'll watch it for the next 12 to 18 months to see how this goes.
I thought some of the, Kev, you have the stock too. I thought some of the notes from the street today about the strategic nature of the deal and how it's a departure for Netflix
0% today up for the day. Tesla.
Huber Research says we've had an overweight for nearly the entire time over the last 10 years. But
all it's doing is data burning my options.
Netflix has been very successful the last 15 plus years developing its own content and has smartly stayed away from doing sizable deals. We do not see the need to change that. Baird weighs in today. Certainly a deviation from the company's historical approach, and we understand the initial investor hesitation regarding the size of this deal and the potential closing integration process, but we suspect the long-term benefits will ultimately outweigh the near-term risks. You as a shareholder have to be willing to
a lot harder to
sit for the long haul.
Purely
you
reject.
have to have a bigger vision, but the notion that this is historically different than what Netflix is used to doing, not unlike you might hear if Apple was to make an acquisition of some scale larger than it's ever done before.
Trying to flip up or down.
I hope we do see that from Apple, Scott, and I'm thrilled to see it from Netflix. I'm going to take the other side of this. I think it's incredibly wonderful to see them go on the offensive. This is an IP play that if the deal were to go through, and I agree with all the notes and Josh's comments that the likelihood is pretty thin. I also think that we'll see a competitive bid from Paramount Skyworks a hostile bid from them to keep this deal alive.
Super down and then up, so it's killing the piglets, but it's letting away too.
When they bought Star Wars and when they bought
Bulls print and theirs, but like
some of these franchises, Game of Thrones, The Sopranos, the DC Universe,
IWM professionals playing full-time high again.
I never saw it. I think it's an amazing opportunity for this company to just take these franchises into a whole other stratosphere. So I'm excited about the deal, and I'm happy.
What do you make of Josh's move? Sell 85% of his stock.
I think it's a mistake. I think I would be more of a buyer of the stock. If the deal does get blown up, the stock will go higher. And plus, the one difference between Josh and I is I can write covered calls against this. There's going to be heightened volatility now around this name, even more so
but that's why that's why he's bowing out in such a large way. He would agree with everything that you've said, I'm sure, on the fundamental basis of this.
Yeah.
The stock itself, the company itself, the leadership likes all of it. But you're going to be in some level in what he suggests is purgatory for the next 18 to 24 months while this whole thing plays out. And then who knows how it ends.
You don't think it's in a box? You don't think it's stuck in a box now?
It may not be accretive to the bottom line, Josh, for 2 or 3 years.
Did he just say a box, guys? Am I tripping out here? Did he just say a box?
What he suggests is purgatory.
Did he just say a box? I'm freaking out. Did he just say a box?
Thing plays out, and then
you don't think it's in a box?
Box. Got the motherfucking fish from fucking, what's that fucking goddamn movie? Nemo? The bird? Box. Alert, box. He said box. Oh, shit. There's motherfucking boxes everywhere.
Amazing this deal turned out to be.
Stuck in a fucking box, Tesla is. Oh my god. He said box, dude. Guys, you guys can't make this shit up, bro. I'm telling you, he said box. I didn't say it. He did.
Here's Financial Times and Schroeder's Business Book of the Year.
They said box, dude. That's not a coincidence. Stop playing with me. Stop playing with me. He said stuck in a box. I'm not fucking tripping, dude. He said box. IWM going to the bottom of the purple box.
Of the thinking machine,
holy shit,
Nvidia, and the world's most coveted microchip
motherfucker
is
said
with
box,
us now.
bro. What box?
Stephen,
Look at this box on IWM.
Off camera.
HOD
I like
to
to
the
go
trap.
through the list of the FT books and read them all as well, but there was one of them I started.
Oh, I need water.
Not
holy
your
shit.
And I've got to be honest, I've got to finish it now. It's not as entertaining as yours as well.
Box.
That's probably why I didn't win.
What the fuck does an innuendo mean? What's an innuendo? Siri, what's an innuendo?
But I have started reading yours as well.
Nah, it's a box, son.
Let me just talk about the style of a book first before you talk about Jensen Huang.
Sure.
That's insane.
I think a business book is the most difficult thing to write because, quite frankly, most of them are boring.
Yeah.
And they're hard to translate.
They did not stop here. They bounced it and went higher, and then now they're pulling back.
In the early stages of your books, and actually, it's interesting that Mustafa Suleiman said some nice things about it as well, because I think his book was just phenomenal as well.
That's the setup right now. There's not a lot of setup anywhere except IWM.
Business book has to have that, doesn't it?
Well, I got lucky.
Did you?
Yeah, but Jensen is just a fascinating person.
By the way, first of all, congratulations. Sorry, that's what I first
not a lot of setup anywhere except IWM and maybe SPY on this purple
it feels
box.
great to win. But Jensen's a fascinating guy. He's just so interesting. He's so compelling.
It looks so bullish
so
into
smart.
110,
so
and then
he's so weird.
He's
so different.
Weird's great.
Crazy,
That's like my children.
It looks so bullish into 110 because coming in like that, and then
no comparison to other business executives you meet. He's not like them. He's really a different kind
wow,
of person.
This is the most important watch, I think.
He's
IWM Russell 2000.
Individual. He's so brilliant, world-class computer scientist, a world-class business visionary, but also like very kind of like tightly wound, a little neurotic, a lot of negative emotion. It can be difficult to work.
That sounds to me like a lot of CEOs. Without putting the plug in here, I've got to say, well, I look into the lives of CEOs, and kind of that fits the bill.
He fits the bill, but most of them aren't also world-class computer scientists who are capable of designing a microchip from scratch.
Stop.
And I still do, but I can't.
The trend is your friend. What is the trend? What does the trend look like? Shit, they went higher in here and then rejected. Someone said go higher and reject, so they were right, but trend is your friend. This is not a dead cat bounce. This is literally, I don't want to have that up. So this is literally all-time high test. Holy, unbelievable market. Unbelievable market. Holy. The trend is your friend. The fuck is Tesla doing? Go sit out, brother. Time is 1:20. I'm motherfucking 67 in my mind, bruh. I'm 2 times older than these people that are 20 years older than me. That's the sad truth. My mental brain, I'm fucking 45. These people that are older than me act like they're 20. These people on Discord on video games, they're like 35, 40. And they act like they're like 12 years younger than me. And I'm the younger one. It makes no sense. Absolutely no fucking sense. But hey, that's life. It don't matter about no number. It matters about your mentality and your mind and your head. You could realize that at 20. You could realize that at 30. You could realize that at 50. You could realize that at 60. You could realize that never. That's up to no one else but yourself. And on that note, we will continue to watch this Fed rate cut video, and then we will call it for the day. I have to go fucking eat and get ready. I'd rather go out early. Yesterday was insane. Remember? 9:30. And they hovered it for fucking 3 hours and they dropped it in 20 minutes and then literally the late chasers, I can't even believe it, but look at this shit. It's so crazy. They used it all fucking into today. That is absolute power in the market, man. Market moves up, market moves down, using hope, using unawareness, using setup, and it's absolutely incredible to see live. And it's absolutely amazing. I fucking love it. You gotta respect it. At one point, the market will love you back.
Massive, by the way, is like the bottom 2 quintiles of the country. Are we in a world where rate cuts just don't pack the same punch as they once did?
That is a long and complex question. So I will say the answer is yes. The short term, the overnight funding rate is not nearly as effective a tool at moving monetary prices, at moving the economy as it used to be for so many reasons we've chronicled before. Service-oriented economy, people borrow out the yield curve. CapEx is not driven by the interest rate today. It's driven by hyperscaler spend or by CapEx spend on AI, et cetera. However, long-end interest rates do matter. And how you fund out in the 5 to 10 year part of the curve particularly do matter quite a bit. It's part of why I believe that stability out the curve is so profoundly important. To say, though, the comment about getting the rate down doesn't help low-income people is not true. The truth is there is a transmission mechanism that even if you move the front end of the curve down, as long as the curve doesn't steepen that much, and there are ways to manage that, what you do is you create velocity of mortgages. You get the mortgage rate down, you create velocity of housing. It allows people to unlock value of the house. It allows labor mobility because people can move. There's so much, and by the way, whether it's credit card financing, whether it's auto loan financing, to say that it doesn't help to get that rate down, I think is, for particularly the place that it does help, housing, low income, small business, and that's what needs the help today.
Mortgage rates have come down. I mean, the 10-year is at 4.1%. This administration has been steadily moving it lower. Where do you think we see the 10-year, say, at the end of 2026, since the market believes that the Fed will cut rates to 3% or even a little bit more?
So, man, I think the key is, so the answer is I think it's going 3.5 to 4. And I think the key will be maintaining stability in and around 3.5 to 4, because if you get to 3.5 to 4, you get the mortgage rate into the mid to high 5s. If you get the mortgage rate down to the mid to high 5s, you see it today. Why is existing home sales picking up? Why are you seeing, we see it in prepayment speeds in the mortgage market. You see high coupon mortgages that are widening relative to low coupon. As a result of the fact you are starting to see some velocity around housing, existing home sales particularly.
Green,
so
green,
if you get the 10-year, which I think can happen in 3.5 to 4, red, that's where you get, what I think is a much more effective operating ecosystem in the economy.
How do you control, or how does the Fed, as you said, focus on rates out the curve? We have a viewer writing in who wants to know what's the mechanism to do that.
Many. So, if you are the Federal Reserve today, you have, when people say they have one tool, the Fed funds rate, I find that incredibly superficial. The handbook at the Fed has much more complexity to it. You can use the balance sheet, you can use their parts, if you use your voice, a lot of what Mario Draghi has done in the past, where you think about things like, gosh, if the amplitude of the curve is at a certain level, if the yield is at a certain level, you think about the size of the balance sheet relative to the duration, and you think about how you can be effective about using the long end of the curve. There's actually not that much, to get too technical, duration, DV01 out the yield curve, that you can be pretty effective at managing that relative to the front end. To your question, your point earlier, front end, the overnight funds rate is interesting, but it doesn't, moving at 25 basis points every 6 weeks, doesn't do a hill of beans for really, until you move it to where it needs to get to. Unless you're moving it quickly, it doesn't really do that much. But managing further out the curve, where corporate finance takes place, mortgage finance takes place, structured finance takes place, that has real efficacy to it.
All the trolls need to leave.
6%.
You guys need to go focus on other things. Just because I react to people and I talk back to chat does not mean, There's many other YouTubers out there that just ignore straight up chat and that use bot chats. 200 bots, AI. I'm not one of them. I will never be one of them.
That these hyperscalers are doing.
Go watch your whatever you think some other channel is, man.
So yeah, it's a great question. Thanks for asking. So it's a couple things. My job literally is, you know, so there's something I was looking at it the other day. Do you know in fixed income there's 1.4 million unique securities? So you think about all the tranching of the debt, publics, privates, etc. My whole job and what I'm trying to do with oftentimes what I find with lack of wisdom is like all I'm trying to do is figure out like what is the best value across the markets globally. Where do you take interest rate risk? Where do you take yield risk? Where do you take convexity risk? You know, so all we're doing and trying to do for people, because fixed income is pretty complex, is use our teams around the world. So today, you know, do you reduce a little bit of your investment grade credit? Because to your point, there's going to be a lot of AI financing that will come. We've seen it in the last couple of weeks, few weeks. Do we need to own as much investment grade credit at tight spreads? Not really. It's not that exciting. Agency mortgages are more interesting. European high yield, European investment grade, we're not seeing as much of that AI, and the growth is moderate, and you get a cross-currency benefit. That's exciting. You know, having some interest rate exposure in places like Asia or in parts of the emerging markets. So, I don't know, the idea being just try and move around dynamically to where the best relative value is around the world. Today, credit is just okay. We still own, you know, we still like high yield. We've reduced some U.S. Just because spreads have come in a bunch. But you know, we're just trying to create, if we can create 6.25 yield for people, stability. You know, the thing I'm most proud about is we keep our volatility down. Like that's in fixed income. If you can get 6.25, and then take the risk in equities, to your point about AI and spend.
That's just how we are as human beings,
returns,
bro.
If you get it right around where the equity are.
We always want to talk shit. We always want to find a negative in the positive. We always want to do bad shit as a human being. But I mean, at the end of the day, I don't give a fuck. I don't have time for none of that. And I don't give a fuck. I have no time for none of that. You guys are literally wasting time. I do not scam. I do not bullshit. I don't fucking teach fake shit. I don't teach retail bullshit you can learn on Google for fucking hundreds of dollars, because I'm not a bullshit dumbass. I do my own thing. I do whatever the fuck I want. I will do what I want when I want, because people are literal trolls. I have no time for bullshit. All they do is literally try to distract me, waste my time, try to be like, hey, you're wrong, look at da-da-da. Good for you. What the fuck does that have to do with me? You do you in your life. Just because someone's in something and saying this on this does not mean you should be like, oh, I know this and this, you're wrong and da-da-da-da-da. I don't care. It has nothing to do with anything. I really don't care, bro. It's insane. So what if the video is on while I'm talking? Get over it. How old are you? It's just a video. Mute me. Leave. It's not that hard, right? God is here. America is great. It's a free country. We can do whatever we want. Work wherever we want. Do whatever we want. When we want. How we want. But the point is, what is it? Is there something that's being done? I think we watched all the videos possible today. I don't see anything else. Market is just, to be fair, it's chopping directionless after 12:40. I don't give a fuck what the market does. I really don't. Why? Because the market already did for me. 10:40 to 11:40, 11:40 to 12:40. Like, okay, what changes for me? Nothing. The fact that I'm in Tesla. All right. Okay. What other changes? All right. Nothing. All right. Done. Man. Is Tesla one trade though? something wrong though, man. Seriously. Like, you serious? You know what I mean? Like, let's actually be serious here. What? That's what I thought. Like, it's just, bro. Insane. Oh, Netflix is buying Warner Bros. Oh, wow.
Very large credit facility or bridge facility for this deal, $59 billion. It's large, but Netflix is a very strong credit, right? Netflix is a company you would want to lend money to. So
trolls that don't even hit the like button, that always talk schmack, that always want to do some bullshit because someone's reacting to the chat because they want to be active with the community. And yeah, bro, you know why you were removed from the WhatsApp group? Dale said, I posted 2 things in the WhatsApp group and got removed. Really? You know why? Because you and some other guy, you guys don't even use the WhatsApp group. You just come in maybe one time in 7 days and then said something because that's what you see and what you feel, and then that's what you want to say on YouTube. Like I told everybody, right? YouTube chat is for YouTube chat. WhatsApp group is not for that. Right? Maybe you didn't hear, maybe you don't care, but I mean, at the end of the day, I don't have rules written there, but I don't have time to tell people the same thing over and over and over and over and over again. I don't care. So, yeah. I say this shit on a daily basis. WhatsApp group for active only.
In perspective, this is probably the safest deal Warner Brothers Discovery could have done, because again, your market, I would think, as you mentioned, is just going to sop up whatever they want to bring to the debt market.
Oh, yeah. So if you thought about some of the other potential buyers out there, yes, they would have had more difficult time financing that. They could get it done, but it would not be as easy as it will be for Netflix, given, again, the strength of Netflix's credit profile. Not only does it not have that much debt, its growth rate is very strong, right? So when you think about the EBITDA growth rate going forward, it's going to delever pretty quickly, and plus it generates a significant amount of free cash flow. I think Netflix said that they're committed on the call just before that they're committed to their investment grade ratings, and within a couple of years of closing the deal, they'll get their leverage back down to a level that is consistent with their single A ratings.
We continue with Stephen Flynn here, expert on credit with Bloomberg Intelligence. Stephen, I got 8 ways to go here. I want to get you on next week when the dust settles down here a little bit. You're at Lehigh University. You're the only one who passed Modigliani
Anything in this
and
purple
Martin.
box is
What debt level can Netflix comfortably gross out to? They don't want to go out to 40% debt on the balance sheet. You know, they can go from what? 3 to 9%, and it's like a rounding error, right?
Going up to
exactly. First of all, when you look at the total enterprise value of Netflix, their equity market cap is very, very large. So their debt to total capital is a very small number. They've always had a very small number, so they have plenty of flexibility. Leverage ratio, like their leverage ratio is not even a half a turn. I think as of the last quarter, it was like 0.4 times. So they can go up to a couple of turns easily, right? You think about their peers with single A credit ratings. You have Comcast has about a 2.3 times net leverage ratio.
Right.
Disney's just about 2 times, a little over 2 times. So there's plenty of flexibility from where Netflix is now to where their peers are. So they have plenty of room.
Okay, I got to squeeze this in because Sweeney wants to know for the 10 a.m. show. It's as simple as this. They got to spin off the dogs. Did they dump the debt on CNN, TNT, and Discovery, Animal Planet, and the rest? And how much debt do they dump in? How does that mechanism work, Stephen Flynn?
Yeah, you know, so we're going to work through all the details of that, but it looks like that they are going to keep about $10 billion of debt onto the studios and streaming, so there will be a lot of debt on global linear networks.
Will they get rid of CNN? I mean, this guy in Delaware keeps emailing me. It's a pain. But, you know, what do? They sell it off, right, Stephen?
See, I'm not sure exactly what they'll do with CNN. I don't think they've commented yet.
But I mean, the point is, this new SpinCo coming out of Warner Brothers Discovery, that's going to carry a lot of the debt. But those things have a lot of cash flow, right?
Yeah. So the leverage ratio won't be that high, and the cash flow is good. It's just a question of how long does it last, right? These are businesses that are under significant stress, that are under a lot of pressure. So the question is, how long will that cash flow last?
Stephen, are you going to work next week, or is this like your last day of the year?
He's a credit analyst. They always work.
That's a great idea. No, unfortunately,
you're coming on next week.
Not that many T days left.
Listen to the 6 phone calls left, and we'll get Stephen Flynn on next week. Really at the heart of the matter, which is, as Paul's led on all morning, the banking transaction. Paul, the bridge loan of a $80 billion deal is $50-some billion.
It's going to be, it's just going to be massive. And again, 3 banks are going to underwrite this. They'll syndicate it out to a lot of other banks, but it's a huge number. But as Steve Flynn said, the market's ready for it.
Yep. I stand by what I say. YouTube chat. If you're gonna use the WhatsApp group to come on once out of 9 days or something and be saying what you want and then get off or whatever, you don't care, it's not here for you. Community only for people that want to get on here and there, maybe a couple of days and then be like, hey, talking to other people and then interact. Not really just feed what you want to feed and then get the fuck off, because it's not really here for you. So you're gonna have to find that shit somewhere else. I'm not gonna say this shit over and over and over again. It's literally said every single day. People just don't give a fuck. So at the end of the day, I really don't care about none of that. I really don't care. Oh, there is no WhatsApp group, man. We just live it.
This morning is Matt Stoller, Research Director for the American Economic Liberties Project. Matt, it's good to see you. Thanks for joining us today.
Hey, thanks for having me.
Netflix wins Warner
Your piece
Bros.
doesn't mess around.
War.
You call it an illegal deal. You say the ideal scenario is a trial that puts some Hollywood executives and filmmakers or financiers on display.
Yeah, that's right. I think that Hollywood's a great national security asset. It's a great thing for America, and it's been suffering for a long time because of consolidation. It'd be nice to just actually get to know what the details are, the thinking behind the people doing that, and so that we can reorganize it and make it work better.
You think the problem is the process or the potential outcome?
Oh, I think the problem is longstanding. It's consolidation. We need more movie studios. We need more open markets, not fewer.
So what's your concern here? Is it that they're going to kill movie theaters? Is that it's going to make it harder for the talent and content creators to compete? Who suffers?
Well, ultimately, it will destroy Hollywood, right? So that's what we've been seeing. So the number of movies is going down, but also you're starting to see a lot more foreign content coming in, and you're seeing a lot less upside and leverage for creatives. And ultimately, if people don't get paid for their work, they stop doing the work, and that's what we're seeing. The fundamental problem with what's going on in Hollywood right now is that the price signaling function has broken down. So if people like something, it used to be that they would pay for it, and studios would say, oh, we'll make more of that. But now with the attempt to vertically integrate these streaming giants, there's no price signaling anymore, so people don't know what to make that consumers will like.
That sort of explains, I guess, historically, the buckshot nature of Netflix content creation.
People just love to disrespect the fuck out of everyone else, man. I don't know why. Like, it's just life.
Yeah, but people aren't paying for anything in particular. It's not like they're going to the theater or they're renting a movie or something. What they're doing is they're buying a bundle and they're hoping, maybe I'll watch this, maybe I'll watch that. And that fundamentally destroys the price signaling function that used to make Hollywood work.
Maybe I just sound like the way I sound,
financial syndication rules.
It is the way it is.
We have Paramount decrees that said, look, we're going to separate out distributors and the people that make things that we can have open markets, so those price signals work. And that's why we had this wonderful jewel of creative expression called Hollywood that was also very profitable. When you take those signals away, and then you say we're going to consolidate everything, then everything turns into Marvel Universe and just kind of like the slot that we're getting with higher prices and worse outcomes for everyone involved, and ultimately the destruction of the industry.
The Aaron Sweater.
You're gonna have to literally find something else to do. Future. I'm mad busy. Trust. I'm mad busy with the shit I do. Whether that's working, whether that's trading, whether that's charting, whether that's busy, whether that's, loving who I love, whether that's whatever. I'm busy as fuck with the shit I do, so.
See people get jittery about the AI spin, whether it's enough, whether it's too much, whether there's any real return. When you see the results out of Salesforce today, as well as some of the other companies this cycle, what does that tell you?
Validation movement. I mean, look at MongoDB as another one, right? And you saw with CrowdStrike on the AI side as well. Look, Ramey, I think what you're starting to see here is the second, third, fourth derivatives. They're now playing out with the AI revolution. That's going to be the theme 2026. This is, I think, just more and more momentum, especially on the software use case side going into 2026.
This gets to this idea then. So when we start to talk about the adoption by the customers themselves, the clients, if you will, the companies that are selling this stuff, so whether it's whatever Microsoft's doing, whatever Salesforce is doing, does that ramp up, or are they already at sort of warp speed on this?
Only 3% of companies in the U.S. have gone down the AI path. I mean, it speaks to our view.
Wow.
Only 3%. And it speaks to our view that, like, when you call this a bubble, it is way premature. Look, if someone like myself spends so much time, on the road, I just saw it in Asia for 3 weeks. Demand to supply is, 12 to 1 for NVIDIA chips. This hasn't even happened globally. And guess who's leading in the global race? It's U.S. is leading China when it comes to tech. So to me, the use cases now start to play out. The derivatives, the second, third, fourth derivatives are playing out, and that's the key. Look, that is the key theme that we're seeing from Marvell to Mongo to Salesforce. I believe to Snowflake and others.
I'm curious too, just about on the chip side of this as well. We heard from Jensen Long a
little
bit
going.
earlier today.
Mac
was on
the
Capitol
RSI
Hill
is
meeting
trying.
with senators, trying to address this issue with China and being able to sell there. Does China become a market for us, a market at least for U.S. companies at some point?
There's two gaps here.
Yeah, I think that's, you can talk about the Trump visit in April and then probably reciprocal here. It's a matter of time. I mean, we are not going to give that market to Huawei and take it away from NVIDIA and what I believe U.S. chips. And that's what the godfather of AI, no one has a better perspective of what Jensen's seeing. You don't want to give that market to Huawei and domestic competition. I think that's what's going to continue to play out in this arms race. That will be part of NVIDIA's growth story over the next 12, 18, 24 months. I think it's all part of this game of high-stakes poker going on between D.C. and Beijing.
I am also curious about the partnerships, and they continue. We did hear just a few minutes ago from Snowflake strengthening that partnership with Anthropic, basically integrating those Claude models deeper into the platform. Does that accelerate as well, Dan?
It has to, because in this arms race, that's what everyone's focused on. Put stakes in the ground, whether it's NVIDIA, OpenAI, Snowflake, everything Lisa Su's doing, AMD. Look, they could get criticism for it in terms of some of the circular financing and other issues. We're talking about $3 to $4 trillion that's going to be spent in the next few years. This is not the time to look at this from sort of, the back seat. It's the time to be aggressive, and that's what investors want to see. And I think we are going to look out. It's why we think tech stocks are up.
Yeah, bro, you've been here one goddamn stream, bro. Like, if you really want to get muted, I'll mute you. But you've really been here one stream. Last time you were here was November 26th, so... Sir? There are many other people to watch other than me. You know that, I'm pretty sure.
who is with us this morning. Skylar, good to have your perspective on the programme. It feels like we started the week with the BOJ. To some degree, we're ending the week with the BOJ as well, with a Bloomberg scoop that sources are telling Bloomberg that the BOJ is ready to hike on the 18th, 19th of December, as long as nothing enormous happens between them, which still leaves kind of half a month. So we will see. But what
I
is
call fraud.
your...
No, I'm only saying this shit because there's people here that's been fucking here daily for the last fucking 3 months, for the last 4 weeks, you know what I mean? And people are literally here 2 fucking days out of the last 3 months, and they're out here fucking trying to waste people's trying to fucking time, making other people leave. Like, bruh, no offense, I'm not even trying to. I know you mean that in a good way, but like, you know what I mean, bro? New people come in and see, what you type, and like, bro, you think they're gonna like that? Nah, like, chill out. Right?
Evolving thinking around the BOJ.
Yeah, sure. I mean, I think it's quite funny with the Bank of Japan. We tend to get the policy surprise before the actual interest rate announcement. So they like to well telegraph what they're planning to do. So I think it is very likely that we do get this hike. There were some questions around when it would come because of the fiscal going on there. But I think we knew the direction of policy very clearly. That means it's likely upside for JGB yields. It adds to kind of a number of reasons why JGBs are relatively unattractive within the kind of DM government bond complex, and it's not just because they're hiking as the rest of developed markets ease, but you also look at something like there's this big duration mismatch within the country. So as you raise policy rates, there's a worry that fiscal capacity gets deteriorated more quickly than elsewhere. You also have that a lower ceiling on where the policy rate can go because of that duration mismatch, and it's lower than other places, and so you still have a relatively unattractive yield. And then on top of that, you've got fiscal, which means growth will likely be higher. That's negative for bonds. At the same time, you have more issuance, and the Bank of Japan is reducing holdings. So it just means that you're still kind of relatively unattractive, and it adds to that bias.
Okay, can I just dovetail the BOJ and the Fed? I'm trying to wonder which one provides the bigger surprise. It feels like the BOJ is kind of taking the Fed's playbook of dropping lots of hints beforehand, and we've had one through Bloomberg today. I'm wondering if we get another one next week, just to kind of cement in, as you say, the idea that we are going to see this cut coming. Do they start signalling the idea as well that there could be more to come? And that's kind of wondering if the big surprise, that's kind of the ultimate big surprise here. Is that what the big surprise, or is the Fed going to provide the big surprise? What's price for the Fed at the moment? Kind of the Fed versus BOJ. Which one should we watch more?
I think definitely the Fed, not only because it has more spillovers to global markets, but I think we've moved pricing very dovish in the last couple of weeks. So if you look at something like 25 basis points being pretty much guaranteed in terms of pricing next week, Kevin Hassett bets rising that he will be the Fed chair, as well as your terminal rate at 3%. It's harder to get lower than that without significant economic deterioration, which means those are 3 factors that could surprise on the hawkish side as you go into this meeting. So I think that's where you should be watching, especially because you get a new SEP, so you get new dots, you get new projections. And I think what will be key, especially because you have a new Fed chair next year, and we're moving away from this idea that the Fed chair represents the consensus, is a more divided Federal Reserve.
Yeah. And on the subject of the US, PCE later, very delayed. Does the market try to look through this number?
I think it's going to largely be ignored because we've already shifted pricing dovish. This is an old print now. You're also having expectations that core PCE will come in close to 3%. That's a very high bar to surprise hawkishly. And as I said, there's not as much room to surprise on the dovish side. So likely look through it. And the big surprise we're looking for in terms of that hawkish shift will have to be the Fed next week and commentary there.
Okay, Skylar, thank you very much.
Okay, let's talk about, you can get more coverage from the NLive team. And next week's going to
Imagine being able to build an app with your...
I want to go to the bathroom for a sec. Wonder what this is. Yahoo Finance. It's like the least watched shit for me.
Dave, one of the more interesting dynamics on the market as of late has been what's going on in big tech, right? We saw a pullback in big tech. We have seen sort of an uneven recovery, but there's also this rotation within big tech, or at least a perception of changing leadership to some degree. And I'm just curious what your thoughts are on that.
I think there's kind of two catalysts that are occurring at the same time. So to your point, the broader environment saw a big pullback away from tech into defensives in November. In fact, actually, the healthcare sector outperformed the IT sector by the largest spread in 20 years. So I think underscoring just such a huge momentum shift. And a lot of the driver for that kind of macro rotation has been the potential for rate cuts, right? So that was sort of getting baked into the market, came off really hard when some Fed governors came out sort of against it, and then that came back on really hard again, and we saw tech recover. But at the same time, under the hood, there has been a changing of leadership, where NVIDIA, and I'll call it kind of team OpenAI, so Microsoft and others and the suppliers in that space, were just kind of ripping higher consistently. And then the Google news happened. And Google's the triple whammy when it comes to generative AI. They were thought of as a laggard, but they're a hyperscaler themselves. They make chips, and they have a large language model. And so now investors are saying, wait a minute, we've kind of forgotten about all these other players who've been so focused on OpenAI and all of their sort of circular investments that now we're seeing investors sort of reposition and say, who's going to be the winner on this next leg going forward? Even Amazon's news yesterday with their chips kind of gave them some leadership, which we hadn't seen in a while.
Of course, you guys manage an ETF of the Mag 7. MAGS is what it's called. I mean, and is there an argument to be made that, like, maybe it's too difficult to figure out who's going to be the winner, you know, and are the lead tables going to change sort of with each new product update and introduction? And so you should just still buy the whole thing.
Well, I think that's one of the reasons why the Magnificent Seven, the MAGS ETF itself, has seen kind of consistent flows even through some of the volatility that we saw in the name. Because you're absolutely right. Investors, in some cases, don't really have the ability to sort of forecast, well, whose new LMM is going to score higher on whatever particular index, and they don't necessarily care to actually make those decisions. So with MAGS, you get equal weight exposure to the Magnificent Seven stocks, which in and of itself is actually precision on the big cap tech leaders. So every quarter, the fund's going to rebalance back, sell your winners and buy your losers effectively, but still give you that Magnificent Seven exposure cleanly.
I'm also curious about something else I know you're watching closely. You guys have a lot of ETFs that use options in various ways to sort of do various things, create income, what have you. And
what a weird ass
watching the market,
this
the single
right
stocks
now.
recently. It seems to me, on an anecdotal basis at least, in the last couple of years, the intraday moves in single stocks have just been sort of supersized, right? Does that have to do with options? What's going on with that movement?
I think we're at a place where now sort of the options tail is wagging the equity or stock dog. And we have sort of been building up to this for some time. So historically, how I learned fundamentals matter, look at the price multiples, look at the growth multiples. But now with the introduction of single stock options and the broad-based availability for retail investors, along with hedge funds and institutions to buy options and sell options, we now see actually the options market, particularly in smaller single stocks, some of these being, you know, we saw this with quantum, we saw it with nuclear names, really sort of that options volume be the price setter, and it has the potential for huge intraday swings. So what does that mean, right? There's probably a lot of folks listening that are using options effectively, and they can be a great tool for investors. To your point, we use them in a multitude of funds to meet particular objectives. But I think if we think about sort of market positioning, we now also have to think about that as a risk factor, one that maybe you can take advantage of when the momentum's there. But when that turns, like we saw in the early part of November, that will hit those names the hardest, because just as it's really easy to put on a leveraged options trade, it's just as easy to take it off.
Yeah, I mean, I was looking at something like Supermicro, for example, which has really plunged, and one would have to think that, it helped it on the upside because it had a huge, parabolic move upward. But one has to think that that's part of the reason for the downside also. Exacerbates it.
Most definitely. So I think that name in particular has some of its own kind of idiosyncratic issues, of course. A stock is not necessarily immune to what's actually going on with its fundamentals, but because the positioning can happen so rapidly and in such mass, because an individual retail investor, whether they're buying $100, $100,000, may not seem like a lot, for stocks with billions of dollars in market cap, or if not trillions. But when everyone is doing the same trade, and then momentum-based hedge funds are piling on, you're definitely going to see the whipsaws.
Speaking of whipsaws, one of the areas that sees whipsaws is in the meme stock area. You guys recently reintroduced the meme ETF.
When everyone's doing the same shit, the fucking momentum
we should
ETF
say, but you know, we see sort of little spurts of activity within that world.
The 3/3.
So, I mean, is it worth playing in memes at this point, especially if you don't have high conviction on individual names?
Yeah, so it's interesting. So when we think about sort of just these two funds that line up, mags and memes, they're kind of like the opposite flavors of M&Ms, right? So one is your big cap tech with incredibly strong balance sheets, robust cash flow, and then memes is really driven by volatility, driven by retail investors. And we of course saw a huge run up in many of those names because there was a ton of interest in quantum, AI adjacent, crypto names, getting into AI and things of this nature. That's pulled back pretty sharply. A lot of that is driven by that kind of December rate cut coming off the table, then coming back on. But for an investor who's interested in sort of speculative areas of the market, one of the reasons we brought back meme was for people who wanted to take advantage of that, saying we don't believe meme should be the vast majority of anyone's portfolio, but for someone saying, hey, as opposed to seeing is today the day where Beyond Meat's going to get short squeezed, or is Drake going to finally invest in Open Door, you can get access to that basket as part of your broader portfolio.
What is IWM doing?
Okay,
Somebody
and do we
tell
still,
us.
what's the thinking on like the meme activity as a reflection on the bigger market?
So it's interesting. So if we look at sort of the individual trading volume, and then also if you include the options volume, there is a handful of those names, Open Door in particular, and others sort of in the quantum and nuclear space, which have outsized volume relative to their market cap. So that's indicative, of course, of traders who are trading the name, right? I mean, it's simple math, but essentially, it's really driven
they're gonna do the same thing
in
like
that
yesterday
case by what's happening in the macro environment, and then the individual risk appetite on each of those names.
Yeah, what the
and when
fuck
we see,
is
it's kind of to be expected when that risk appetite collapses, like we saw in the early part of November, those names as a group are not necessarily going to perform well. Really, in the last week or so, it's seen outsized performance on the upside because that sort of more speculative behavior has come back pretty strong in what I'm calling kind of a reversal of the reversal. Yeah. And today being kind of another good example, if we look at market action today, of where people are kind of trying to pick their winners and really say, what's going to happen?
And then they do the fucking reversal of that. They do the reversal of the reversal, and then do the damn reversal of that. And then once that's been done, real fucking quick.
By materials, staples.
2020 is still where the strength is within the overall market. In terms of history here, every bull market that made it past 3, year 4 still up, gains around the mid-teens. Stocks usually do well after the Fed cuts near high. So what do you think? Does it look like the bet would be history repeats itself?
FOMC on Tuesday.
Well, the way we, if with our outlook, we have a weight of the evidence approach, and some of the stats you just mentioned from that is that historical basis. I think Warren Buffett said if all you needed was history, the richest people would be librarians. But I think it's a good, good starting point to say, hey, some people feel like we've come too far too fast. Well, history says that, when we've seen this activity before, we tend to see gains.
Bears are here. Bears are pushing right now.
And based
Bears
on
are
the
going
cycle.
right now. Bears
but then
are
we
here.
have to layer on the economic outlook. We expect a modest uptick. We can go into more detail if you like on that. And then going back on top of that, so we have history on our side, economic uptick. Valuations for this market are rich, but on the short term, on a one-year basis, valuations don't have a big correlation with forward returns. Earnings are more important. We just discussed, we think those trends will remain resilient. And then lastly, on the technical side, the primary market trend is still positive. It has been somewhat uneven below the surface, but the primary trend is positive. And globally, more than 80% of markets that we track are in uptrend. So you put that all together, the weight of the evidence suggests there's still more room to go on the upside. But I certainly expect some curveballs and some probably some scary periods or normal pullbacks that feel scary at times during the year.
Keith, you mentioned your economic outlook, so I'm curious to hear you walk us through that. There's some folks, Keith, I know, who have sort of thrown some yellow caution flags on the economy. I've heard analysis where they say, listen, it really seems to them like it's propped up right now by a relatively small group of wealthy consumers and data centers, and the foundation to them just looks kind of wobbly, but I'm curious to hear your take.
Sure, and I agree that we do have this two-speed economy. Some people call it a K. I think it's more of a two-speed economy. We're both moving forward by at different paces. But so what's the foundation of our outlook? Why do we expect a modest uptick? It really comes down to four main factors. The one is there's going to be some tax relief, and we're likely to see that in the first quarter, both from the consumer side and from the business side. And that's because of the passage of that one big, beautiful bill last year where we got to actually see some of the benefits in the first quarter. So that's number one. Two, we do expect marginally lower rates from the Fed over time, so that should help ease lending rates. You mentioned already the CapEx spending. Collectively, that should continue to be at least a support for the overall market. And then lastly, tariffs aren't going away, but we expect some more stability. And remember, earlier this year, it was a shock when the tariffs came out. I think we've seen businesses adjust. So we put all those four factors together. That suggests to us we extend the cycle and move somewhat higher. And last point, Josh, if it's okay just for me to say, I do think the labor market is key. We have seen some weakness there, but we have 160 million people working. That's more important than the monthly jobs number. And we have to see wages stay above inflation. That's our base case, but that's also the risk that we'll be watching into the new year.
Supreme Court finally, Keith, before you go, let's just bottom line this for investors. In terms of sectors I want to stay overweight, it looks like you're still a fan of technology and communications services, Keith. One, do I have that right? And two, if I do, why, Keith? What do you see in terms of valuations, earnings, policy that keeps you comfortable with that call?
Well, we've looked back at several different bull markets, and what we find is that every bull market has a dominant theme. This one is AI and tech, and the leadership of a bull market tends to last or endure until the end. So if we think we're still in a bull market, we want to stick with those. That doesn't mean there's not going to be some sharp rotations along the way, but that's why we're sticking with tech and communications. As I mentioned earlier, earnings are stronger. We did recently upgrade healthcare. It's underperformed by about 50% over the last 3 years. So I think that's a decent hedge. You also want to have some modest exposure to small caps and mid caps, so you don't have to try to chase these sharp rotations, which are likely to continue over the next year.
Keith, as always, great to see you. Thank you.
Thank you.
It was a push for a ban on lawmaker stock trading is gaining momentum, and Yahoo Finance's Washington correspondent Ben Worskell joining us now with more. Ben.
Yeah, Josh. So the situation on Capitol Hill here in Washington is that two Republican lawmakers who have been pushing for a ban for months now basically just ran out of patience, and they pulled the trigger on what's called a discharge petition, which is a maneuver to force a vote in the House of Representatives, no matter what the leadership wants. So that discharge petition was presented earlier this week. It's at its 16th co-signers right now, so it clearly has a long ways to go to get to the 218 number that's needed to force a vote. But it does have some significant early people that have adopted into it, especially on the Republican side. Elise Stefanik is a member of Mike Johnson's leadership team, and she signed on it. So this is clear momentum for this effort that we've been talking about for years to get lawmakers and their families to be banned from trading individual stocks.
SPY is so fucking slow compared to IWM.
The underlying bill is called the Restore Trust in Congress Act, and it does have 104 co-sponsors in total, 82 Democrats, 22 Republicans. So there is a well of support here, assuming this discharge petition keeps moving forward. And it comes as, on the other side of the issue, Mike Johnson has emerged as an opponent here. He told Punchbowl News this week he wants to find a way for lawmakers to legally be able to own stocks, but there is a clear kind of revolt against Mike Johnson happening, and this discharge petition process has been remarkably successful this year. I just counted, there's been 10 discharge petitions so far this year. 8 of them have reached that 218 votes. So there is a kind of track record of success here. And this is the underlying premise of the advocates here, that public opinion is just so strong on the need for lawmakers to be banned from owning individual stocks. This bill does let you own widely held mutual funds, but trading individual stocks is just unacceptable in their view. And that the public opinion here, which by some measures is in the 80s in terms of people that want to ban, is going to force a vote to this eventually, sooner rather than later.
Ben, thank you. Appreciate it.
All right.
Coming up, we look at what growth in prediction markets could mean for big sports betting.
Why can't I ever get one nice fucking drop?
That's next on Market Domination Overtime.
Fucking playing in the 3/3 ever. Just gotta be fast with it, but they're so fucking trappy with it. What a shit show, dude.
I'm Nicole Pedalides at the New York.
Back to this, both sides hoping on bullshit again. Tesla, no fucking direction. IWM about to go gap fill. Insane working, man. What is this shit on QQQ now to not going together? Great, no direction. Living up to the name. What is this? Fuck, they're about to go gap fill and SPY's going higher. Oh my god. Chop zone. What the fuck? This is literally what Tesla was doing yesterday too, but what the fuck? The fuck? Bunch of chase ass candles, like fuck me. IWM. Gap filled everything. Gap filled everything. IWM. Ugh. Absolute.
Disney's acquisition of.
Disney's acquisition of. Shit. Talking about bond investors.
If you live in.
What a fucking grind right now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes. Grinding. Shit, reverting on Tesla.
Seen is a rise in the CRB index, and that's the blue line there, eventually lead to higher CPI on a global basis. That's the white line, with about a 9-month lag. Are there still global inflation pressures that are not fully priced into Treasury yields?
To some extent, although of course we have to remember that yes, while headline inflation will be supported by higher commodity prices, core inflation is what matters for the Fed and for sort of the U.S. backdrop, in which case that is likely, well, maybe temporarily headed higher in the next, call it 3 months, and then it's likely headed lower throughout the course of 2026. I don't think there is that much global inflation sort of headed. Of course, this commodity
what is this market? Just grind
sort of
up.
upward pressure has to work its way through, but I don't think we're talking about a big global reflation trade by any means.
Shit is brain dead retarded. Grind up, dump. Grind up, dump. Grind up, dump. Grind up, dump.
Of a rate hike on
come on!
Bank of Japan. This
fucking finale, push it.
What Japanese investors do with their yen.
LOD, fucking break it.
Like, even avoid treasuries. How are you thinking through the implications for global liquidity?
Well, global liquidity, I mean, that could be a big suck coming from the U.S. over to Japan if that were to materialize.
Damn.
But the idea of rising Japanese
How the
yields,
fuck is this possible in
the
a scandal like this?
Can keep our yields elevated right now. You know, we've seen that gap shrink. We've seen it shrink in a number of developed markets. And if the Fed does continue to cut rates in an environment where Japan hikes, and let's say the ECB's done, we're going to see those interest rate differentials continue to shrink a little bit. So we think that can pressure the dollar over the long term. We think it's an opportunity for investors. You know, when we look across the U.S. domestic landscape, a lot of our clients at Schwab are probably underallocated to global bonds. And this year they've seen this really big bump because of the currency appreciation. If that were to continue, we think the dollar might kind of hold steady for a little bit. But if we see those shrinking differentials, that could result in local currency increases over time. We think this could be an opportunity to not go overweight or anything like that, but to introduce global bonds, given that their yields are well above levels we've seen for the past, say 15 years or so, and you might get some additional currency appreciation.
Stephanie, let me come to you for the last question.
Man, all it is ever so many big traps after the fucking one big move is played. Like, this shit is actually fucking horseshit. Divergence at the floor, and they're fucking doing this shit again.
The dots are kind of expected to be very little change, but what we're looking for is the messaging around future cuts. Is it going to be the timing and extent to which we get future cuts? Probably not. So the way that they signal how they're sort of thinking about the next couple of meetings will be a really important thing. So at times the statement is more or less important. This time that's going to be absolutely critical to gauge whether or not this is a hawkish cut or just a cut with data dependence as the focus.
Got it. Stephanie, really appreciate it. Stephanie Roth of Wolf Research, and our thanks as well to Colin Martin of
POC brought up here for that.
Now coming up next, we've got the auction block. Big Tech's debt binge threatening to swamp credit markets. This is Real Yield on Bloomberg.
I said I wasn't gonna do one, and I just got into a fucking trade on SPX. Fuck.
They're calling it.
Should've just got the fuck off. They fucking dropped it, and I got hoping on LOD.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It is time now for the auction block. December may be a cold month for a large swath of the U.S., but debt sales,
I really said I was done at like fucking, I
this
think
month
at the
is
bottom,
already lining up to be
12:35,
one of the
and I just
busiest
got into
Decembers
another
in
trade, and
recent
now I'm
years.
literally waiting on
This week's
LOD.
top deals featured Merck, ANZ, and GE Healthcare. There were more than 20 issuers.
You cannot tell me this market is not
$27 billion
fucking pumping and
sold
dumping
is the
today.
most for the first full week of December since.
All right,
going
we're
back
gonna
to
do the last
2021.
poll, the
You
true
see
last
here,
poll
it
today.
has already
Is the market
surpassed
pumping
the
and
total
dumping?
amount
Yes or
for the
no? This
recent
is fucking
full
crazy.
months of December and is near the average for the past 8 years. While in high yield, steadily falling yields and tighter spreads crowded the market with 12 borrowers pricing more than $12 billion.
This is so nasty,
marking
dude.
the busiest week since September. Notable deals included Hilton, Post Holdings, and Venture Global. And sticking with credit, Apollo Global Management President Jim Zeltzer is using recent concerns about the overall economy and AI spending as an opportunity.
We like being in the middle of trying to pick the winners and losers, because at the end of the day, that's just good credit picking. And I do think you're getting rewarded with base rates between 3 and 4%. And the clearing price for a lot of this CapEx for these data centers going to be more challenging. That's when you can actually earn your keep by being a smart investor. You're going to get more secular distress than cyclical distress. And that's very important. It's been a long time since we've had a credit cycle.
Look at how fucking faked out for 19, 14 minutes, and then it just dumped off in 2 minutes. You cannot make this shit off.
Of capitalism.
Market just holding,
Let's dive into the big issues in credit with our roundtable. Sonali Pierre, portfolio manager of multi-sector credit at PIMCO, and Brad
Look at the insane pyramid on SPY. This is bear control. IWM is probably losing the box now.
Obviously, AI, CapEx, and that's a big driver of credit issuance so far. But we want to talk about something a little more conventional, which is M&A. One of the biggest drivers of corporate debt issuance in general, and we got a big deal today.
They're going lower.
Netflix buying Warner Brothers for $72 billion.
Clear the divergence.
We see Warner Brothers Discovery bonds falling on the news. Meantime, Netflix is lining up a $59 billion bridge loan, which is usually replaced with corporate bonds. Sonali, let me go to you first. What kind of appetite do you anticipate for Netflix bonds? Is this something that PIMCO would be interested in?
Thanks for having me, Scarlett. Good to see you. I think firstly, the fact that there is a pickup in M&A is highlighting the fact that we are seeing a bit more deregulation and therefore potential in more large-scale deals over time. But additionally, we're seeing a lot of potential for CapEx
up
spend
and then
from
trap
AI.
all bulls and then
so we
down
do
and then
expect 2026
what?
to see robust issuance. And at PIMCO, we're really focused on identifying which of these credits are improving and doing that due diligence to make sure we're looking for the most attractive opportunities, especially as we see large-scale issuance potential across several asset classes in fixed income.
Absolutely. So, Brad, when you look at this Netflix potential corporate credit issuance, what kind of larger market impact would that have?
Okay, so you threw out a pretty big number, right? Yeah. But let's put it in the context of how much issuance occurs in the investment grade market. Let's stick to investment grade. So next year we think there'll be about 1.6 trillion of investment grade issuance. So that's still a decent chunk of that, but really that's a gross number. And a lot of what happens is refinancing. That's going to have a smaller impact on markets than net issuance. What we've seen this year is actually net issuance has been
Look at how they trapped the bulls at 105, 135.
With all the issuance you just mentioned, you did the December number, but it's been big all year, right? So if you've got negative net issuance this year, you've got something like Warner Brothers coming to market, or the funding for Warner Brothers from Netflix coming to market next year. Plus, you have all the AI issuance.
Eight people voted. The market, in their opinion, is pumping and dumping today. It's nasty. It is pumping. It started off with a pump to all-time high, and then it dumped, and then now it's like pumping, dumping, and then it's like pumping. Dude, this was so non-direct. Honestly,
yeah. I think that's actually
didn't gap fill
this year.
And then rent north.
There's been a lot of
wind direction showing north
every day, right?
And then directional chopping.
6 months. It is the lowest maximum spread we've seen over a 6-month period in decades for the investment grade market, right? And so vol,
you know what? Something like this might be in play too. This 930 level on SPY.
There's a lot of money out there, right? Sonali and others have it.
I think that's what's going on.
I think they'll come in and find this paper attractive at a level.
Just like what's going on Tesla.
Up to the point where instead of we're talking about IG spreads around 80, we're talking about them around 90. I think something like that makes sense.
Sonali, does that match up to you? A huge influx in supply and spreads widening out?
Playing in the 930 candle.
somewhat modestly? Won't issuers need to price this stuff more generously? Because there's a lot of unknown, especially when you're talking about debt tied to and issued by companies.
It definitely is playing in the 9:30 candle
industry like technology.
on SPX. It's trolling on the 9:30 AM candle.
When we see significant amount of debt issuance, you generally do see some repricing. If we look back at when healthcare was a significant issuer, telecom in previous
on
periods,
SPX,
we did see within
Tesla,
investment grade about
in other ways,
30
in
basis
different
points
ways.
roughly of spread widening. Really, though, the important part is that selection, right? It's not that all of these companies are going to do well.
9:30 AM level is being used right now.
Leaning into a secular
on IWM as well, I think.
We really need to be
now that we're looking at it, that's what's going on.
And doing that due diligence.
9:30 AM level
really
is fucking boxing and chopping and nothing here as well.
You know, that they have a bit more levers to pull to ensure resilience. But as we look lower in quality, high yield, bank loans, private credit, it's important to
Tanya, I see things in such different ways, but I mean that shit is fucking actually happening.
The most important thing is that we're getting adequately compensated when we're giving up liquidity, going into
some
more
sort of
economically
bullshit, not even
sensitive
bringing
areas,
this low, just chopping and chopping and chopping
on complexity in a deal. And so that diligence is
that's the only thing that makes sense in my head, how it went up, dropped, and then bounced here.
You know, when we talk about AI CapEx spending, there's an urgency now to hedge against potential AI bubble risk. And you can see that really embodied in the credit default swaps for Oracle, right? They're now at a 3-year high. Trading volume is up as well. Why is this the preferred view? Does that make sense to you?
I'm fucking at break even right now. It's so fucking nasty, dude. Oh my god. Oh my god, it's crazy.
And, you know,
I got in at fucking 120.
Right? So if you had to pick one where people would focus, yeah, I understand why that answer is Oracle. Also, you just had a lot of issuance coming in Oracle. And therefore, there was natural hedging demand. So sometimes what happens, just from a technical standpoint, is that builds upon itself, right? And
go lower. Like, what are you doing? Like, go lower, bro. Like, oh my, the market is just won't even go lower. The thing is, it's not even going lower. It has all these bulls trapped in it. It won't even go lower. That's the fucking crazy part. For 5 minutes at least, go near LOD. Try.
We know a lot of funds have a
yo,
insane.
Nah, come on now.
How
Finally,
would that
come
be?
on.
Hypothetically speaking.
5-minute candle detaching away.
Absolutely, you know, an important topic because as you see investment grade
SPY
issuers,
going,
firstly with
going,
long duration
LOD
paper
divergence
as well,
at the
which the high yield
floor.
market's
It's
not
possible.
used to,
It's so fucking possible. It drops $1 here and clears the LOD divergence. I think it's possible.
You know, we remain poised.
That would be a
really
true pump and a dump, pumping and pumping,
dumping
today. We would be.
There
Look
might
at
be some more
SPX
room
dropping
to go.
now.
Importantly, you know, when we look at our credits, we're really looking for those that have leverage to be
this could be a fucking test.
Where,
this could be a bear trap right here. Let's see.
Valuation is
true test
so
at 6,000.
Certainly, this would be difficult for the high yield market to digest a single capital structure from any of these hyperscalers or the like that are very large into high yield. But usually that also leads to opportunities, right? Pickup in volatility can sometimes actually shake up even higher quality opportunities because sometimes investors need to sell what they can versus what they should. And that's really where we want to step in.
We know Bloomberg has been reporting that Morgan Stanley is sounding out investors
225 is here for
risk
2 more minutes
to
until
offload some of its data center
2:26.
exposure among other possible
Then it's
solutions
2:30.
it's considering. So, Sonali, I want to ask you, how are you hedging AI risk in your portfolio with all the issuance this year and everything that's in the pipeline and the works for 2026? Data center AI exposure is only going to be a bigger part of everyone's portfolio, both in investment grade and high yield.
Turn this shit off. Tesla's not gonna do this, bro. Fuck this shit. IWM going. We're bouncing. Exciting. This is the ultimate decision. What are these cycles? It's so goddamn volatile. Holy crap. Gotta be fucking kidding me how it bounces here. I just needed this size down and it won't even. You gotta be kidding me. I'm back at break even. I'm trying to get the fuck out, honestly. In any red candle, I'm gonna leave. Fuck more. This is kind of
electronic trading, ETFs, and the like. And so, we have that ability to be relatively nimble when opportunities change and, a thesis changes. We're underwriting with the expectation that we would like to hold this company over a reasonable time frame. But if that information changes, public market liquidity is stronger than it's been it's really setting new highs, and that really provides us that opportunity to be active managers, look for that relative value, and change sales if needed.
Brad, final question to you. Do you worry about a deep seek kind of moment, a competitor from out of nowhere who manages to produce the same stuff at half the cost?
I mean, it has to be your tail risk, right? We saw what happened in January, right?
God, Burry trapped.
That said, look where we've gotten to since then, right? And we've proven that wasn't quite as big a deal
what
as
the
maybe we all
are
thought
these structured candles? Look, what the fuck is this dump? And then what is this pump now, dude?
Like, with technology,
it feels like a pump.
You worry about obsolescence risk eventually. And to the point of Sonali's question, though, there are different ways to play this, which is either through regular way unsecured paper or specific secured paper.
All right, Brad Rogoff of Barclays and Sonali Pierre of PIMCO. Thank you so much.
Wow.
This is Bloomberg.
I'm actually speechless. Doesn't even look bearish. Look at the MACD just completely died off. This shit looks. It's just. It's coming back. Like. Holy chop. Still.
I'm Nicole Pedalini.
Nicole Pedalini. Holy fucking chop. Help, Nicole. This is some bullshit. This is some actual bullshit. No, it's so hard to tell what direction. We just got POC to move. We're right below VWAP. Didn't flip VWAP. We are just going down. We're chopping down. Not really going down. We're stuck inside this white box. Flipping every 5 minutes almost.
I'm Nicole Pedalini.
Oh my. Keeps getting the same fucking shit.
Into the next fiscal quarter because the government was in shutdown and maybe that impacted a few of the sales. But it did protect the margin a little bit. Remember,
open interest. Time is 2:30. What a chop feast.
Barely moving there, a lot of chop. So let's check in on the sector action. Just before the report, well, guess what? We look pretty similar right now. Communication services was the leader then, along with tech in number 2, and that is the status right now. Then you got materials up about 0.7%, energy and consumer discretionary all outperforming. So a lot of the cyclical sectors in the green here, although industrials looks like it's just kind of treading water. The only sector in the red is utilities. That's down about 0.2%.
I'm at 2.6K.
And let's take a peek and see what the NASDAQ is doing.
Up and down, up and down. I literally went from 2.1 to 1.9 to 2,200,
slightly in the red today, but I did say
1.8 is
communication services was leading. That is a sector where you have Alphabet, Google up 1% here, and Meta up about 2/3%. And I want to show you a lot of the dark green on here is what's happening in the semiconductors. So let's switch over and see. There's NVIDIA, that's down slightly, but for the rest of them, we got Intel up almost 5%, Micron up over 4%, Western Digital, Lumentum, those are up over 3%. So some nice dark green spaces there, and a pretty similar story in software. Not quite as much dark green, but another strong day for Salesforce.
Look at the volume of
Adobe up 4%. And I'd like to check in on crypto too, as it can be at times. Inflation sensitive and sometimes reacts to some of these
profit, bro. This is crazy.
Here's Bitcoin down for the day, 1.79%. Not really seeing much of a reaction here. So a little red to leave you off here,
I don't know what the
Julie,
fuck this is gonna
but not
do.
a huge movement off of those.
I guess it's gonna wait until FOMC, and this is literally bad.
Appreciate it. Well, as we just talked about, the September PCE report came in line with expectations, showing inflation rose 2.8% from a year earlier. That is, by the way, the fastest pace that we had seen since spring of 2024. It's also the last major piece of economic data to be released before the Federal Reserve's December meeting.
The 2-minute candle doing like $400.
By next
like
guest says the U.S. economy could be heading for a code red affordability moment. I want to bring in Ed Yardeni, Yardeni Research President. Ed, it's great to see you. Love that blue there today, Ed.
Thank you.
So let's talk about the PCE that we just got. Obviously, it is
it's not
dated,
even like
but
my
I'm
shit's like
curious
fucking
more
out of the
broadly
money
how
right
you're
now. It's
thinking
like
about
fucking barely
the pace
in the money,
of
but it's just
inflation
moving
right now.
insane.
You know, reading the tea leaves between September and now.
Well, I think the data clearly suggests that we probably would have been down to 2% on a year-over-year basis by now. But for the tariffs did have an impact on inflation in durable goods. Durable goods inflation was actually falling on a year-over-year basis at the beginning of the year, and then it started increasing a bit, reflecting the tariffs. But that's probably a one-shot deal, and I think that looking into next year, inflation will come down from close to 3% to closer to 2%. So that's looking promising.
So that implies that you do think the Fed has ample room to cut then next week and beyond?
Fuck is Tesla doing?
I think that's going to be their perception. I don't think they really need to. I think the economy is doing fine without rate cuts, and rate cuts increase the possibility of financial instability.
Everybody thinks it's going to tank, though. Everyone's saying it's going to go lower.
Put your fun on the way up, but you have to remember to get out at the top. But look, the inflation news, I think, is going to
literally. We have 10 people saying market's going to pump.
Increase the odds that the Fed will go ahead and do a quarter point. But it may be a hawkish cut.
One fucking person saying no.
What's the rush?
You know what I mean? That is literally the majority versus the minority. If you've ever
maybe
seen
they should wait until next year for another rate cut.
The only person saying no.
And Ed, if you do get that hawkish dissent, Obviously, the market broadly expects the cut to happen. But if you get that
just
hawkish
drop it,
descent,
pop
if
it,
you
drop
get
it,
some
pop
of
it,
that,
like
what then
nothing
do
exists.
stocks do?
Nothing fucking exists
Well,
except
I think,
candles right now. Look at this
we could
candle.
have a day or two where
Candle up, candle
there's
down.
downward
I'm
pressure
at
to the extent
2.4K again. This
that
is
the
fucking
markets are
stupid.
expecting that will be another
Can't
rate
lie.
cut
I just
after
need one more.
December 10th.
I'm leaving
There
it.
might be
One more candle. I'm
another
waiting
rate
for
cut,
one more
maybe
red
even as
candle. I'm
early as
expecting
January at the next meeting. So
some sort of cycle finale
I don't
again.
think it's going to be anything particularly earth-shattering one way or the other. I think the market's going to kind of continue to deal with some of the issues we have now with the horse race going on in the entire AI world and trying to figure out who the winner is today. So I think that kind of complicates that trade. And meanwhile, I think the market is going to increasingly focus on the likelihood that next year is going to be a good year for the economy again. We've got a lot of stimulus coming into the economy between some tax cuts, between the World Soccer, and then there's the 250th birthday of the United States. So there's going to be a lot of spending going on next year, and the market may be starting to anticipate that. It could be another really good year. I mean, I think we could have another double-digit
How it ends
increase
today,
in
the
the
market
S&P
is
next
very
year,
important.
maybe 10%.
How it ends today is very,
I think
very,
we'll end the
very
year around
important.
7,000.
And this year, around 7,000?
This year, 7,700 by the end of next year.
Going lower, trying.
And Ed, what about the affordability
what really happens with
question,
SPX
right?
is very, very important.
I mean, it sounds like you're a little bit more optimistic on inflation coming down.
Yeah.
And if that stimulus is coming in, does that become less of a discussion next year?
So stupid. Look at the volume coming in.
My name is Adam
so
Ferrari,
stupidly,
Chief Executive
slowly
Officer
selling.
of Phoenix Energy. I look forward to you joining us at our next investor webinar, where you can.
Not necessarily. The affordability issue is.
From New York City for our viewers,
it's 2 hours long. What the fuck?
It is the tale of a K-shaped economy. Wealthy households are spending while working-class Americans struggle to make ends meet. Welcome to the Big Money Show. I'm Taylor Riggs, alongside my co-hosts, Dagan McDowell, Brian Brenberg, Jackie DeAngelis.
So many hope
and with
going
us
on.
for 1, 2, maybe hours, entrepreneur and host of The Fixer, be careful what you wish for, on Fox Business, Marcus Lemonis.
Thank you.
So it's a different vibe depending on where you sit. Wall Street says we're cruising towards 2.4% GDP growth next year, and the S&P 500 right now nearing a record. But private payrolls just shed more than 30,000 jobs, and November layoffs hit their highest level since 2022. Just this week, Macy's CEO saying Bloomingdale's, that higher end, booming, but regular shoppers are cutting back. So the question is the Great Divide sustainable? Marcus, care to jump in?
I think a lot more people were thinking, higher pump into Monday and Tuesday, and then
I'm not sure
sell
I
off
agree
into
that we have a
Tuesday and
K-shaped
Wednesday.
economy. K-shaped economy usually happens when
Let's see if it's that
hospitality,
easy.
retail, travel, and small business are all under pressure. I'm not hearing any of that. We knew going into the holidays that retailers were going to hire less people, significantly less people. And so when we look at the jobs report, part of that dislocation in the number could be the lack of hiring. We do know that affordability is an issue, and it's an affordability issue for everybody. But what has really happened for me around spending is, have tariffs caused people to see higher prices and force them to either downsize or hold? I don't believe it's just one part of the economy that's doing that.
Okay, so Jackie, he mentioned tariffs, and I wanted to sort of pick up on this because I know we talked about the University of Michigan sentiment, and take it for what it's worth. It's sentiment, it's political, watch what I do, not what I say, but I've cited it when it's bad, and so I want to cite it when the numbers are good, to be fair. It did rise for the first time in 5 months. And interestingly enough, the increase in sentiment was led by younger consumers. A 13% rise in personal financial expectations was even broader than that. The measure of outlook for finances climbed now to the highest level since February, pre-tariffs. Okay. Your thoughts?
Well, my thoughts on that is that people are feeling good, and maybe they're thinking about the calendar turning over, the big beautiful bills, some of the tax benefits that they might see as a result of it. We're nearing that. You know, when you're talking about that on July 4th, when the bill is signed, it's hard to sort of see it and feel it because it feels like it's far away, and now it's really not that far away. But that certainly is a sentiment shift. I'm not going to really get on the K-shaped economy issue. What is interesting to me is this Investopedia stat that 26% of Americans are living beyond their means. You know, we talk about government spending. We talk about government overspending, not being able to rein it in once it's gone too far, and how that starts to build upon itself a little bit like a snowball until it's, you know, finally gotten somewhat out of control. The Trump administration has wanted to dial that back, but
I thought Chris said hope. I thought Chris said this is hope, but he said hope so to someone saying this is the calm before the storm. It's still hope. Fuck, we're all hoping. This shit is all hope.
As well. You know, we never want to use that word austerity. We've heard that in Europe when things were going haywire in Greece. Nobody wants to talk about austerity or cutting back, but whether it's Biden inflation at 9% or a slight increase that you're seeing from tariffs, we know that prices are higher. We've had to live with that for some time. So I'm surprised that people aren't adjusting. I'm surprised that people are using so much plastic when they know that credit card interest rates are something like 23% for the average consumer. I don't understand where the system has failed people in understanding that you're not entitled to having things, and that when times are tough, whether it's because the conditions, economic conditions around you, or maybe in your personal household as a result of something that has happened, why you can't pull back.
Brian, I want you
to we can't pull back.
Go in on that. And Marcus,
as a result of some failed people in understanding that you're not entitled to having things, and that when times are tough, whether it's because the conditions, economic conditions around you, or maybe in your personal
Everybody say it with
as a result of something that has happened,
can't pull back.
Why you can't pull back.
Why we can't pull back.
Brian, I want you to go in on that. And Marcus,
why we can't pull back.
You don't believe in
it's a bullshit unusual cycle. Why we can't pull back?
If you don't like a K-shaped economy, what would your letter be?
God damn, we can pull back. Give my money. Give my motherfucking money. God damn right we can pull back.
The K is up.
Fuck, come on.
And we'll wait for another letter from Marcus. They're also saying they actually think it'll come closer together before it totally collapses. There is a little bit of hope on the horizon. Let me give you some hope. Victoria's Secret was just one that I looked at this morning, right?
My Lord.
We saw our highest Black Friday customer turnout in 4 years.
Let's see, if 345,
roughly 1 million customers are shopping on our brands, up high single digits from last year. They experienced growth across all income cohorts and able to grow sales despite offering fewer discounts
and waiting and what?
and
Power
raising
needs to
items
come.
on select
Power on
items.
what?
Now,
Tesla?
we could argue Victoria's Secret's a one-off. That's not a broader gauge.
IWM, but they're not coming at the same time.
At all. I never pay attention to Victoria's Secrets. I come to you on that. Thank you.
Don't fucking know if it's going to bounce here in the next minute or two. Really, I really just want one.
Thinking about going solar.
One candle. Come on. 2.6K. Here we go. Time is 2:45. They're going into 2:50. Looks like time is 2:50 here in 54 seconds. Insane. Time is 2:50 here in 36 seconds. Come on. One more minute. No, one more minute. Come on. If this shit flips, I'm leaving. I don't give a fuck. If this shit flips up, I'm leaving. I don't give a shit. But this needs to. One more minute. Time is 2:50 now. Come on, give me a spike down into 2:50. 2:50 is here. Fuck. Oh my lord.
Okay-ish.
Yeah, I don't get this K thing so much, especially on retail, because you've mentioned these companies before. You said TJ Maxx was killing it, and Walmart doing great, and these so-called low-end retailers doing really well. So, you know, is that a higher-end consumer there? I don't know, but whoever shops there seems to be shopping a lot, right?
Here,
and you mentioned the high-end too, Bloomingdale's or whatever. So it seems like all parts of the K, it's more like a lowercase r.
Here
you know,
in 2
it just
minutes.
kind of goes up and to the right. That's what you want a letter W.
Amazing. Okay, we have one.
You got a W. I say an R. So I don't get the K thing. Is the K thing like the new invention of the negative?
It's 240 rejection to
250,
245. 245 is trying to.
I think that's what it is. Also, data for you. Now this is from September, but I think this is the latest.
Look at the volume.
Household debt service payments as a percentage of disposable personal income have steadied at around 11%.
Okay.
That's the lowest we've seen. That's lower than it was just pre-pandemic.
Debt to income.
Okay, disposable income, debt disposable income, and same report showing delinquency rates also on debt.
My puts are being spiked, and the candles aren't going here.
Stood at 2.98% down from 3.2% last June. So yes, interest rates are high, debt is a problem, but I'm just saying that maybe people are spending right now because it's not quite as bad for them as everyone's telling us, or they feel pretty good about 2026, which according to Bank of America, they're looking at what, 2.4%?
But you shouldn't spend it before you have it. And when you bring up Victoria's Secret, I mean, that is niche. But if you don't have money, you shouldn't be buying lingerie, right? I mean,
well, you need underwear.
Underwear. You should definitely wear underwear.
Yeah.
I'm in favor of that. I don't pay attention to Victoria's Secret, but you should wear underwear.
Saucy vixen, Jackie D'Angelo.
I was not suggesting that people should go commando.
Okay.
I just am saying.
Doesn't need to have lace. That's your point.
Yes.
Dagan, take us home.
The K-shaped economy, it seems like a political invention.
That's right.
A political phrase to push people towards socialist ideals that the rich are getting richer and you need to get yours, and we in politics and in the government.
Guys, what are they talking about? A K-shaped economy.
Not any different than what's been going on
like the
for
fucking new
literally
thing?
decades in this country, and I don't find anything wrong with it from this standpoint. That I don't believe in looking to the government for solutions, because when the government shows up, it's going to be in the form of more spending, and that's a bigger problem because we are, people call it, you want to use a phrase, the era of fiscal dominance, where the government and our debt has gotten so big that it's siphoning resources away from the private economy, which slows growth and prosperity for everyone. But in terms of a true free market, the poor are not getting poorer in this sense, that we have a much higher standard of living in this country than other nations. So even in times when incomes adjusting for inflation are flat, the standard of living in this nation is still much higher than in other countries. I will choose this nation any day than the permanently lower plateau elsewhere, say over in Europe.
They've been saying this shit for 4 years in a row.
And I will choose the middle incomes here and the middle income prosperity and way of life and opportunities in the U.S. with a Jeff Bezos and a Mark Zuckerberg, who have a lot in this country, than living somewhere else where they try to confiscate the wealth and opportunity of billionaires and would-be billionaires. You know, there's a term for all of this inequality. They like to measure it. It's the Gini coefficient.
Yeah, right.
So 0 is perfect equality.
But you could all be poor as heck.
Right. And then 1 is perfect inequality. And we are judged as a nation as being one of inequality. So it's just basically when they start talking about the wealth differential or inequality, it means they want everybody to be kind of broke ass together. And I don't want that
Quickest
together.
way to equality.
Marcus, explain the big W.
Well, before I do that, there's three things. Numbers don't lie, and the numbers are telling us that it's not as bad. I think the second thing is we do have an affordability issue, and that's largely around housing and food. And three, the Democrats and the liberal media have run a flawless game plan of convincing everybody that they should be running for the hills. And I think the numbers need to be put more front and center.
It's not even
less
going
rhetoric,
fucking
more
higher.
Facts.
And there's just so many bears here.
And young people, especially, I think they want to run for the hills.
Damn, time is already 2:50.
It's terrible for you young people. You can't do anything.
But they're the ones that are more optimistic, which is surprising.
Yeah, that surprises me.
The W really represents what the country looks like. And if you look at where commerce happens across the United States, it happens inside the W. And in the gaps in the W is where things are the toughest. That's always the case. Any retailer focuses on following the W through California, the West Coast, up through Texas, in the Midwest core, and then up the East Coast. In the gaps of those two are where things tend to get a little spicy because commerce doesn't go there.
We're going to talk about the K. Luxury all year. We talk about all of these retailers. Luxury sales, luxury retailing is in the commode. It is done horribly. You have retailers struggling, going bankrupt. Essence in Canada, bankrupt. They tried to blame tariffs, horse manure, but the big logo is dying, and they're struggling to figure out what to do. So there is a shift going on. People might be shopping at the Walmarts and the TJ Maxxes, but they're not shopping at some of these retailers.
Well, and those retailers during COVID, some of the prices of luxury goods literally doubled in the last 4 years. Some of that stuff that's being imported specifically from like Italy and from France, where you pick up a handbag now and your eyes pop out of your head.
I looked, sorry to digress, I looked at a watch that my parents bought me for my high school graduation. We were talking about off air yesterday. That watch was
tiring.
Adjusting for inflation, so it was bought in the mid-'80s. It was $1,000. Adjusting for inflation, today it would be it was a little more than $1,000. It would be $4,000. Okay. If I went to buy that watch, though, brand new, the retail price of it is $11,000.
That's my point.
So that's how much luxury goods inflation has been, and it's not in the materials in that watch, and I can't wait for it to come back.
Wayfair's 3 ways to holiday your yard. First, start with twinkling lights. Next, bring in the fun with inflatables. And bring the party to your porch.
I feel like this whole downward trend about to knife up crazy,
really
but
strong right now.
Holy shit, man.
Very
Really?
Off price.
Off price.
Off price.
That's the bargain.
Look at this
bargain.
We are literally doing
like
the chop
the
that we did
are doing
yesterday.
phenomenal right
But
now.
that's used clothes.
They have some new stuff.
This is used.
Vintage.
Holy
crap. It's used. This is used.
Garage sale.
Yes, my jeans.
Doing a fit check live on air.
My jeans are used. No, it's used. It's used Louis Vuitton, and this thing was a few $100s. And if you went to buy it new, it would be several thousand. It's a few hundred. My jeans are used.
I would just say quickly my final thoughts on the private sector. I love to throw out that
she's trying to
stat
come
out
off
there.
mad.
There's been sort of rumors going around that 80% of the employees at NVIDIA are now millionaires because they had stock when they joined the company.
Excuse me?
No. Very
Off,
really?
Off price.
Off price.
Off price.
The only
That's
other
the bargain. The bargain.
This is like the real are doing phenomenal.
80% of
that's used clothes.
They have some new stuff.
This is used.
Vintage.
No, it's used. This is used.
Garage sale.
Yes, my jeans.
Doing a fit check live on air.
My jeans are used. No, it's used. It's used Louis Vuitton, and this thing was a few $100s. And if you went to buy it new, it would be several thousand. It's a
Contracts
few
are
hundred.
getting fucking
My jeans
drained.
are used.
If this shit flies.
I would just say quickly my
This shit
final
gonna
thoughts on the
get
private
drained.
sector. I love to
I
throw
ain't
out
trying
that
to
stat
fucking
out
be
there.
in this
There's
shit.
been sort of rumors going around that 80% of the employees at NVIDIA are now millionaires because they had stock when they joined the company. That's what I love. That's the private sector innovating. That is the path to wealth. When the government gets out of the way, stop telling people that we're too poor, that we can't innovate. And that is the best way. That company has minted millionaires, allegedly, purely by being the best of the best. Let's do Netflix. Netflix acquiring Warner Brothers in a massive $72 billion deal after a very intense bidding war. So you see Netflix this typically happens, actually, the acquirer falls while the
This has to be a brain in the stream.
company
This Fox Business shit. This is it.
Look who's here now. Kevin O'Leary joins us. Trump is the #1 sports fan. Look who's here now.
Oof.
Kevin O'Leary joins us. Trump is the #1 sports fan in America. He loves being at these big events. Does it work for him? Does it help him politically?
I think sports events are fantastic because they're so bipartisan. It's
Shit is
very hard
bullish.
to say from music or sports or the arts why a leader shouldn't be there because it's a coming together event.
Our
for some
hour
parts
is
of the
coming
country.
in
By the way, a lot
dog
of
shit,
people
dumb
in North
bullish to
America don't
burn all the
understand how big
bears.
soccer is globally. It's massive.
This is
yeah,
so
huge. And it's slowly coming into the psyche of the North American sports fans.
Oh
Slowly.
my God,
It's taken
it has to
decades,
be
but
greed.
it is monstrous.
It is. There'll be a huge audience today for the draw. I mean, there's
I
48 teams
bet
going to be.
through social it ends up at 1 billion people.
It could well be. And there's Trump right in the middle of it.
It has to be
Holding
greed.
center stage. It's amazing. And at the meeting today, the draw, for the first time since they had a trade dispute, Mark Carney from Canada and Donald Trump from the United States, they're going to be getting together. They'll meet. Do you think they'll have a sideline discussion to fix their trade problem?
Yeah, we need to fix that problem around commodities like uranium, aluminum, steel, bauxite, potash. Those things have to be worked out. And I think a reciprocal tariff would work. I knew they had a deal at around 10% before that commercial came out of Ontario, which, for lack of a better word, pissed
bullish
off
as
Trump.
fuck.
And so now they got to get back on track and figure that out.
Tell me they'll take a
We've got a new
$500
poll.
loss here.
Lots of polls these days. Here's a new one.
6,880.
46% of respondents say that the
God
cost
damn,
of
they're
living
about to
is,
flip
quote,
6,880,
the
like,
worst
what
they
the
can
fuck?
ever remember it. And 38% of those people were Trump voters. Does Trump have a messaging problem or a policy problem?
Come on, let's see
I think
fucking
it's a
some
combination
power
of
hour
both because
shit.
his opponents, the Democrats, are using this affordability to elect people like Mondami here in New York. That's basically what his social media message was. The tariff issues around certain input costs are still, and we're going to see a number later, I think it's going to come in slightly hot on inflation. A lot of it has to do with trying to nail down finally what the tariff should be on things that America doesn't have, like bananas and pineapples and stuff that I think shouldn't be tariffed at all. So there's a little fine-tuning on tariffing, and I think that'll get done before the midterms. It has to be, because you don't want this affordability issue eroding into the base.
Trump is doing a lot to explain his position on affordability, but it doesn't seem to be getting through the media. The media is blocking him, blocking his message, I think.
It's that, but also prices on commodities are still a little hot. And you got the Fed in a really difficult situation for December, where it's still north of 3% on inflation. Their mandates too. Either change the mandate, or they're not going to be cutting rates. I'm not in the camp that says they make a cut in December.
Okay, all right. The market would react badly to that.
Show your daughter how much you love her with this beautiful gift.
President Trump plans to return to gasoline as the fuel of choice for cars. He has unveiled an historic reset of Biden-era fuel rules. Former Energy Secretary Rick Perry joins me now. Sir, are you pleased to see the EV industry in retreat? I'll bet you are.
Well, I'm pleased to see the market work is what I like. It's let the American people decide what they want to buy, and keep government's thumb off of the scale.
And that's been done. I mean, the EV is in retreat. They're not going to go away, but we're now going to be able to buy the car of our choice. That's basically it, isn't it?
And that is a good thing. Allow the American people to buy what they want. I've got great friends that believe in the EV. They want an electric car. They got a Tesla, and God bless them. That's great and good. Me, I'm going to drive a big old bad boy Chevrolet Yukon with a 6.2 liter V8 gas engine.
Well, you need that in Texas, don't you? You just need it. That's the way it is.
Well, listen, it's my choice, and that's the point here, Stuart.
Yep. My body, my choice.
Government has decided. You think back through the Obama years, and they decided they were going to move the fuel numbers up to this many miles per gallon. And then when Biden gets in, he said, "Oh, you think that's good? Watch what I can do. I'm going to move it up to 64 miles per hour." I mean, it's just they tried to one up each other to placate their environmental friends, I think, and they've seen it really backfire now. And the American people have said, you know what? You allow us to make the right decisions, and we will. Don't overtax us. Don't overregulate us. Don't overlitigate us.
What the fuck is
and
this?
We will show you how to drive an economy forward. That's the key to all of this. And you've had both the Obama and the Biden administration that tried to overregulate, overtax, and quite frankly, overlitigate. And we pay a price for that. President Trump understands if you won't overtax, if you won't overlitigate, if you won't overregulate, the economy will boom. That's exactly what he's doing from my perspective. And, leave us alone, government. Try to have as small an impact on our lives as you can, which may be a bit of a pipe dream, but less of an impact than the previous administration and certainly the Obama administration. And you will see the American consumer spend their money because they trust they're going to get a real return on their investment. They'll spend the money, they'll invest, whether it's in the AI side of things, whether it's in the energy side of things, and the American economy will lead the world.
There is a data center boom in Texas, and that's ramping up the demand for electricity. Apparently, there is some pressure on the power grid as we head into the winter months. Mr. Secretary, is there a chance of blackouts in Texas this winter?
Well, there's always a chance
I'm in 6880 DT right now.
I will say that we took our eye off the ball for a little while back in the early 2000s. We had that Winter Storm Uri that kind of got everybody's attention. And Governor Abbott and the legislature, they saw that they needed to be giving incentives to gas-driven, in this case, peaker plants, of which they did, I think, in the 2023
anywhere below
session.
Like 230, 245, I'm fucking
I think $5 billion incentive program to go build these peaker plants.
Damn, Barry's still trying.
That,
come on.
from my perspective,
come on,
is a good use of state monies to incentivize some of the really important things in life. When you flip that switch on, you need to have the lights come on, the power that you're going to need to, keep your home either warm or cool, and to drive the economy. And particularly, we're seeing in this AI data-driven environment that we're in, the need for power is powerful. So, you got companies like I'm involved with Fermi America up in the Panhandle, which is basically a power company that's going to be delivering behind the meter power to these data centers. Data centers are, let's face it, electric hogs. They're pulling a lot of power off of the grid. We have to make good decisions about how to make sure that America, and in our case, Texas, has the power on our grid to be able to have the economics and to keep people safe.
I just want to get this in before we close. The Supreme Court has allowed Texas to use its newly redrawn congressional map. It's a win for Republicans. We asked House Speaker Johnson, he was on the show earlier, we asked him about this. Roll tape.
Well, I would say it's a win for common sense and the rule of law. What the court finally affirmed is what we've known.
This is not even this is politics. Like the Have a good day, everybody. Have a good weekend. Okay. Bam. Heart attack. Everybody go enjoy something good for the weekend. Whether that's good food with your family, whether that's going to go take a break somewhere. Okay, artificial bounce stop at 305. Great. Artificial bounce stop at 305. Great. Artificial pop. Great. That's what the market loves. Yeah, today and tomorrow is supposed to be volatile how market closes, because what John says is right. Fed traders are present at the Chicago Board of Mercantile CME board, largest futures exchange, and they're about to be volatile as fuck into market close because FOMC is coming on Tuesday. I agree with you, John. I agree with you on that one, John. It's power hour. FOMC is Tuesday. Oh, Fed traders. What are Fed traders? Look at what John's saying, man. The proximity allows the Federal Reserve officials and their staff to monitor real-time trading activity and the market sentiment and liquidity in these key contracts, which directly influence the implementations of such. I'm literally break even and I'm looking for one candle red and I'm fucking scared they're about to trap me. I just need one candle red here, dead ass. I'm flickering between 2,000 and 1,990. It's insane. One light red. Tiny light red. Time is 3:10. Break even. Come on. Go one more layer lower. Why can't you? 'Cause I'm here. What the shit? Is that 3 p.m. spike and then 3:10? I'm up $40. I'm about to just fucking take it right here. I don't give a fuck. Please. One more. Time is 3:10. One more. Alright. I chickened out. I took $100. I chickened out. I chickened out. I chickened out. I left at $100 profit. I'm scared. Insane. I can't hold that shit. I'm fucking scared as fuck. I chickened out at 2.2K. That is fucking terrible. That is terrible. Look at that fucking shit. One candle going. That is literally a whole fucking drop. Oh my god. It's basically back at where it was at the bottom. 2 point fucking something. 5 by, yeah. Whatever. It's fucking crazy. The closer it gets to 359, the more bullshit and the more 99 to 0% going. So 99 to 0% probability there. Ay, ay, ay. I don't know what the fuck Tesla's doing, dude. This is worrying. Monday, we were at 420. We're at 454 right now. Man, where are you, Dr. Burry? He said, fuck Tesla, I lied. Alright, this is fake news and using my name. Dr. Burry, look at that bullshit. Look at that bullshit. I'm great. I'm happy. Oh my god. That is so evil. What is this rejection? And what is this pump? What is this rejection? What is this bounce? Like, that is so evil. It's going nowhere. Evil. I'm glad it came down, though. I'm fucking so glad, because it was literally showing 1.6, and I was like, fuck that. Fuck that. Dog shit cycle. Dog shit trade. Burning every single bull since 105. Burning every single bear almost to here. That is hoping on way too much. Absolutely. Greedy, greedy eaters. This shit is greedy, greedy eating. I'm actually happy with this ending. I don't give a fuck. They're not going higher, they're not going lower. But, I mean, they could have burnt the crap out of this at 3. They could have dropped it, but... They could have dropped it at 230. They could have dropped it at 245. They could have dropped it at... They're not dropping it now. They could have dropped it at 305. There. I mean, what is this? It's the slowest lotto cycle cycling, making confusion on all sides. And then whale's about to come. That's power hour stuff. Really need Tesla to drop at the end. Ew. For real. What the fuck is $15 down from $4.55? Like, I need 440 somewhere, 436. Fuck. $20 down, man. That has to be one bloody day for Tesla. That's $20 fucking dollars. Shit. It's like 3%, 4%, I think. Is my chart frozen? Forming a W or something. Nasty working. It's nasty working. This 9:30 a.m. candle never breaking. 9:30 a.m. low. 9:30 a.m. high. They're chopping in the middle of it. IWM2. SPY. IWM. Went to the bottom of it. I'm so glad it went to the bottom of it, but like, yeah, that's actually nasty as shit. Bulls burn, bears burn, bulls burn, bears burn. It's been happening since 1240, technically speaking. Bigger cycle. Why? It burnt the crap out of all the bulls up there. It burned them all. Right? Burnt into low, and then burnt the bears. Burn the bears. Burn the bulls. Burn the bulls. Burn everyone here. So the majority dead. Majority dead. They're closing at the middle. What's the middle? Let's do the math. the math of the middle of today from 6,800 or 6,890 to 6,858 is 6,875-ish. And we are right where the market wants to be, at the middle. Making everyone think on up there, making everyone think on down there, and we are continuously at the fucking middle. Through all the pumps, through all the rejections, and through every single one of them. Why? Because the 9:30 a.m. level is literally sitting at the 0.5 Fibonacci somewhere. A little bit below, but at least it's not dropping. This is the pivot point 2, LOD, pivot point 1, HOD. When direction north till here, when direction south till here. We are in between the two pivot points right now. Pivot point 1, pivot point 2. This is sick. Long term. Pivot point 1, pivot point 2, and we are in between the two pivot points right now. Direction north till 10:40. Wind direction is south from 10:40 to 11:40 to 12:40, so 2 hours. And the wind direction has been north or neutral since 12:40 because we never broke that low. So pivot point 1, pivot point 2, in between the two pivot points, this is option 2. The market always shows what? Option 1. This is 33.3% probability. Versus 33.3% probability of it breaking the roof, right? Roof versus midpoint versus the floor. The reason why people get got is because they are what? Bull versus bear. What does that mean? Bull versus bear means that they are 50-50. That means they're being biased at every single point of the market. Here, they're being a bull versus bear 50-50. 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 These type of people are speculators. These are not true deductors. These are not smart money deductors. This is retail trading at best. Anyone, YouTubers, whatever. What this is, roof versus midpoint versus floor, is literally, this is the what? Roof hope. Right? This is the what? Midpoint. Okay? This is the what? Midpoint. This is roof hoping maybe. Or roof is all the way up there. So technically we would count anything down here as midpoint, I guess. Up here, roof hoping. So 33.3% chance. Because when we're up here, what does it look like? It looks full on bullish, right? When we're down here, what it looks full on bearish. You just gotta do some sort of calculation and draw cycles and then be like, okay, this is this. Oh, we're not gap filling. Oh, this is set up. Oh, blah blah blah. Oh, blah blah blah. Oh, hope. But I mean, this is the major factor. The 50-50. People don't care about cycles. And just how can anyone know this is gonna do this? How does anybody know this? You know what I mean? I don't know if this is gonna do this at 1 p.m. 12:40. That's gonna stay in this box forever, right? But once you do see it, once it happens, and you continuously see it staying inside, go to the oh no, okay, balance. You literally just start deducting because it's what's going on. You have a knowledge of what's going on, and that is literally. Look at this fucking shit at Tesla. Why is it not breaking out of 455, or why is it not breaking down? Because of this box. This is nasty work. The entire day is locked in a 930 box. After it already did an insane move at morning, which was pumped to all-time highs and then dumped from all-time highs and then regained maybe 50%, and then I don't know what the fuck it's doing. I'm not gonna lie, that's the reality of the market right now. That's what I see. We pumped off IWM being so goddamn bullish, and then SPY QQQ laggard, so we test all-time highs, quote unquote, smart money, that's what they say, and then dump off all-time highs, and then what? We went to the 0.50, 0.618 Fibonacci, and we're below the 0.5. That's showing a little bit of bearishness, but then also we got these people bull trapped, and this bounce was insane. But I mean, why is it insane? It's insane because it's insanely selling, but it has to what? The market has to cycle, right? That is 0.618 absolute. That is something that is, you cannot even make this shit up. We weren't even looking at it like this, but look at this 0.618 Fibonacci and what, 1240 level. Shit like this is what gets my blood boiling, and shit like this is what gets me excited, and shit like this is what makes me think that I'm trying to learn and I'm trying to get better at no matter what age and what stage I am in my life. And I don't give a fuck if people call me young or a kid or whatever it is. I really don't care, because whatever age you are, whether you're 18, 20, 28, 30, 38, 40, 48, 50, 68, 70, 78, 88, I don't care if it's for yourself. I don't care if it's for your family. I don't care if it's for your son, your daughter. I hope to God they know some sort of way they can deduct for themselves so that they can fucking get better in life for themselves, man. Because that's literally the truth. If people don't like that, I don't give a fuck, because that's the truth. But I mean, that's literally what I hope for myself and people around me and my friends and people that watch the stream on a daily basis. That's what it is, because this is no joke. You think the market is literally just based off of candles? I thought that too when I was young. 2 years ago, 1 year ago. That was such, 2024, 2023, how much I could have done so much better a year ago or 2 years ago if I knew all this now. That's the most craziest thing, because now that I am, this age, and now that I am at this stage, and now that the market is at this stage, and now that I know all this that I know, it's absolutely blood boiling, and it's also incredibly energizing to know that shit like this exists on a daily basis. Yeah, it is consolidation. That's what it is. Consolidation, but like it's like predestined on this 9:30 a.m. level. This little bump, dump, and then this shit right here. What does this pump up to? 0.5 Fibonacci and then dump exactly at when? 12, right? When I was like, IWM bearish and SPY and QQQ is faking. Look at SPY and QQQ, crazy bullish into 1158. That is something. 12 IWM. Fuck was 12 right here. IWM was bearish before at 1155. There's no way anyone would have fucking caught this unless they were looking at the purple box and they were like, oh, they're gonna reject this and go lower and maybe they're gonna come back, but for now it's gonna be bearish. That's what smart money deductors are doing. That's what these people are doing. SPX is literally doing it because there's literally live active participants that are fucking, deducting together and pushing it together and doing shit together, smart money wise together. There's not dumb money shit. It's all on God. That's what I believe on a daily basis. I swear. I love that shit, man, because I swear this is what I live for now. I swear. It's amazing. Gotta be a part of the fucking system to understand. Right, if you hate the system and that's what it was like. If the system gets people so goddamn much that you start hating the system, and then you start not wanting to participate, you start not wanting to learn, and you start not wanting to care about the system. But once you get rewarded by the system, and once you realize this is something you can literally do because you believe in yourself and shit like that, it just becomes so different. It becomes really different. We are chopping insane in this pre-market range, whatever this is. Tesla is holding bullish. That's what it is in my eyes. It's holding bullish with the market. I don't know what the fuck FOMC about to bring, but if this shit pumps, the market pumps it into FOMC, and Tesla going to fucking 460, 470, most likely 475 too. It's like 50-50 at this point. I don't even know if this is about to reject too. If this thing rejects though, it's gonna go to 440, maybe 445, maybe 437, but I have no idea at this point. Tesla's literally a 50-50, and I'm fucking in huge on Tesla until next week, and I got grinded down, so I'm about to find out. I don't fucking know. It's just fucking holding up crazy. This is exactly how it looked on me when I was in Palantir, Nvidia, and fucking Tesla like a month ago, so I have no fucking clue. It looks absolutely terrible. It looks absolutely fucking shit, and it is shit until the moment I'm released. It's literally how it is. The market is fucking crazy. Someone was like, "Oh, when market is unidirectional, it's so goddamn." It's absolutely, because it's one side has to win. At the end of the day, that's the sad part. The bull or bear has to win. So, you know, it is okay for us to be, oh, bull versus bear. Oh, now it's bullish, now it's bearish. But we have to understand that's part of the game. And we have to be like that, but also be like, they're showing this right now, but it could be, oh, this could be set up. You know what I mean? That is being aware, but then also being biased, but then also trying to not be biased in a way that it's like too crazy, but then also catch yourself, because there's like things that you can catch yourself on most of the times. I'm saying this shit while I'm not catching myself on Tesla, but I mean, it's what it is, bro. It is fucking what it is. I don't, man, the market crazy, all right? That's what we will say. I think everyone here agrees today the market was insane. And anything that happened today, they can be goddamn blessed. Whatever happened, whether they did going higher or whether they did going lower, or they did bad going higher or they did bad going lower, you know, there's something to be learned. Whether it's hate or love towards the market, they definitely feeling it, because market every single day is on something, in some sort of way, on something. All right, now let's see if we get a lotto push lower on Tesla from 320 from the top of the gray box. IWM is maybe trying to lose it now. Nvidia is, I can't even call Nvidia, right? SPX doing jack shit. IWM maybe. SPX QQQ. Not even looking at QQQ. QQQ is consolidating like nothing. 9:30 a.m. box is also consolidating like nothing on QQQ today. Tesla looking the exact same. Up, down, up, down, up, down, up, up, Tesla. Up, down, up, down, up, up. Looking exactly the same. Not gonna lie. Using Tesla to pump the market too. Fucking looks like. Damn. Tesla looking so up. Alright, guys. Time is 3:30. I gotta go. I love you all. Bye bye. I gotta go eat. Go to work. So, wait. Have a good weekend.